That's above an estimate of £1.4 billion. Net income in the fourth quarter was at £1.25 billion, also beating estimates. Net interest income slightly above estimates at £2.97 billion as well. And also news that the UK Treasury has reduced its stake in NatWest to 7.98%. That's down from 8.9%. And staying with earnings, sales at Hermes climbed as the luxury group benefited from a strong appetite over the holiday shopping season. Sales jumped almost 18% in the fourth quarter at constant exchange rates, according to the latest results out from the firm this morning. That's above what analysts had been expecting, which was growth of 11%. Hermes shares have climbed more than 20% since the start of this year. HSBC is planning a new round of job cuts next week. Bloomberg understands the changes to its investment bank workforce will affect employees globally, starting in Asia. That's as CEO Georges Elhedry continues his overhaul of Europe's biggest lender. Layoffs could begin as early as Monday and will be based on performance, job duplication and simplification, with some already underway in the firm's markets division. JP Morgan CEO says the bank will scale back spending on what he called stupid diversity initiatives that he sees as wasteful. Responding to an employee question, Jamie Dimon said plans to cancel some schemes was about costs rather than backlash from the Trump administration. JP Morgan's longtime leader also reiterated the bank's commitment to working with Black, Hispanic and LGBTQ communities, but told staff that he was never a firm believer in bias training. And the UK's Prime Minister Keir Starmer met China's top diplomat as the two countries look to improve ties. The British leader joined a meeting between Foreign Minister Wang Yi and National Security Advisor Jonathan Powell. Bloomberg's James Woolcock reports.
Keir Starmer expressed his intention to build a consistent and respectful relationship between the UK and China. And according to China's Global Times, Foreign Minister Wang Yi said the UK government had started the process of improving relations and looked forward to deepening cooperation on AI and climate change. Both China's top diplomat and the US ambassador to Britain were in Downing Street yesterday. It showcases the balancing act Britain is trying to pull off, trying to build ties to the world's second largest economy while avoiding the ire of the US President Donald Trump. In London, James Woolcock, Bloomberg Radio.
Those are your top stories. Eurostoxx on the markets, Eurostoxx 50 futures are down 0.2%. So we're seeing a narrowing of the negative sentiment on European stock markets. The Eurostoxx 50 index actually hit a record high in trading yesterday. We've had some optimism boosted around the prospect of those reciprocal tariffs not coming until April, leaving some space for negotiation. The MSCI Irish Pacific Index 0.6 higher as well. On the currency markets, the Bloomberg Dollar Spot Index now in the red, 0.1% as well. That's after the drop that we saw yesterday. So the euro's trading at 104.67 against the dollar, the pound at 125.67. That's news when you want it with Bloomberg News Now. I'm Stephen Carroll and this is Bloomberg.
Donald Trump has already changed the way we think about the US economy. Now he's back in the White House and Bloomberg's Trumponomics podcast is here to help. I'm Stephanie Flanders, Head of Government and Economics at Bloomberg. Whatever the big question of the week is, we'll have something.
Hello everyone, good morning to all of you. आज है 14th of February 2025. Welcome once again to this live analysis. देख लेते हैं फिलहाल मार्केट को एक बार नेचुरल गैस कल एक रेजिस्टेंस से सेलिंग थोड़ी बहुत आई थी, नीचे एक सपोर्ट भी था बट वो वॉलेटिलिटी में चला गया. क्लोजिंग होते होते मार्केट अर्ली मॉर्निंग उसी लेवल पे ओपन हुआ था बट उसके नीचे कैंडल क्लोज हो चुकी है, तो अब उसको कंसिडर करना मेरे अकॉर्डिंग सही नहीं रहेगा. कोई नया लेवल बनेगा तो वी विल सी दैट. ये कल वाला सपोर्ट यार एक एरिया था, याद होगा आप लोगों को. काफ़ी देर रुकने की कोशिश करी, फिर मार्केट क्लोजिंग के वक्त ब्रेकडाउन ही हो गया था. अर्ली मॉर्निंग वापस रिकवरी किया है बट अभी अवॉइड करेंगे. ऊपर और नीचे हमारे पास एक रेजिस्टेंस पुराने वाली ही है. ये रेजिस्टेंस है, नीचे एक रीटेस्ट का सपोर्ट है और फिर एक और सपोर्ट मिल जाएगा डाउन साइड पे. एफईजी है थोड़ा बहुत रुक रहा है. लेट्स सी क्या मोमेंटम करता है इस पर्टिकुलर जोन पे. बाकी डेटा की बात करें 7 PM पे रिटेल सेल्स और कोर रिटेल सेल्स का डेटा है. गोल्ड और सिल्वर को इम्पैक्ट करेगा, ध्यान रखना. गोल्ड और सिल्वर के लिए इंपॉर्टेंट है. बाकी मुंबई सेशन ओपन है, लंदन सेशन ओपन हो जाएगा अभी 6 मिनट में, तो थोड़ा ध्यान रखना. 130 की कैंडल अगेन थोड़ी वॉलेटाइल हो जाती है. 6:30 न्यूयॉर्क सेशन ओपन एंड यूएस मार्केट शाम को 8 PM पे ओपन. जहाँ तक क्रूड ऑयल की बात करें, कल का रेजिस्टेंस है, यहाँ से एक सेलिंग प्लान रखेंगे इस पर्टिकुलर जोन से। उसके बाद फिर एक नेक्स्ट रेजिस्टेंस आपको ऊपर मिलेगा 6347। नीचे भी मल्टीपल सपोर्ट बन गए, एक तो कल वाला ही सपोर्ट था यहाँ पर, ये 6100, फिर नीचे पॉइंट ऑफ इंटरेस्ट काफ़ी ज़्यादा है अब, 6145 भी थोड़ा सपोर्ट की तरह काम करेगा। कैंडल का ध्यान रखना, ओपन इक्वल टू लो पे सेल और ओपन इक्वल टू हाई पे बाय और मत करना, ठीक है। कि बैंक निफ्टी को देखोगे अच्छा फॉल किया, कल रेजिस्टेंस पे था, कल रेजिस्टेंस से सेलिंग आई थी, आज भी एग्जैक्टली रेजिस्टेंस पर ही हिट करना, ओपन किया, ओपन करके रेजिस्टेंस को हिट करके नीचे गया, अभी सपोर्ट पर है बैंक निफ्टी। वैसे देखें तो दो बार सपोर्ट ले चुका है, थर्ड टाइम आया है 15 मिनट टाइम फ्रेम पे। मुझे ऐसा लग रहा है कि शायद ये ब्रेक कर सकता है, मैं फ्यूचर की बात कर रहा हूँ। अभी भी होल्ड किया है, ब्रेक किया नहीं है, बट अगर ये ब्रेक हुआ तो फिर फॉल बड़ा कर जाएगा। अभी भी प्राइस ओवरऑल देखा जाए, बैंक निफ्टी इंडेक्स सपोर्ट पर ही रुका हुआ है इन 15 मिनट टाइम फ्रेम, 15 मिनट टाइम फ्रेम पे अगर देखोगे तो। बाकी यस, अगर कैंडल क्लोज हो गई डाउन साइड पे बैंक निफ्टी की बिलो, फ्यूचर के चार्ट की अगर मैं बात करूं, बिलो के 48,790 के नीचे कहीं अगर कैंडल क्लोज होती है तो फिर ये और ज़्यादा बेरिश हो जाएगा, इस चीज़ का ध्यान रखना। सपोर्ट पे है, बट लेट्स सी क्लोजिंग होते होते क्या ब्रेक डाउन करता है या फिर सपोर्ट लेता है आज बैंक निफ्टी। वैसे कल जो न्यूज़ थी वो तो पॉजिटिव ही थी, बट स्टिल मार्केट यूएस की ओर से कोई टैरिफ वगैरह की न्यूज़ तो आई नहीं, so ऐसा लग रहा था प्राइस ऊपर जाएगा, बट लुक्स लाइक पसंद नहीं आई न्यूज़ मार्केट को। एंड इज़ अ वेरी ग्रेट अपॉर्चुनिटी अगर मार्केट इस पर्टिकुलर जोन पे बैंक निफ्टी में होल्ड करके रखता है, बिकॉज नहीं किया तो फिर कंफर्म बड़ा वाला एक लोअर लो कंफर्मेशन मिल जाएगा मार्केट को, क्योंकि कंटिन्यूसली लोअर टाइम फ्रेम पे या फिर स्मॉलर जो कर्व बन रहे हैं वहाँ पर कंटिन्यूसली सेलिंग आ रही है, बायर इंटरेस्टेड ही नहीं लग रहे हैं। बाकी लाइक भी करते रहो, डोंट फॉरगेट टू लाइक द स्ट्रीम। 130 की कैंडल इंपॉर्टेंट रहेगी, ध्यान रखना, ठीक है, 130 इज़ वेरी इंपॉर्टेंट। लंदन सेशन ओपन एट 130, 130 पे लंदन सेशन ओपन हो जाएगा। जी गुड पीजे सपोर्ट गुड मॉर्निंग। यस, क्रूड ऑयल में है यहाँ सेलिंग प्लान है। बस कैंडल का ध्यान रखिए, ओपन इक्वल टू लो पे सेल नहीं करते, नॉर्मली सेल कर सकते हैं। 1:30 हो चुका है, न्यूयॉर्क सेशन ओपन। ग्रेट न्यूज़, लेट्स सी किस तरह का मूव आता है अब यहाँ पे। लंदन सेशन ओपन हो चुका है, बेल इज रिंगिंग राइट नाउ।
Performs at the market open. Hermes certainly in focus. I heard you guys breaking the numbers here around an hour ago. Better than expected sales. Asia looking strong. Pricing power will be used, it seems, to counter any tariffs that might be coming for the luxury sector. So that seems to be of interest. And of course, we'll keep an eye on the defence names. We've heard from Safran this morning, their results and their guidance, boosting confidence perhaps. That's the view over at Citi. But the bigger picture around defence, we're live at the Munich Security Conference in a week where President Trump has said he wants perhaps the US, China and Russia to spend less on defence, but maybe more being spent by the Europeans, Guy.
Yeah, try and fit all that together. I think you're going to have a tough job. Let's talk about the market open Friday morning. What are we anticipating? I think probably fairly flat, but there's risk into the weekend. Do we need to price that as well? That's a factor to work our way through this opening trade. Right, here we go. FTSE 100. Absolutely flat. Yesterday, actually, the FTSE had a few laggards and it underperformed. Does that continue into the market this morning? At the moment, we are absolutely flat as a pancake. Not much to see here. The Stock 600, also not much to see here. The single stock story this morning, I think, is going to be where the interest lies. It is going to be names like MS. It is going to be some of those defence stocks. It is going to be NatWest, Safran, some of the other names that we're watching so carefully this morning. There's plenty to think about at a single stock level. I have to say, though, at an index level, it's looking pretty uninteresting. The IBEX is maybe the underperformer, down by a whopping 0.2%, Chrissy.
Well, I think right off the bat, you are seeing Hermes kind of take the cake here. It's your biggest index contributor to the upside. And I think it's really, from a sectoral perspective, paving the way for the other major movers to the upside. I'm looking at LVMH here this morning. I'm looking at Kering. I'm looking at Montclair, all seeing some green on the screen. I think that's where your leadership is when it comes to the upside and the Stock 600. But broadly, you are seeing more downside than upside, Anna. And I think that's where the pharmaceutical story really shows up, because your laggards here this morning, AstraZeneca, Novartis, Sanofi.
Right, yes. So that points to perhaps some concerns around that sector and where tariffs might fall next. We've heard that about reciprocal tariffs, not a great deal of detail, a lot of concern about whether, or a lot of questions about whether this will actually happen and when and how. But then on top of that, President Trump talking about specific sectors that could be in focus. I know autos was one of those. You were talking about pharmaceuticals as well. In terms of some of the individual movers then that we have this morning, of course, it's a little lighter on the corporate reporting front, aren't we, than we normally are. I do see Hermes, though. If you look at things on a points level, Hermes doing really well.
Yeah, LVMH, second best gainer. Luxury sector is definitely getting a lift this morning. Montclair also had numbers out yesterday. That's going to give us a lift in terms of that story too. So we're certainly seeing that sector absolutely front and centre. HSBC Holdings, though, is the biggest points drop on the other side. Normally you hear restructuring, job losses, and the market takes that as a positive. This morning that's not happening, which I think is interesting. So why is that being taken maybe slightly differently? Anyway, HSBC is down by 1.1%.
I'm curious what the kind of read through is. And I mean, you guys just went through the luxury picture as well, but I'll just add here, this is where the tariff story, I think, it gets really interesting, because this is a sector that is far more exposed to China, perhaps, in the Chinese story than maybe the United States story. Does the tariff piece bring it into full focus, especially as we're talking about maybe pivoting away from a Chinese consumer to an American one, if that's where the economic strength lies? Nevertheless, green on the screen across the board. You mentioned it, Montclair higher by 1.8%. Hermes is clearly your outperformer, higher by 4.8%.
But you have to have pricing power. Like, that's the difference. LVMH, does it have pricing power? Do these other companies have? Hermes definitely has pricing power.
Yes. I mean, it's all relative, isn't it? They have pricing power versus a lot of other consumer-facing goods companies you could name. But yes, within the sector, Hermes certainly stands out as one that does. And they're talking about that this morning and saying that they'll use that pricing power to take on any tariffs if they are applied. Let's talk about the banking sector. Interesting, NatWest is down 1%. You were talking about HSBC being down. There's obviously limited read across between one and the other. One's very much more UK than the other. But NatWest is down this morning, despite I'm seeing expectations that this stock might go a little higher this morning, but it's only down 0.8%. They're talking about when the government's going to get out of this business, that by the spring seems to be the thinking. We saw the sector under quite a lot of pressure from the Barclays numbers yesterday, so there does seem to be a little bit of a rethink there. I thought it was interesting, the NatWest CEO saying they're pricing in 3 more cuts from the Bank of England this year, and obviously that's not great for banks generally, even if they are cushioned by these sort of natural hedges, but that's not great for banks generally. So maybe there's some upside there if we don't get all of those rate cuts in the UK.
I just want to flag BAE Systems, big defence contractor out of Europe. One of the few in Europe that has a really big footprint over in the United States. And I just wonder whether or not you are seeing it react to the I'm going to cut defence spending story out of Trump, rather than the Europe needs to spend more story out of Trump. Because it's interesting that it's dropping this morning. I just want to take a look at the kind of slightly longer-term picture. But I wonder whether US defence stocks may have a slightly tougher day. BA had a really good day yesterday. Maybe we're just unwinding a little bit of that. Over the last 30 days, it's still up in positive territory.
Yeah, I mean, for the sector, what the result of that equation looks like, you know, US, Russia, China down, Europe up, if that equation could ever be put together, what the result of that would look like for the overall sector is a complex one.
Especially on a day where Rheinmetall is your biggest index, or I should say mover in the DAX, and a broadly lower index. The DAX as a whole down quite significantly as well. Let's talk about pharma here. I think we talked about all the other sectors. We talked about pharma a little bit at the market open, because we are seeing that really the laggard this morning. Novo Nordisk, to me, is I think the sole outperformer here, higher by about 0.3%. Now, this is important here because Novo Nordisk, I think 60% of its revenue comes from the United States. So that's really where you start to see, in the context of at least the tariff conversation, the trade conversation, or even the Greenland conversation with Denmark, Novo Nordisk serves as a key purpose. The rest of the kind of healthcare, pharmaceutical stocks on the back foot this morning.
What surprises me, I'm going to jump ahead a little bit, is that we're not seeing the same effects in the auto space. Volkswagen's actually positive this morning. I just want to double check that it's actually open, but I think it has. You've got some losses coming through, so Stellantis is down, BMW's down, Mercedes is down, but they're not down a lot. And you would have thought that the firm focus of the Trump administration on this space maybe would cause a greater level of uncertainty. But maybe it's already priced.
Well, that's it. I mean, if you didn't know before yesterday what the tariff picture for autos is going to look like, you still don't know what the tariff picture for autos is going to look like. You know that there might be one tariff on top of another tariff, which I suppose is what you take away from yesterday listening to President Trump. Let's return to the defence sector, a real focus of our attention this week, of course. The European defence sector is on high alert as leaders and investors weigh the latest comments on Ukraine negotiations from the US administration. Let's now head to the Munich Security Conference, where Oliver Crook is standing by for us once more. Good morning, Ollie.
Yeah, and if diplomats are having a bit of a roller coaster day, so too is the defense industry. I mean, you just look at the sort of share prices across the industry over the last couple of weeks, and every time you get a comment, could there be peace in Ukraine? You see it go down, then you say you need to be boost more spending, spend more on U.S. SEC, and then again, this meeting yesterday you had apparently where Trump is wanting to have potentially, having the defense budgets of China, Russia, the United States. All of these things are coming into the mix right front and center here for a lot of these defense companies that need to make investment decisions on the things that they're hearing from the U.S. administration. And we're pleased to be joined by one of the people making those decisions, Michael Johansson, who is the CEO of Saab. Thank you so much for joining us here. How difficult is it right now? Even a week ago, you said it's very difficult to have any visibility on what's going on for demand. How difficult is that for you right now?
No, absolutely. I said that a week ago, and I think it's even more true today. But we still see a high demand in the market. I mean, and I think the notion now, the view that Europe has to step up and do more, the statements like that have been coming all the time now from the US side. So, of course, if that is happening right now, I think many European countries will start to think about collaboration to a larger extent and actually spending more. And that will drive demand, so to say. So, but who can tell exactly what's going to happen if Europe comes together?
And on the European side, are you very encouraged that is happening? I mean, there was a lot of rhetoric for a long time. You were a little bit skeptical when we spoke, I think, a couple of years ago. Yeah. Are you more confident now that Europeans are getting serious about this?
Well, I mean, from the European Commission, it is quite clear. When von der Leyen is putting sort of defense and security really high on the agenda, we have a new defense commissioner with a really high ambition on coming together, spending more money. identifying flagship projects like integrated air missile defense system, unmanned collaborative combat aircraft. It could be sensor technology. All of that must of course happen also, and it will be depending on politicians saying that, okay, let's put some eggs in that basket, the common basket, and get going on these things. But who knows? It's still a negotiation, and we have that at the same time as they are negotiating the next budget in the EU.
Yeah, and so more specifically, we're here at this event. We're going to hear from J.D. Vance in a couple of hours' time. From the people we're talking to, some officials are kind of concerned that this is going to be kind of a wrecking ball speech about basically Europe, you're on your own. What do you expect to hear from J.D. Vance? And specifically, as the CEO of Saab, what are you listening for that is going to change your perspective on what you do?
No, you're absolutely right. Of course, you're listening to how much of an own responsibility do we have to take in the European context. That's sort of what you're listening to. You're listening to the support to NATO and how important the alliance is. That's incredibly important. And also the reciprocal type of trade between European defense companies and US. Will we have an option to actually build our capability in the US, and should we have the same reciprocal setup for US companies in Europe? Those things I'm listening to, of course.
Of course, reciprocal these days is being used not to have more trade, but potentially less trade in terms of reciprocal tariffs. How is the tariff story affecting you, how you're thinking about your business?
Yeah, of course, we're monitoring that. Trade war is never good. But I would say also we are a little bit more of more lead time as a company, because we have a little bit more in stock, and then we have sort of regionalized our supply chains to a large extent. So we're not depending on a certain hub somewhere in the world to say, get all our stuff into building platforms. But of course, I mean, over time, this is not good.
But meanwhile, you're also looking at expanding your footprint in terms of production capacity. Where could we see new sites from Saab over the next couple of years? I know Ukraine is a site that you're looking at right now.
No, absolutely. I think we're moving from donation from countries, from us delivering into Ukraine, to setting up support and maintenance of stuff, and then finding partnerships to actually establish both development and production capability in Ukraine. We have to do that, and we have to help them build sovereign capacity going forward. That's what we're doing.
And in terms of the impact of the Trump administration, specifically on domestic economic activity in the United States, there's a lot of euphoria within the market. Could you see yourself expanding as a consequence of the Trump presidency, your footprint in the United States?
No, absolutely. We took decisions like that independently of administration last year. We're building a new facility in Michigan, Grayling.
Does it make it more attractive now?
Maybe, I would say so. U.S. is a growing market to us, and we are investing heavily to boost capacity in the U.S., and it's good because we need redundancy, and the U.S. is a big market, of course, and also great support for export.
And then in terms of trying to build capacity out in Europe and other countries, what capitals are you talking to? What countries are trying to attract you to build your next sort of production
site? Well, you look at your main customer countries, of course. I mean, in Europe it would be UK, of course it would be Germany, it's Poland, but also a few others. Main customer countries where we build mini Saabs, not the full portfolio, but things where we have established sort of a good customer relationship.
And you have a huge portfolio of different products. When you're looking at your portfolio, you're looking at the demand for years to come. What's missing for you right now? What are you looking at in terms of possible M&A, where you need to build out your footprint?
But as everyone else, and we think we're still an agile company, we of course embrace new technologies to make more autonomous systems. That's absolutely going to be the future, independently of domain, in the air domain, subsea domain, and surface domain at sea. And I think things like that and taking care of the critical underwater infrastructure things are really in focus for me now, to bring expertise in, to take shortcuts into that sort of market.
So what does that look like? You're talking about patrolling sort of undersea, because obviously the undersea cable is something that's a huge concern for Sweden and for the, so you're looking at sort of autonomous drones that operate underwater?
We have autonomous and remotely operated vehicles today. We can put them being resident underwater and sort of turn them to life when they're needed to monitor something. And we can put sensor technology on them to actually see what's happening at the surface level, but also subsea. So that can be done. The question is, who is the customer? Because, I mean, these cables are owned by certain companies or countries, and it's not obviously the defense who is the customer to us. So that needs to be sorted as well.
Right. And then also another sort of factor of having all of these products and all of this, you also have huge volumes of data, and you have a lot of, you have sort of eyes all over the battlefield. Is there a sort of, who are your partners for trying to look at analyzing that data. I'm thinking about AI. I spoke to the top general for the Germans yesterday saying that basically if, the West falls behind on AI, it could be a massive risk for the military industry and for their own defense. How do you see that, and how do you attach that? How do you attack that? How do you get the sort of AI integrated into it?
No, you're right. I mean, it's a bit sort of like islands today. Of course, we have our data centers, you would say, based on the platforms that we have with lots of sensors and things on them. But you need to take it down another step. I mean, as countries, NATO, creating a cloud-based sort of protected environment, secure environment to share data, and that are decisions that are still need to be made in different countries around it, including Sweden. But we're getting there, I think. It will need partnerships.
When you walk away from this conference at the end, by the end of this weekend, what do you hope to know more about and make your to inform your decisions that you're going to be making?
I hope to see that it's for real, that Europe decides to step up, at least the majority of the countries, so we actually get things going on spending for common flagship projects. That would be great to hear, that we're not sort of hesitating now and having this consensus sort of way of looking at things, spreading our money over all 27 countries. We should sort of realize that we have some countries with really good defense industries that can help quickly boost capacity and capability in Europe. I mean, because we need that independently of administration in the US. We will have the Russian aggressor to our east and not being predictable for a long time. So we have to realize that. Some countries do, some countries don't.
Well, Michael Johansson, thank you so much for your time today. That is the CEO of Saab here at the Munich Security Conference, dealing with the great uncertainty that is coming, yes, from the Trump administration. Could some of that certainty, though, be coming from the Europeans? That's what he hopes to learn today here at the Munich Security Conference.
Oliver Crook there with the CEO of Saab, of course, at the Munich Security Conference. We thank you so much. Coming up on the program, we're going to stick with the corporate theme, optimism from the French telecoms giant Orange as it returns to profit in its home market. We'll be joined in the studio by the CEO next. Stick with us. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Asia is a continent of contrasts. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minister, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
Usually, hedge fund managers don't say they need to have enough money to buy the food. They want to buy airplanes and art and other things.
In my mind, happiness is about learning. The person who's got the most money when he or she dies, that they have lost. They haven't got it.
Uh-oh, I didn't realize that.
Welcome back. This is the opening trade. It's Friday. It's Valentine's Day. There's red on the screen. I'm not sure if that's appropriate or not. Stocks are a little in retreat this morning, down 0.2%. The CAC 40 is actually flat, though, and that's being lifted by the luxury sector. So Hermes and the strong results at the luxury sector boosting that market. But, Chrissy, we need to go to a different sector within the French market.
Different colour as well.
No love for stocks.
Let's not argue about whether this is orange or red, because this has been going on for a long time.
That's why you have to wear purple.
This morning it's orange.
Well, let's stick with another stock here, another corporate stock. Telecoms operator Orange has forecast improved earnings growth this year after profits rebounded in France, its biggest market. The company has resisted cutting prices in its home market, positioning itself as a premium service. The CEO, I'm pleased to say, of Orange, Christel Heidemann, joins us in the studio for an exclusive interview. It's lovely to see you here in London. Thank you for coming by. Good morning. Look, these numbers were really strong yesterday, and even the analyst community had said, wow, this is kind of coming out of nowhere. What do you attribute that strength to?
Well, we've been focusing for the past 2 years on our Lead the Future plan, on execution and on, fixing some of the issues we had, but also leveraging the great assets that we have. We have fiber everywhere across Europe. We have a fantastic presence in Africa, fast-growing market. So we really operate in the European environment on next-generation network, benefiting from our fiber coverage. We are the leader in Europe. And, of course, Europeans are, adopting broadband. We have cybersecurity business growing as well. So we've been benefiting from all, I would say, our top priorities, and that's the execution of our strategic plan.
Well, talk to us a little bit then about how that shows up in the context of perhaps some of your other peers based in France cutting a little bit of costs, worried about the political environment, worried about the geopolitical environment. You seem to be going against the grain in that backdrop.
Well, the solid results in France are first and foremost the result of excellent commercial performance. And our teams, our customers, we have the best NPS, we have the best network quality, we have the lowest churn on the market, and that's the key in very mature market like telecoms these days in Europe. Of course, we have the average revenue per user increasing. We're benefiting from customers migrating from copper to fiber. And there's a premium when customers buy fiber. So that's been driving growth, and that's the first and foremost priority for us. Of course, we continue to drive efficiency. Actually, we've been talking a lot about AI as well. This week, AI was everywhere.
Yes.
But in the company, we really use AI first and foremost to empower and augment our employees. And we've said it yesterday, in 2024, AI was for us 200 million euro of value across the company. And it's a mix of more revenues when we do customer value management and we optimize our footprint. And it's also, of course, cost efficiency.
Okay.
So all of that is in the results that we've announced probably yesterday.
And that all sounds like it costs a lot of money to investing in AI, investing in a lot of infrastructure, then, Christel. And I wonder what pricing power businesses like yours have for various types of customers, because sometimes I feel maybe we take for granted the phone in our pocket that will work when we need it to, or business customers perhaps need their, do so as well. So what constitutes, how do you have premium pricing power in this industry?
Well, for a long time at Orange, we've been focusing on what we call convergent customers. And obviously, we have all type of offers. Our cheapest offers, and this is somehow crazy in Europe if you realize that the price of a mobile monthly package is the price of a burger these days. When you realize how essential it is for us to have connectivity, nobody can work, live, without mobile connectivity. So this is very cheap. We invest billions, actually more than 6 billion every year in our networks. I think we take it for granted. We've been doing, fiber rollout across Europe. This is like tens of billions of euros that we've been investing. So this is it. Now it's true that we offer all type of packages. We have customers who really want the premium packages because they consume a lot of data, they travel, they want, reliable fiber. But we also have, students who need a low-cost package. So we want to offer everything. We've been doing inflation time, some price increase, but this is not mechanical anymore. So we really play on volume and value. We've been offering for customers some cybersecurity offers. This is working as well. So there's not one size-fits-all solution.
My experience with students is they tend to use their phones more than maybe we do.
Anybody else?
Is there too much competition, though, in Europe that actually we're not investing enough? This is an industry, like so many industries in Europe at the moment, there's this complaint about regulation. There's this complaint about the fact that we need scale. You talk about it in the banking sector. We've just been having a conversation about the Munich Security Conference about the fact we need consolidation within the defence space. Do we need consolidation within the mobile space, within the telco space, in order to provide the investment that Europe digitally needs right now?
We do need consolidation. Actually, Orange, we've been doing it actively.
Sure.
We've been driving consolidation nationally.
How much more do we need? How much does it need to accelerate?
You look at the European Union has said it. There's a telecom report that says we're missing 200 billion euro of investment by 2030 if we want to bring 5G and fiber to all Europeans.
And consolidation will solve that problem?
And consolidation will solve that because we are a fixed cost business. So if you're the number one in a country, you have more ability to invest than if you're the number 3 or the number 4. And in some countries, we have 5 operators. Think about it. In the US, there's only 3 mobile operators. In China, 3 mobile operators. In Europe, we have 27 countries, and we have at least 4 operators in every country.
And regardless of how many operators there are, there's a lot of infrastructure to invest in. And I know the industry, under what we called fair share rules, has been trying to argue that tech companies need to pay more because they benefit when you provide broadband to somebody's home, for example, or someone's phone. So that didn't get anywhere. But I wonder, with the AI theme growing and growing and growing, do you push for that again in the sector?
Well, it's not about, what we want as an industry is to make sure that when we invest for the network, it's us deciding to invest for our customers. The challenge that we have today is that some of the platforms and the big platforms are driving so much traffic on our networks that we are forced to investing just for them to continue to grow because their business model is based on more traffic. So that's the issue. Now with AI, we believe there's going to be a new paradigm because AI today, everyone is talking about the hyperscalers and the huge data centers. The reality is that AI, if we think about AI at scale, AI will happen on your mobile phone, in the cars, in hospitals. So it's going to happen at the edge. And the inference of AI will put some pressure on our networks. The traffic generated by AI will be very different from the video traffic. So we're convinced there's going to be
Are you already seeing it? Is there already a pickup?
No, for the time being, we don't see the impact of AI on our networks, but we want to be ready. And we want to make sure that we're building the right business model so that this time we don't miss the opportunity to capture value from AI adoption for our customers.
Nice to see you. Thanks for stopping by to come and see us. Christelle Haydon, CEO of Orange. Coming up, MS sales are jumping. The company has pricing power. Europe is certainly seeing a luxury. It's Valentine's Day. Maybe luxury should be up today. I don't know. Apparently jewellery sales go up on a day like today. More on that next. This is Bloomberg.
One would be generative AI. In the drop-down box there is the amount of capital that we're going to need to deploy in order to support generative AI. Data centers, as an example. Renewable energy or energy transition would be another of a macro trend. In the drop-down box of renewable energy and energy transition is how do we invest in the infrastructure that's going to allow us to remain competitive in energy transition. The other is, this has taken on a different nomenclature dependent upon who's communicating. It's either onshoring friendshoring, deglobalization, or what I would call reglobalization. And the reglobalization means how do we invest in U.S. manufacturing?
Never sleep, and neither does Interactive Brokers. Futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
Today's the day. Reciprocal tariffs coming, and the market doesn't care. Futures higher with 30 minutes to go until the start of trading. I'm Matt Miller.
I'm Shanali Bassick.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, producer prices picked up in January on higher food and energy costs, highlighting only limited progress on inflation.
Donald Trump says today is the big one. The president announces reciprocal tariffs, but he doesn't give us any detail on what, how, or when. We're waiting with bated breath.
And from Deere to Coca-Cola, corporate America braces for the fallout from those tariff threats. All that and more coming up. But let's take a look at these markets. Like Matt said, shaking off the threat of reciprocal tariffs, shaking off, of course, that hotter than expected PPI that we got at 8:30 a.m. Right now, the S&P 500 higher by about 0.2% pre-market, shaking off also what we saw yesterday. Slight declines. You take a look at the NASDAQ 100, same story, up a little bit more actually when it comes to your big tech index, currently higher by about 0.3%. Maybe Jim Caron can explain the bond market to us in just a couple of minutes, because right now you have 10-year yields falling down about 5 to 6 basis points, even though we got that hotter than expected PPI following up on what we saw with inflation yesterday.
I love it. I love it. It's crazy. Take a look at markets right now. If you don't believe me that they really weren't jarred by the tariffs, the yellow line is when we got Trump's tweet or his truth or whatever we call it. You can see here the white is S&P futures, the blue is the Bloomberg Dollar Index. We had a lot more movement before that, and we've been steadier since. So the market just doesn't seem to care. He's kind of the boy who cried wolf.
Is it the big one? You know, the macro is driving the story, but you know what? It's still earnings season. So we are going to look at some of the stocks under the surface. Interesting things in the technology world. Reddit is down 5.8% pre-market. They had missed estimates. The company says that a change to Google's algorithm had impacted search traffic and therefore ad revenue. We're also looking at ad tech giant Trade Desk, plunging after a rare forecast miss. It's just taking a beating here, down almost 30% pre-market. Analysts say the company faces a correction after consistent 20% growth. Robinhood up more than 12% pre-market. Revenue doubled year over year, and retail investors had made bets on the election. You might remember for the first time. The company also saw a 700% jump in revenue, in crypto revenue last quarter as well. We're going to discuss that and more with Robinhood CEO Vlad Tenev at 10:30 a.m. Eastern, Matt.
I'm very much looking forward to that interview. So much going on in terms of what's coming out of the Trump White House, right? I mean, you've got, well, for Vlad, hopefully reduced regulation. I saw Bob Diamond earlier today said he thinks there's going to be a wave of small bank mergers because of that. But you've got also what's going on in Ukraine. Will he make peace there? Is he going to give half the country to Vladimir Putin in doing so? And then, obviously, the tariffs.
Yes.
I think you're going to see there's a possibility that EU passenger vehicles are going to get higher tariffs.
Well, we have that press conference coming up at 1 p.m. Don't forget the economic data. We got PPI at 8:30, and there's a line to draw between, of course, what we're seeing on the inflation front, on the PPI front, and what we're seeing with tariffs, because, of course, we're talking about the revisions. They were meaningful as well. The headline was hot. All of this is before the tariffs actually went into effect. We're having trouble taming inflation and keeping it down at these levels even before we put in place some of these levies. So it's a really tricky picture, not that you're seeing it reflected in futures right now.
Yeah, or the bond market, as you've been saying. What's interesting, too, is Torsten Slok's note this morning brings up what a lot of investors have been looking at over the last couple of months, is whether we will face a repeat of that 70s type persistent inflation or reacceleration even. Totally scary.
Matt, tell us about it.
I'm a little intense.
But let's see if regulation and the like will actually lower rates like the administration would like. Speaking of the administration, President Donald Trump vowing to announce those reciprocal tariffs today at 1 p.m. in the Oval Office. Joining us now, Anne-Marie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. What are you expecting out of today, especially when we're in the midst of a lot of geopolitical changes, too, happening at the heels of the White House?
Well, based off what we've already seen from the president when it comes to tariffs, and we've only had 3 weeks of this administration in full, what we've seen is President Trump in a negotiating mode, or as Adam Posen of the Peterson Institute told us during surveillance, he says it's threatening mode. Because look at the tariffs that Trump has been talking about every single day, and the only ones that have actually stuck are the Chinese 10% additional tariffs on those Chinese imports. When it comes to Canada and Mexico, that's on pause till March 4th. March 12th is now the new deadline for these potential steel and aluminum tariffs. So I think with these reciprocal tariffs today, potentially this is going to be Trump in negotiating mode. And it's also coming at a time when the Prime Minister of India will be heading to the White House. He'll be entering at 4 p.m., so just a few hours after Trump has this reciprocal tariff press conference. And we've already seen countries like India, which would likely be on this list when you look at the trade-weighted average of tariffs of imports going into India. 10% India taxes those, while coming into the United States, it's 2.5%. They're already having concessions. This morning, the energy minister of India is talking about more liquefied natural gas imports they want to take in from the U.S. You already see India thinking about potentially cutting their tariff rate when it comes to U.S. imports. So this potentially is going to mean weeks of concessions. But this is an administration that is in the mood to keep using this term reciprocity when it comes to trading partners.
Anne-Marie, I wonder if Trump has car makers in his sights because, you've been following him for his whole career, political career. And how often does he mention the fact that there are no U.S. cars sold in Germany, at least in his view, and there's so many German cars sold here in the U.S.? Jim Farley yesterday was saying tariffs will blow a hole in the U.S. auto industry. But the EU has 10% tariffs and has had for years on passenger vehicles out of the U.S., and we only have 2.5% tariffs on passenger vehicles out of the EU.
It's a huge gap that almost always gets the president's attention. He has complained about this. It's one of his biggest pet peeves when it comes to the European Union, especially when it comes to Germany. Angela Merkel, the former chancellor of Germany, who was in charge during Trump 1.0, talked about it in her book, how he would complain that there wasn't enough Fords, in Berlin or Munich, but there were a lot of Mercedes and BMWs on the streets of New York. So if you're going to look at potentially what we could see from this administration, whether it's India, Brazil, reciprocal tariffs in the European Union, the auto sector for the EU, and potentially as well a big gap when it comes to agricultural products, the farm sector, that is going to come in focus. What happens after this, though? What's the scope of this? We should also note that it's really hard to do line by line, country by country in a massive EO. Potentially, Trump will punt this to his incoming trade ambassador, Jamieson Greer, who's not yet confirmed.
All right, well, stay tuned. Of course, that press conference coming up at 1 p.m. Eastern today. Bloomberg's Anne-Marie Hordern, really appreciate it. Let's keep this conversation going now with Jim Caron. He is Morgan Stanley Investment Management CIO and Cross Asset Solutions. Jim, great to see you at the desk.
See you.
So if you had told me that we would get hotter than expected CPI, that would be followed by hotter than expected PPI and renewed tariff threats, I would be pretty surprised to see the bond market rallying alongside stock futures. What do you think is in the driver's seat right now?
So, well, first, thanks for allowing me to be here and try to explain all this. So I would say that, look, there's a lot to unpack. There's a couple of things that are going on. Yes, the inflation numbers were hotter than expected. January tends to be a very seasonal month. It can be very, very technical. So I wouldn't take January as your starting point of a new trend. I think the market understands that a little bit and is walking some of that back. on the tariff component of things for inflation, we have to ask that question, are tariffs inflationary? And the answer is not as simple as a yes or no. It's yes, they are inflationary if there's an equivalent monetary offset, meaning if there's an easing of policy to print more money to pay for higher goods, then it's inflationary. If there's not, then it's just a shift in terms of trade. You get substitution effects, and it could be disinflationary as well. Now, Janet Yellen has said that, Powell has said that, even Larry Summers has said that. This is not new news. The other aspect is what really
Those are three people that Trump might not necessarily want to be on the same page with, right?
Correct.
I mean, did Elizabeth Warren say it too?
Well, that I don't know. But what I'll say, though, also is that the main driver for inflation, this is what I think part of the story that the market's missing, is it's actually government spending. Government spending is the main source of inflation because the government prints the money to get, to effectively more money chasing too few goods. And essentially what we've seen from fiscal year October 1st up until today versus a year ago, fiscal spending is up 15% when you're running nominal GDP in the U.S. around 5.5%. Fiscal policy has been, in the previous administration, very, very easy. A lot of money has come through. What Trump is also doing is he's trying to reduce that fiscal spending as well and bring down the inflation. So there's a lot of offsetting forces here, and that's what's helping bring down, I think, bond yields.
Do you buy it, I suppose? Because you have, at the same time, we talked about this yesterday, House Republicans putting kind of that opening offer on the budget deficit, the debt ceiling, to be raised by $4 trillion, which, as we pointed out, is larger than the GDP of France and many other large countries. So if that's the case, how does that really conflict with what you're seeing with DOGE and the actual efforts to try to bring down those costs?
So this is where we get into the fuzzy math of budget math, right? Somebody has to explain this to me at some point or another. But yeah, so overall, there's a net increase in the deficit in the 2025 to 2034 period, that 10-year period that the CBO scores, of about $3.3 trillion net. That number is lower than what it was in the previous administration over the same 10-year period effectively. So on net terms, it's viewed as a net reduction in actual spending. But in absolute terms, it is an increase in the deficit. Sounds like I'm speaking out of both sides of my mouth. That's what budget math actually does, and that's going to really affect Treasury supply and everything else in the money creation.
You know, we had Kevin Hassett on yesterday, which was fantastic, and I was asking him about lowering aggregate demand. That's something he said a couple times on CNBC. He sort of walked that back. But you talk about cutting fiscal spending. Is that the same thing? I mean, are we going to see a slowdown in the growth trajectory if the federal government isn't throwing trillions of dollars at this economy?
So there's two sides to this, right? You've got the public sector and you've got the private sector, right? Those are the only two halves that we have here. So the more the public sector spends, the less the private sector can spend. The less the public sector spends, the more the private, right? So effectively, there's a shift in the balance here. So if the private sector takes on more of the growth creation, the government doesn't crowd out the private sector, then effectively you can have higher productive growth. And I think that's what's happening in the equity markets right now. What the equity markets are seeing is, okay, yes, there's a lot of noise around all of this, but is it on net, on balance, positive for U.S. companies, positive for U.S. earnings? Does this mean that U.S. companies have better and more ability to trade outside of the U.S. and exports and things like that? Is that on balance a net positive? That's what the market's trying to figure out right now. Yeah, there might be a little bit higher inflation. I think there will be. I think we're going to run in the high twos. I mean, I don't think we're going to 2% target inflation anytime soon. But on net, it seems like a positive for U.S. companies at this point.
Jim, I have a curveball for you. I promise it's somewhat related to what we're talking about, but there was a really interesting paper out from DoubleLine this month. It's a thought experiment basically asking the question, are you safer off buying Microsoft debt than you are buying U.S. Treasuries at this point? You think about the U.S. position as a borrower. Of course, it's covering interest costs is a big question. Ratings are going down, and we've been in a deficit since 2002. You compare that to Microsoft, of course, and it just has a stellar balance sheet. And I would love to hear your thoughts.
So, look, I mean, I think that U.S. government debt is the safest debt in the world. I mean, I know we can do apples to apples and compare the balance sheet of the U.S., which has a big deficit, relative to Microsoft, which probably has a surplus and is doing very, very well. That's really an apples to oranges comparison. I mean, the U.S. has a huge tax base. You know, it can print money when it needs to. It can pay its taxes. Has great growth potential. I don't see it as an even trade. In other words, so yes, I mean there are corporations with better looking balance sheets than the U.S. government, but at the end of the day, when there's a safe haven flight to quality, if something happens in the world, am I going to go buy Microsoft bonds or am I going to buy U.S. Treasuries?
Yeah.
I think I know the answer. I'm buying U.S. Treasuries.
To that end, how much do you buy? Because you look at the 10-year and that fluctuation that we really started on here, what's the upper bound? Do you think that there's more sell-off before you see a stabilization?
I do. I think that it's very possible that we see a 5% 10-year note this year, and I'd even go so far as to say in the 5 to 5.25% range. Now, how I get there is this. I don't think the Fed is going to cut interest rates anymore this year, right? So if the Fed funds rate is 4.5%, and let's say the 2-year sits right on top of that at 4.5% yield, the normal spread of the yield curve is somewhere between 50 and 75 basis points, 2-year to 10-year. So that would tell me that the 10-year could sit between 5 and 5.25. Now, the question then becomes, does that break the market? I don't think it does. I think that the equity market doesn't like when yields are rising, but once they stabilize around that level, I don't view that as destructive for equities, given the kind of growth that we're getting, the jobs market, consumption, and everything else. I think we can sustain a 5% 10-year yield. So it'll be painful on the way up, but once we settle there, bonds will actually look more attractive. So I'm okay with that.
You were bold enough to make the call. A lot of people were not.
And you were the perfect guest to have, the perfect cross-asset guest to answer the news questions of the day for us, Jim. Really appreciate you coming by. CIO of Cross-Asset Solutions at Morgan Stanley Investment Management. Coming up, another challenging year for Deere. The ag giant sees annual net income dropping 50% in its most recent quarter. Sales dropping 30% in this country this year. Details next. This is Bloomberg.
Today, Donald Trump turns his focus to the war in Ukraine. We're just 1 month into 2025, but inflation has reared its ugly head.
And India's Prime Minister heads to the White House. It's Thursday, February 13th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in Liverpool.
And I'm Christopher Walljasper in Chicago.
First, to some breaking news. A car has driven into a group of people in the German city of Munich. The Bild newspaper reports that 15 people were injured. The Munich Security Conference is set to start tomorrow, and US Vice President J.D. Vance and Ukrainian President Volodymyr Zelensky are arriving later today. More on this breaking story on Reuters.com and the Reuters app.
U.S. President Donald Trump had a busy day working the phones yesterday, speaking by phone to both Russian President Vladimir Putin and, separately, Ukrainian President Volodymyr Zelensky about ending the war in Ukraine.
Getting peace. I think President Putin wants peace, and President Zelensky wants peace, and I want peace. I just want to see people stop getting killed.
After speaking with Putin, Trump said they had, quote, agreed to have their respective teams start negotiations immediately. The Kremlin says Putin has invited Trump to visit Moscow.
In fact, we expect that he'll come here, and I'll go there, and we're going to meet also probably in Saudi Arabia.
Now, Trump has long said that he would quickly end the war in Ukraine without spelling out exactly how. Defense Secretary Pete Hegseth delivered the new administration's bluntest statements so far on its approach to the war.
That returning to Ukraine's pre-2014 borders is an unrealistic objective.
Hegseth was at a meeting of Ukraine's military allies at NATO headquarters in Brussels. He rejected the prospect of welcoming Kyiv into that group.
Mike Collett-White is our news editor-at-large for the Ukraine war. So, Mike, what's been the reaction to all this in Ukraine so far?
I think it's fair to say Ukraine is disappointed. It's kind of extraordinary, I think, that the United States has given away arguably its best bargaining chips with Russia in any future negotiations, and that certainly doesn't strengthen Trump. It weakens him and certainly leaves Ukraine exposed.
So what does Ukraine have left as leverage if these bargaining chips have effectively been given away for them?
It does have some, and you can rest assured that President Volodymyr Zelensky will be making the best of this. It's not all over yet, i.e. negotiations haven't even begun, let's not forget. It was interesting that yesterday Scott Bessent, the US Treasury Secretary, was in Kyiv to discuss US access to Ukrainian critical minerals and rare earths. And Zelensky has deliberately promoted these deposits, large deposits of very valuable minerals that are used in all sorts of tech, as something that they can use to appeal to the Americans. And as we all know, Trump sees himself as some kind of master of the deal. And so he is looking at these as a way of getting something back for helping Ukraine in any future negotiations.
A U.S. judge is giving the go-ahead to the Trump administration's buyout program for federal workers. The decision could cut tens of thousands of workers off government payrolls as a part of sweeping efforts to downsize the U.S. civil service. Labor unions that brought the lawsuit didn't immediately say whether or not they would appeal the judge's decision. Tulsi Gabbard has been confirmed as the top U.S. spy. The Senate voted mostly along party lines to confirm Gabbard, who was once seen as among Trump's most controversial picks, given her past statements praising U.S. adversaries and for her lack of intelligence experience.
Israel is mobilizing military reservists in preparation for a potential resumption of fighting in Gaza. The move comes after Israeli Prime Minister Benjamin Netanyahu threatened to end the ceasefire if Hamas fails to release additional hostages by a Saturday deadline. Donald Trump roared back into the White House with a vow to tackle inflation. But faster than expected price increases in January show just how challenging that's going to be. Dan Burns is our economics editor. So, Dan, where specifically are we seeing these price increases?
So they're happening across the board in a pretty broad fashion. We saw substantial increases in the price of groceries. Food at home rose by 1.9% year over year. For instance, the price of eggs just on the month went up more than 15%, which is the largest in more than a decade. Gasoline prices went up. Rents, the cost of shelter generally, which is proving to be a sticky point for the effort to bring inflation lower, was also up again. So this was a pretty broad-based increase in consumer prices.
And it's very early in Trump's term, but is there any indication that his policies are playing a role here?
It's not, there doesn't seem to be a clear path of evidence suggesting that what Trump has done so far is a contributor to the price increases that we saw through January. There may have been, in some categories, some front loading of demand for certain items that people fear are going to be subject to tariffs. And they may have tried buying them earlier, and that may have contributed to some increases. But there's not a real clear picture that was the driver. Instead, this looks like some of what we've seen over the last several years for the month of January, which is it's a month when companies put through annual price increases. And those price increases, on balance, have been larger than they were before the pandemic. There is an argument to be made that this is a hump that we'll get over pretty quickly, but that will be something that we won't know for certainly a few weeks, if not a few months.
And sticking with economics, this week's Econ World episode looks at why the Fed is standing pat on rates. Spoiler alert, it's all about inflation, and why other major central banks are cutting. You can catch it on the Reuters app or wherever you listen to your podcasts. Prime Minister Narendra Modi heads to the White House today, bearing some diplomatic gifts to ease emerging tensions between the US and India. Trade will be high on the agenda as Modi works to keep India out of Trump's tariff crosshairs. South Asia editor Sanjeev Miglani joins us to break down what to expect.
So India is in a quite a precarious position. Trump has been very, very careful about not criticizing Modi, but he has attacked India. He has said India is a big abuser of trade. We understand he's carrying a whole bunch of initiatives in terms of things they can do to sort of lower the tariff walls here. They are considering sort of cutting back on custom duties on surgical equipment, electronics, stuff that India buys from the US. They might be looking at the US as a source of LNG imports for a desperately energy-hungry India. And then there is this defense relationship with America, where they've been buying a lot of weapons, but Trump wants much more. He wants really India to be scaling up sort of weapon purchases. So there's a lot to play for. There's a lot riding on this.
Motorbikes are an actual part of this, right?
Yeah, President Trump had been in an earlier term harking back on India's very high tariffs on Harley-Davidson bikes, and they've gone and sort of brought them down dramatically. It seems like it's a symbolism of, this country that is seen as a very protectionist, at least in American eyes. But India has its limits also. So he has to balance the demands of Make America Great with Make in India.
And of course, after last week's military deportation flight back to India, immigration will be on the agenda too.
Yeah, I mean, the idea of, people being deported on military flight and they were chained on the seats, handcuffs. I mean, that didn't go down too well here. They want to make a distinction to Trump between illegal migration and these undocumented people. He will be trying and pressing the administration that you got to make a distinction between people, the highly skilled Indians who work in different corners of America, from doctors to all these IT guys, to people in finance, to people in AI.
And for today's recommended read, I'd say something lighter, but I'm not sure masses of compacted snow feel that light when they smash into you. That's right, it's all about a massive snowball fight in Japan with 120 teams battling for victory. You can read all about the ice-cold determination it takes to win by following the link.
क्रूड ऑयल में ध्यान रखना, ऊपर से रेजिस्टेंस से सेलिंग जरूर आई है, एफईजी है इसलिए काफ़ी रुक रहा है। एफईजी अगर ब्रेक करता है तो शायद थोड़ा और गिरेगा, नहीं तो फिर इसी रेंज में फंस के रह जाएगा प्राइस। ओके, तो थोड़ा ध्यान रख के जो सेलर्स हैं थोड़ा ध्यान रखना। एफईजी ब्रेक होना बहुत ज़रूरी है और फॉल करना है प्राइस को, अगर तो नहीं तो ये बस यहीं कहीं होल्ड कर जाएगा टिल एटलीस्ट 5 PM या 6:30 तक, इसी रेंज के अंदर। बाकी अगर नीचे ब्रेक डाउन कर देता है तो वेल एंड गुड, फिर हमें थोड़ा एक अच्छा फॉल और देखने के लिए मिल सकता है। बड़ा फॉल कह सकते हो, नॉट दैट मच बट ठीक ठाक। अदरवाइज इट इज स्टिल स्टक इन बिटवीन दिस एफईजी जोन। लेट्स सी नीचे निकल के आता है नहीं निकल के आता है। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। नेचुरल गैस भी साइडवे चला गया ऑलमोस्ट। कल सेलिंग आई, ये नीचे एक रीटेस्ट जोन था वहां पर पहुंचना चाहिए। फिलहाल एफईजी से रिजेक्शन इसने भी लिया है और साइडवे चला गया विथ नो वॉल्यूम। बाकी कल बिटकॉइन का ट्रेड अच्छा निकला होगा, आई होप सो। वो सपोर्ट पे बनाया था बाइंग का ट्रेड, मार्केट ने वहीं से सपोर्ट लिया, काफ़ी देर लगाई बट ले लिया था। एंड ऊपर रीटेस्ट जोन था जो 15 मिनट में, वहीं पर फिलहाल ये साइडवेज है। लेट्स सी कितने देर और रुकता है इस जोन के अराउंड, क्योंकि रीटेस्ट जोन से भी काफ़ी देर से रीटेस्ट लेके बैठा हुआ है बट नीचे नहीं जा रहा है प्राइस। बाकी रीटेस्ट के अगर ऊपर निकल जाता है इन केस 15 मिनट टाइम फ्रेम पे बिटकॉइन, सो देयर इज अ वेरी हाई चांसेस फिर थोड़ा सा और ऊपर मूव करेगा। ऊपर का रेजिस्टेंस भी वैसे मल्टीपल टाइम टेस्ट है तो फिर और बड़ा मूव आ सकता है उस केस में। फिलहाल वही रीटेस्ट जोन पर ही है। जो लोग क्वेश्चन पूछते हैं प्लीज़ व्हाट्सएप पे मत पूछा करो, व्हाट्सएप में चेक नहीं करता हूँ, पहले ही बताया था मैंने। जब तक आप क्वेश्चन पूछोगे आंसर मैं बहुत लेट दूंगा, वहाँ देखता नहीं हूँ। सो प्लीज़ आस्क योर क्वेश्चन इन द लाइव सेशन, आई विल हैप्पी टू हेल्प ओवर हियर। राखी जी राइट नाउ ठीक है, अभी बिटकॉइन और गोल्ड के लेवल बता देते हैं। बिटकॉइन के मैंने बता दिए थे, कल ही बता दिए थे, वही सेम अभी चल रहे हैं। एंड एज फार एज गोल्ड इज कंसर्न, गोल्ड वैसे ओवरऑल तो बुलिश ही है। लेवल देख लेते हैं कुछ अगर बने हैं नए फ्रेश। ठीक है, बिटकॉइन कल वाले सपोर्ट पे था, वहीं से सपोर्ट लिया है, 2 बार तो ले चुका है। लेट्स सी और कितना मूव करता है यहाँ से। रेजिस्टेंस देख लेते हैं एक बार, अभी तो रीटेस्ट जोन पर है, कुछ खास रुक तो नहीं रहा है, मतलब रुका हुआ है काफ़ी देर से, बट कुछ खास सेलिंग नहीं आ रही है। तो एक बार और एग्जैक्ट कहीं पर रेजिस्टेंस अगर बना हो। लुक एट दिस, क्रूड रुक गया, रेंज बना दी इसने भी। सेलिंग आनी है, थोड़ी फास्ट आनी चाहिए, ज़्यादा देर होल्ड नहीं होना चाहिए। एफ ब्रेक होता है तो ये थोड़ा बहुत नीचे और आ सकता है। एफ ब्रेक होना जरूरी है। ब्रेक मतलब प्रॉपरली ब्रेक डाउन रीटेस्ट काइंड ऑफ सिचुएशन। डेटा लिखा हुआ है 7 PM पर है, रिटेल सेल्स और कोर रिटेल सेल्स यूएस का डेटा है। ये इम्पैक्ट करता है आपका गोल्ड और सिल्वर को मोस्ट प्रॉब्ली।
Good morning.
Good morning again. Happy Friday. Hope you're all well and geared up for the weekend. A full trading day, though, is between us and your Friday evenings. Before we get to that, though, as you can see, equity markets are mixed. The benchmark is up. We are up, by the way, for a fifth week if all things remain largely where they are on price itself. A lot of the rally we've seen on the benchmark itself in the Asia-Pacific is really down to China, which we'll get to in a moment here. The dollar is weaker for a second week, I believe, roughly speaking, so that it is providing a little bit more runway. Gold futures, bottom row, rightmost side of your screens. All-time highs, 7 week of gains as far as that is concerned. And, of course, the temperature, if you gauge it by Brent crude pulling back for several weeks now, really is indicative of really risk sentiment maybe coming back as far as the geopolitical conversations are concerned. We can apply that to tariffs. We can apply that to, of course, some of the progress or lack of it that we're seeing over in Europe, in Ukraine, for example, and also in the Middle East. Flip the boards, please. So overnight, again, same day, a different day, same story with the Golden Dragon Index rallying. Again, in case you missed the big moves in a lot of these big tech firms overnight. Baidu, by the way, the news there is the information also reporting that Baidu is still working with Apple on AI features for the iPhone, leading to gains there. We'll watch, of course, whether or not that continues this Friday. And futures going into the Friday session, 28 minutes away from the opening bell, are pointing to some substantial upside. I should note there's 0.6%. A50 futures in Singapore, 0.4%. So we are well on track for another day of gains. Some strength coming through, as you can see here, compared to 24 hours ago on the Chinese currency. We now have a 727 handle there on dollar China.
Right, David. And picking up on that theme, this sort of potential optimism that the reciprocal tariffs may not come in for quite a few months, it leaves this window open for potential negotiations. Let's get more on that story. President Trump saying that reciprocal tariffs are fair for the U.S. after he ordered his administration to consider imposing these levies on trading partners. He reiterated that line during a news conference with Indian Prime Minister Narendra Modi in Washington. Bloomberg senior editor Derek Warbank is with us to break down the latest. Just before we turn to sort of the India-US particular aspect of this, can you just lay out more broadly what it is that we know so far about these reciprocal tariffs and whether there's a surprise that perhaps this might be introduced a little bit more gradually than perhaps markets or investors first were concerned about?
Yeah, I think there's a bit of maybe a little bit of a gap that has since closed now. But let me make sure that everyone has that gap where it needs to be. Doing reciprocal tariffs is administratively a monster of a thing to do. You have to go through the entire tariff schedule and basically say, okay, what are the individual levies that countries are doing? In addition, what are the macro sort of things that you might consider levies? And Trump was talking about, you know, VATs and overall import levies and all that stuff. So you have to do all of that math and then figure out whether you're going to go product by product by product or sort of like macro kind of country by country, or if you're going to go somewhere in between. It's a huge undertaking. And Trump has said that he's going to kick this to his administration to sort of figure out the details of this, come back to him with reports. That stuff could happen maybe as early as April, and then things would get levied. So that's kind of the process that we're underway. Nothing that's like flipping on a light bulb and then it just all comes on tomorrow. That's not the situation we're in. As we've seen with Trump so far in his second presidential term, anything that looks like it's a delay out is room for negotiation, right? And so I think that's where some of the optimism that you're seeing coming in may be. Now, Trump is saying no exceptions on this, but I think the markets are reading in based on some of the past deals and then off-ramps that we've seen are reading in some room for negotiation here.
I mean, Derek, to your point about this potential for negotiation and off-ramps, we've already had potentially some kind of exemption or some kind of allowance for Australia discussed. And, of course, Narendra Modi was just meeting with Trump. Explain a little bit about that potential to negotiate. Is there room to negotiate between India and the US? Where are the countries that might have a little bit of an advantage here?
Yeah, it's a great question. And there are so many balls in the air that it's hard to kind of keep up with where the juggling may be, right? The Australia exemption was towards steel and aluminum tariffs, the 25% tariffs that were going to be there. So that's a slightly different thing than this reciprocal one, which Trump says there won't be exemptions for. That having been said, India's already taken some moves to try and lower the temperature and appeal to Trump here, right? They've started reducing some of the tariffs there. They've also done some non-tariff things like Signal, and Modi said again today that they're willing to take in people who are in the U.S. As undocumented migrants. They're willing to take them back. So there are some tariff-related things, some non-tariff-related things. So I think, broadly speaking, if you're a country that is seeking free trade agreements, maybe that puts you in a little bit of a better state. You know, there's some talk about a U.S.-India deal that could, you know, be in the starting blocks. In addition to this, though, I think that if you are a sort of country that has positioned yourself as maybe more of an export destination for the United States, that also may be helpful, right? Buying planes could be helpful. That's something that Trump said to Australia. Maybe that factors into Airbus, Boeing decisions. So those are some things that you have to sort of take into consideration as you're looking across the reciprocal tariffs thing. One note I would say is I think that there are some countries that have maybe higher on the barrier to entry, like India, like Vietnam, that the U.S. has reached out to geostrategically. That could be another issue at play as we go forward.
Derek, thank you so much. Derek Wallbank, our senior editor in Singapore, for us. From one top story to another, and we've learned here at Bloomberg that HSBC is about to kicking off, present tense, a fresh round of job cuts at its investment bank, starting here in the Asia Pacific. Our finance reporter, Harry Brumpton, joins us right now from Sydney. Harry, get us up to speed about what we know here so far.
Yeah, these job cuts are going to be staggered over a matter of weeks to months, and they're chiefly going to begin in the kind of Asia-Pacific region, but may include global roles eventually. So we're kind of starting at a local level on the home ground for them, and see where it goes from there. Most of that is going to be focused on reducing duplication in roles, as well as some performance-based redundancies as well. So a bit of a mix there. The larger context is that, the new CEO, he's only been in the seat since September, moving very quickly, but from day one, almost promised about $3 billion in job in cuts in total. So when you think about that, that's about 10% of costs. The obvious place to start in a services business like investment banking is around payrolls. I think they spent $19 billion on wages last year. So, this is part of a broader restructure, and CEOs before El Hedri have been trying to reorient the bank and right-size it, but he seems to be making swifter progress than some before him, and has been rewarded by shareholders. We'll get more context on what these job cuts look like, and also how it flows through to bottom line as of basically Wednesday. I think they're due to report results on the 19th, so we'll get a bit more context around it then, as well as what they're doing structure-wise, not just with jobs and roles, but there's been divestitures put forward, as well as some combinations of different business units to reorient the bank and make it look very different from what it has been even last year.
Harry, to your point about how quickly the new CEO is making some of these changes, what is the sort of urgency that is driving this broader restructure, and what are some of the pain points that HSBC is essentially trying to solve longer term?
Yeah, I think the urgency is that HSBC is facing the dilemma that many big banks are facing, particularly in that bulge bracket area. That's a delicate position to be in as a global bank, where costs are high, and there's large question marks for shareholders about what the competitive advantage of a bank such as that is. And so, they've, as I say, been through a number of CEOs that have been under pressure from shareholders to deliver more on the resource base that they have and the legacy that the bank has. has and the brand that it has. We've seen turnaround plans go on for years and years. I mean, you only have to look at one of its near competitors, Citibank in the US on Wall Street, and Jane Fraser's turnaround there has been, 4 years underway, and in many ways she's implemented exactly what she said she would, but hasn't been rewarded by shareholders. And it's a dilemma around what existentially do you want to be buying in a bank. You could be buying Citibank or HSBC, or you could be buying JP Morgan that just notched up literally the highest profit of any bank in history in the US, and does much the same thing. So if you're riding that sector or you're an analyst in that space, it's a game of relative strengths, I suppose.
Okay. Bloomberg's finance reporter Harry Brumpton there in Sydney for us. And coming up, we'll be talking market strategy with NF Trinity and why they think that the US exceptionalism is set to remain a key investment theme. And we are counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. Good morning. This is the China Show.
Right, welcome back. So we're continuing to track whether this AI-fueled rally will continue. This is a look at the selling that we got into the close yesterday. This is a look at the net Stock Connect purchases, and as you can see, that turned negative into the close yesterday. Although that being said, separately but related to the story was Baidu on the information that report that Baidu is still working with Apple, and that really led to gains overnight in that stock, and we are indicated higher going into the Friday session.
Yeah, and a few things to watch. I mean, namely, as you point out, that southbound connect flows, we did shift negative midday, perhaps a reaction to some of the sort of tariff news, markets sort of reconciling themselves with that. But that, of course, has been really robust buying. I mean, elsewhere, we're still keeping an eye on the Hong Kong stock rally. The Hang Seng Index poised for that fifth straight week of gains. It's up about 3 or so% so far. And, of course, it was really sort of concentrated in a lot of tech names. There's optimism around the AI story. Alibaba, a key driver there. Keep an eye. Stock up nearly 17% so far this week. Elsewhere, we also have China selling 20 billion yuan of 50-year bonds at 2.65%, resuming sales in the longer end there. And Wang Yi is in Europe on this sort of charm offensive. He's already met with his peer in the UK.
Yep.
Yeah, David Lammy, foreign minister. Briefly, seems like he met with Starmer as well. And we're going back into this window for credit data. I'm still keeping an eye out really to see whether or not longer term we're seeing that demand coming back.
Yeah, it's probably going to be a Friday thing. It is Friday and typically comes out, not all the time, but typically that comes out going into the weekend. So markets have been doing well. We're up on the Asia Pacific, as you can see, fifth straight week there. That's thanks to China. Let's bring in Helen Zhu, Managing Director and CIO at NF Trinity, here with us in our studios to wrap up the week for us. And yeah, Helen, why have things been so good in the market?
I think that people had this concern that after the inauguration in late January that things would fall to pieces and we would have a really gruesome mix of tariffs, all tariffs, 60% on China, 25% or 10% elsewhere across the board. And then maybe you would have a lot of other unexpected negative policies come out as well. But the reality is, one is on the tariff front, it hasn't been as bad. There's negotiations, there's things being pushed back. Secondly, I think in terms of the war, there's definitely been more talk about, easing tensions in the Middle East as well as maybe even in Ukraine. I think that's actually an upside surprise as well. And thirdly, I think, if you look at the new administration, they've been making some reasonably, long-term comments about planning in terms of how to manage the deficit better, potentially down to 3%, which is an ambitious target, how they want to control inflation. Obviously, that works in with the inflation expectation around the war situation as well. So a combination of factors that maybe is not as bad as before, and maybe with some slight upside surprises as well.
To your point about some of this potential for the slight upside, we had this instant jolt when we first heard about reciprocal tariffs, but overall it does look like instead of starting very high, for example, 60% with China, we seem to be starting lower and kind of moving up. The other element with reciprocal tariffs is potentially if we see other countries lowering their tariff in kind, or we see kind of globally, we see those tariffs coming down, How convincing is that bullish case? Do you buy into that potential that actually this could be a boon for the global economy?
It could be, right? I mean, first of all, it's still very early days. Like, we've only been talking about it for a very short period of time. No one's really thought about it meaningfully in the past, and I think people still need to run their numbers and so on. But certainly, if the way forward to resolving the imbalances is for certain countries to drop their tariffs rather than for the U.S. to ratchet up their tariffs aggressively across the board for everybody, that seems like a better potential solution that could catalyze greater globalization and global growth. And for countries like China, for example, that don't necessarily have a huge amount of reciprocal tariffs on the U.S., well, then maybe it will benefit more as well, right? So I think that's the positive angle that could actually emerge from all of this, and it still makes Trump look pretty good in terms of evening out the imbalance. But the reality is then we could be closer to heading for that Goldilocks scenario of the U.S. is still doing pretty well, growth is still pretty good, and then all the negative Trump or the bad Trump policies actually turn out to be not as bad as feared, and we have some kind of, more graceful resolution towards a synchronized global growth story with weaker U.S. dollar, but still a very sanguine outlook.
That's a good point, the weaker U.S. dollar. Do you think, Scott Bessent talking about how he wants to reduce the deficit, he wants to lower the 10-year yield, do you think markets can trust that they'll be able to do that? Because that's a good thing, as you point out.
I think that's a great thing, because at the end of the day, a lot of things in the U.S. economy are funded based on the long end, not necessarily on the short end, right? So mortgages and things like that. So he does want to indicate that the long end is a little bit too high, it should come down. There's a few things that really drive that. One is the inflation expectation, and if energy prices can come down, if there's any kind of easing of supply constraints because of the war, that's certainly a positive. If the fiscal situation is not as aggressively proactive as before at 5 or 6% deficit, but rather something smaller, it's probably a little bit lower growth for the U.S., but still fairly healthy growth in the U.S., and that actually brings down the dollar as well and brings down the long end in terms of yields. I think that's actually a very good combination that will help to fuel the rest of the global economy off a relatively tense period at the tail end of last year after the red sweep.
The market driver that has really caught many people by surprise, of course, is the China AI story. What do you make of that? Is this overbought? Is it? What do you think? Do you think we can sustain the momentum that we've seen?
Well, from a China tech perspective, right, I think a lot of stocks were trading at like 5 or 6 times PE before because of lack of growth, because of just lack of interest and concerns about U.S. sanctions and getting taken off the investable list, et cetera. I think what's happened now is that people are coming back and paying more attention to it and saying, oh, this stuff is giving no value whatsoever to the potential AI, the LLM, the ecosystem, et cetera. So it's just a normalized re-rating, but basically valuations going up, but not really pricing in much premium for the AI story just yet, which I think actually is correct, because at the end of the day, you don't really know what the potential monetization opportunities are over the medium to longer term, whether there is indeed any opportunity outside the China market itself into the global market, like DeepSeek or some of the others. And more importantly as well, I think one thing to consider is that strategically, this has brought a lot of attention in the Trump administration to, how did China do this? Did they use our technology? How did they get their access to the GPUs? Is it through the black market, or is it actually through just, some of the legacy products? And I think as a result of that, there might be more considerations about whether to further stifle export of chips to China, even for the lower end type of products, whether to crack down on the, gray market, et cetera. And I think as a result of that, there is also some degree of uncertainty about whether what DeepSeek has been able to do can be repeated in the medium to longer term.
Yeah, I mean, Alibaba's trading at 117. We're up now 50%, just over 4 weeks. I think on the valuation point you're making, I think we're back to 10.5 times, which is effectively the 10-year mean, if you look at it that way. So what's the advice now to people who might have missed this initial leg of this tech rally in China?
I think the most important thing is still to watch the broader, outlook for the overall Chinese economy and for consumption. Most of these internet names are driven by consumption, and consumption has been fairly tepid. So many of these companies went from like 10, 20% growth a few years ago, and that was able to support a much higher valuation multiple, to now no growth, or during some periods of time, even potentially negative growth off a slightly higher base, after the reopening, et cetera. So I think the key thing is, does the Chinese consumer feel more bullish and confident? And that could be driven by easing of trade tensions. That could be a response to the stimulative policies. That could also be because the property market starts to stabilize, and therefore they don't see their net worth potentially dropping. If any of those three things can happen, or some combination of those three things, and you actually see the organic growth rate for their core business start to pick up, then I think that's the most sustainable and solid support for a medium to longer term re-rating for the Chinese internet names, rather than just a short-term DeepSeek or quick AI boost.
Okay, Helen, thank you so much for joining us. Helen Zhu, Managing Director and CIO at NF Trinity. There is plenty more ahead. We'll take a quick look at markets. Stay with us. This is Bloomberg.
Happy Friday, 4 minutes to the opening bell, and we are again pointing up 1.5% on tech. So again, same story, different day, 22,000 now on the Hang Seng Index. We're poised to open higher, and likely a fifth week of gains beckons.
Yeah, and a few different things that we are watching here when it comes to certain names. As you say, still, it's really this tech name. We're looking at Alibaba, for example. Anyway, the story persists, still higher. Yeah. HSBC, we're having these potential job cuts. They could start in Asia. Elsewhere, Greentown, we have this $1 bond coming back to market. China high yield, finally, after all this time. And a little bit of optimism as well about Baidu. Stay with us. Good morning. You are watching The China Show. Welcome back. Good morning. You are watching The China Show. We are counting down to the open of markets here in Hong Kong. And it looks like the really robust week we've been having is still going to persist through Friday.
It is. Friday the 14th, right? Valentine's Day is upon us. So for those of you who have yet to be extorted by florists out there, the day is still young. I'm about to get extorted for dinner, and also the florist. But I'm a willing victim here. No judging.
Yeah, careful what you say here, Dave.
Yeah. I also just realized, talking about this AI rally, the Chinese word for love is?
Ai.
I. AI ni ma. Right? 1%.
You've been waiting all year to do this.
I did. Well, it worked, didn't it? 1% to the upside here on the Hang Seng Index in the open, going into the open today. We did get a fifth day of a pickup in margin debt, a sixth actually, considering the whole week and, of course, going into today. Also, I think turnover was 1.8 trillion onshore yesterday. Shanghai Comp, though, and it's worth pointing out, of course, if you take a step back, this is really one part of the Chinese equity market that's largely lagged the AI rally. 3,900 still, though, on the CSI 300. We have a bond auction today, as Rebecca was pointing out. I think we have a 2027 bonds and another one for 50-year bonds coming through in 20 billion. The big story in the bond markets, as Rebecca's pointing out, was Greentown, of course, hitting the dollar bond markets for the first time, at least from a property developer issuer perspective, the first time in years. Fifth week of gains is upon us now on the Hang Seng Tech Index, Hang Seng Index. Hang Seng China, level to watch is coming up in 5, 4, 3, 2, 1. Bottom of your screens coming through shortly. I think we're about 300 points thereabouts from that level. Thank you so much. 200 points. And, okay, iFly Tech, speaking of AI, talking about how they are looking to finish their AI and maybe launch their domestic model in March. Just watch that closely. Xiaomi is up 1.8%, big drop yesterday. Hua Hong is an earnings story, and also AAC Tech. Hua Hong reported, there we go, a net loss down to an FX hit. And AAC Tech giving out some guidance here on full year, 130 to 140% to the upside there.
Yeah, and we're back, actually, to discuss all that, markets and more, with Helen Zhu, Managing Director and CIO at NF Trinity. Just before the break, we were chatting about the AI story, what that means for China. Do you think that this in any way will impact how Beijing is seeing the MPC? I'm wondering if this means they're more inclined to double down on industrial policy and perhaps be less inclined to expand some of their support for consumption? I don't know how high expectations were to begin with, I guess, on the consumption side, right?
I think China has definitely been structurally very, very supportive of the entire AI ecosystem development for a very long time, right? Whether that's in terms of applications, in terms of hardware, et cetera. So policy support is not the bottleneck for the development of this ecosystem in China. The main bottleneck is whether the technology is actually advancing, and also, very importantly, whether there are certain components or whatnot that are required from U.S., Europe, Japan, et cetera, that are still available versus before. So I don't think this really meaningfully affects the proactiveness of the support towards AI. But the support towards consumption, whether you have certain types of consumption coupons or temporary cuts to taxes or any kind of additional subsidies towards EVs, et cetera, that's more of a pro-cyclical policy. And I think the consumption side is where the government has been trying to really revive the struggling economy and consumer confidence recently. So, if there is any kind of meaningful policy to come out of the MPC, we expect it to probably be more on the pro-cyclical consumption side. I don't see any major changes to the AI side. If anything, the focus is going to be more on negotiating with other economies strategically to see what China could help with in exchange for less onerous and less restrictive policies on access to their technologies, or maybe eventually even their markets. But I think right now China just wants to focus the AI ecosystem development on its own market first and foremost.
I guess a mental exercise. If Trump wasn't president, do you think the Chinese markets would be in a much better position right now, given the outlook? I mean, that's another way of asking, are tariffs the bigger issue for Chinese markets than anything we can find domestically?
Not necessarily. If you think about it, in the first Trump administration, the Chinese markets were actually quite buoyant. We had synchronized global growth, and actually emerging markets outperformed the U.S. for a period of time, et cetera. So not necessarily the case that Trump is negative for the Chinese economy. The perception is that it's more volatile, more uncertain, et cetera. But the reality is, if things can be worked out on fronts other than strategic technology issues, there could be some trades on tariffs, there could be some trades on, the war and assistance with that, which Trump did mention that he wants President Xi's help on, and other strategic, issues that China can compromise with Trump on, because he's a businessman who wants to do deals, then it could actually end up being positive for China from a markets and economy perspective.
Helen, as always, fantastic to see you. Have a good weekend ahead. Helen Zhu there, Managing Director and CIO at NF Trinity. Right, as we go into the Friday session, bottom of your screen, CSI 300 is up, Hang Seng Tech is also. So it's looking like we are poised to enter the weekend on solid footing. Joining us now is our next guest. Fang Liu is Index Research Department Product Strategy Director at eFund Management, mainland China's largest by assets under management. That's according, of course, to our folks at Bloomberg Intelligence, that statistic rather. She joins us out of Shanghai. Fang Liu, good morning, and thanks for taking the time for us. Since you're in Shanghai, you have probably the pulse of what's going on on this market. What do you think is going on? What do you think is behind, and asking the obvious because we know it's deep sea, but what do you think is behind all these flows coming back into this Chinese market?
Hi, David. Thank you for having me. That we have seen that the Chinese ETF market had hit a huge milestone last year, and with that, their huge growth was driven by a few factors. And their equity ETF have been on the spotlight. They're pulling in around 1 trillion RMB in the last year, just inflows. So I think that's the main trend of the last year. And in addition to that, there are also two trends. One is the size ETFs become very popular for the investors, not only just individual investors, but also institutional investors. And third trend is about the fee reduction for the ETF products, and which has been widely recognized by the investors. So to summarize, I think these are the three key main themes what happened behind the market.
What's your forecast for ETF prices this year? What levels do you think we hit?
The ETF, I think it's a good question, but I don't have the exact data here. Maybe I can provide some other thoughts around the growth and dive into the trends.
Go ahead.
Yes. One thing I want to point out is about this tremendous, remarkable change what happened in China market. The ETF, the equity ETFs, has become really popular, and the size has just hit 3.3 trillion RMB. And what we have seen, observed in the market is that this equity size ETFs has become really widely recognized by the investors last year. For example, like the CSI 300.
Wait guys, क्रूड ऑयल को देखोगे still holding the FEG. अभी भी FEG ब्रेक नहीं कर पा रहा है ये. FEG अभी भी ब्रेक नहीं हो पा रहा है इससे. FEG ब्रेक नहीं हुआ तो नीचे जाएगा नहीं. जो लोग सेलिंग में, ध्यान रखना ये रेंज बनी रह जाएगी टिल 530. रेजिस्टेंस से सेलिंग जरूर आ चुकी है 2-3 बार, बट FEG ब्रेक होने का नाम नहीं ले रहा डाउन साइड पे. और फॉल करना है तो FEG ब्रेक होना बहुत ज़रूरी है, नहीं तो ये रेंज मान लो ऊपर 6250 से नीचे FEG 6200. 50 पॉइंट की ये पूरी रेंज बन जाएगी मार्केट में.
...5 years, and just coming hours after President
35,000 jobs added in meeting now underway.
This is the Asia Trade. I'm Sherry-Ann in Tokyo.
I'm Heidi Stradwatts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set to follow Wall Street higher as President Trump moves to impose reciprocal tariffs on US trading partners, but not immediately. The dollar weakens while treasuries rebound. Trade topping the agenda as India's Prime Minister Narendra Modi visits the White House. We'll be live in Washington with latest from that meeting now underway. And Bloomberg learns that KKR is considering an investment in Nissan after talks on a merger with Honda are officially declared dead.
And we're awaiting a press conference right now by President Trump and the Prime Minister Narendra Modi of India. This is the first time that the two leaders have met in 5 years. And just coming hours after President Trump already ordered his administration to consider imposing reciprocal tariffs. And of course, we know that President Trump has been criticizing India on the campaign trail, calling it a very big abuser of its trade ties with the U.S. The U.S. has a more than $40 billion trade deficit with India. So we'll continue to watch these developments and bring you that live press conference as it happens, Heidi.
Sherry, we've got some interesting numbers crossing the Bloomberg when it comes to the labour market in South Korea. And as you would well know, we saw that big jump in the jobless rate in December, and that was really quite worrying, particularly with some of the other headwinds facing the economy. We've seen that come down quite significantly, that January adjusted jobless rate falling to 2.9%. Estimates had been for 3.2%, but certainly that is a steep decline from the December number of 3.7%. 135,000 jobs added in January compared to a year earlier. We see labour force participation coming in at 63.4%. And when it comes to the participation for population over 15 years old, that increased 0.4% from a year ago as well. So that really came down from the December levels, which was the highest in over 3 years, with a big loss in contraction that we saw in the labour market there, with a number of factors, including that martial law row, the airline crash, ongoing political turmoil all at play. But that seems to be stabilising largely on account of government job support that we saw as well. So we need to watch, because it does seem like labour market demand in the private sector probably still remains weak in this picture, Sherry.
And we have breaking news also out of Peru, Heidi. The central bank has left the reference rate at 4.75% as widely expected. Now, the central bank saying that Peru's inflation will be approaching 1% in the coming months. In fact, Peru does have the lowest inflation and the lowest key rate among all of Latin America's largest economies. And we're now seeing the central bank keep the rate unchanged at 4.75% as expected. Of course, we're on really central bank watch across the board. Take a look at how we're setting up in the Asia session, and we're really reacting to what's happened overnight in the U.S., where stocks rose and big tech outperformed. The Japanese yen gained on the overnight session. It had its safe haven appeal, of course, at the moment, holding at that 152 level against the U.S. dollar. But in Japan, we'll be watching the 10-year JGB yield, which has now touched the highest since 2010. A lot to do with producer prices rising at the fastest clip in 19 months, something that we'll be watching in the U.S. as well, because take a look at U.S. futures, because we saw those gains in the stock markets, but treasuries also rallying and rebounding with the 10-year yield falling towards that 450 level. January producer price data topping estimates on food, energy prices, but at the same time, some elements of that PPI data now suggesting that the Fed's preferred gauge of inflation, which comes out later in the month, will be more benign than what we saw in that hot CPI print, Heidi.
And that storm cloud over that broader inflationary environment, Sherry, obviously is what happens when it comes to tariffs from the Trump administration, right? And we have heard this encouragement for President Trump's move to consider reciprocal tariffs on trading partners, which then raises the prospect of a wider campaign against the global trading system. Take a listen.
Reciprocal tariffs, those two words. Reciprocal makes tariffs really fair.
All countries, there'd be no exemptions, right? It would be all auto imports?
Any exemptions now, because you don't need to.
And of course, when it comes to tariffs, this is also a key point when it comes to that relationship between India and the US. We see PM Modi there about to begin this press conference with President Trump. Let's take a listen.
Minister, it is a pleasure to extend to you the same hospitality that you showed Melania and myself when we traveled to your beautiful country 5 years ago. It's hard to believe so long ago, and it seemed like yesterday. It was beautiful. We opened the cricket stadium, 129,000 seats, I think the largest stadium in the world, and it was an incredible period of time. There is truly a special bond between the United States and India, the world's oldest democracy and the world's largest democracy. And I believe the world's largest country in terms of the numbers of people. And today the Prime Minister and I are announcing a framework to strengthen those.
ओके नेचुरल गैस में देखो एक सेलिंग का ट्रेड यहाँ पर है, थोड़ा रिस्की है, मिडिल ऑफ द लेवल, वैसे ट्रेड लेना नहीं चाहिए, बट साइडवेज चल रहा है मार्केट, तो एक बना रखा है. ट्राई करोगे तो बहुत कम क्वांटिटी के साथ ट्राई कर सकते हो, क्योंकि लेवल आने में बहुत टाइम लग जाएगा. अदरवाइज थोड़ा रिस्की है तो क्वांटिटी कम ही रखना, और रिस्क नहीं ले सकते हो तो फिर बिल्कुल अवॉइड करना. ठीक है, थोड़ा सा रिस्की है, मिडिल ऑफ द लेवल ट्रेड है इसलिए. यस रिस्की है, इसलिए पहले ही बता रहा हूँ. अवॉइड करना है तो अवॉइड भी कर सकते हो, बट ले रहे हो तो बहुत कम क्वांटिटी में लेना. बाकी अगर लेवल पे आएगा तो तब देखेंगे, अभी फिलहाल लेवल पे है नहीं प्राइस, तो कुछ कर नहीं सकते बीच में. इस रिस्की ट्रेड के अलावा या तो वेट ही करना पड़ेगा. ठीक है, जो थोड़ा सा रिस्क लेते हैं उन्हीं के लिए है ये. नहीं लेते हो तो फिर अवॉइड भी कर सकते हो, ऐसा नहीं कि लेना ही है. लेवल पे आएगा तब एंट्री करोगे, ज़्यादा बेटर रहेगा. कि वॉल्यूम बहुत कम है फिलहाल के लिए नेचुरल गैस में. 15 मिनट टाइम फ्रेम पे देखोगे तो
Size even further economically, and the U.S.-India Compact for the 21st century is a historic initiative that will deepen every aspect of our partnership and our friendship. Starting this year, we'll be increasing military sales to India by many billions of dollars. We're also paving the way to ultimately provide India with the F-35 stealth fighters. In 2017, my administration revived and reinvigorated the Quad security partnership. In our meeting today, the Prime Minister and I reaffirmed that strong cooperation among the United States, India, Australia, and Japan, and it's crucial really to maintaining peace and prosperity, tranquility, even in the Indo-Pacific. In addition, the United States and India will be working together like never before to confront the threat of radical Islamic terrorism, a threat all over the world, actually. Today, I'm pleased to announce that my administration has approved the extradition of one of the plotters and one of the very evil people of the world, and having to do with the horrific 2008 Mumbai terrorist attack, to face justice in India. So he's going to be going back to India to face justice. As we deepen our defense partnership, we'll also strengthen our economic ties and bring greater fairness and reciprocity to our trading relationship. As a signal of good faith, Prime Minister Modi recently announced the reductions to India's unfair, very strong tariffs that limit U.S. access into the Indian market very strongly, and really it's a big problem, I must say. India imposes a 30 to 40 to 60 and even 70% tariff on so many of the goods, and in some cases far more than that. And as an example, a 70% tariff on U.S. cars going into India, which makes it pretty much impossible to sell those cars. Today, the U.S. Trade deficit with India is almost $100 billion, and Prime Minister Modi and I have agreed that we'll begin negotiations to address the long-running disparities that should have been taken care of over the last 4 years, but they didn't do that, in the U.S.-India trading relationship, with the goal of signing an agreement. And we want, we want a certain level playing field, which we really think we're entitled to, and he does also, in fairness. So we're going to work on that very hard, and we can make up the difference very easily with the deficit, with the sale of oil and gas, LNG, of which we have more than anybody in the world. The Prime Minister and I also reached an important agreement on energy that will restore the United States as a leading supplier of oil and gas to India. It will be hopefully their #1 supplier. In the groundbreaking development for U.S. nuclear industry, India is also reforming its laws to welcome U.S. nuclear technology, which is at the highest level, into the Indian market. This will bring safe, clean, and affordable electricity to millions of Indians and tens of billions of dollars to the U.S. civilian nuclear industry in India. And under the framework we are announcing today, the United States and India are also joining forces to ensure that artificial intelligence and other advanced technologies are developed by the two of the most, really two of the most advanced nations, intellectually and otherwise technologically, anywhere in the world. There's nobody very much closer. We have an incredible relationship there, and this is where it seems to be heading. And artificial intelligence, a very complex subject, but it seems to be where people want to be and they want to go, and we're leading right now by a lot, but other people will try to catch us. I don't know if they're going to be able to. We're going to make it available. We're going to make tremendous amounts of electricity available. We're going to let the people that are buying the electricity make their own electric plants, electric generation plants. And we've never done this in our country, but we're going to get it done very quickly. Lee Zeldin and his group are going to get the approvals in very rapid form, and we're calling it a national emergency, and that's exactly what it is. So we're going to remain at the top of the AI, or artificial intelligence, I think, for a long time to come, and we're going to be working very closely with India and other countries on that. but right now we're the leader by quite a bit. Finally, we agreed to work together to help build one of the greatest trade routes in all of history. It will run from India to Israel to Italy and onward to the United States, connecting our partners by ports, railways, and undersea cables, many undersea cables. It's a big development. It's a lot of money going to be spent, and we've already spent some, but we're going to be spending a lot more in order to stay advanced and stay the leader. I'm pleased to report that with today's announcements, the friendship between the United States and India is the strongest I believe it's ever been. I think our relationship is the best it's ever been between two leaders of the two countries, and it's an honor to say that. I'd like to now invite the Prime Minister to say a few words, and then we'll take some questions, and we appreciate you all being here. Thank you very much. Thank you very much.
President Trump, delegates of both countries, friends from the media, Namaskar. I would like to, first of all, express my heartfelt gratitude to my dear friend, President Trump, for the grand welcome and hospitality accorded to me. President Trump's leadership has been instrumental in nurturing India-US ties and making them vibrant. I could feel today the same enthusiasm, the same energy, the same commitment that we had worked with during our first term. Our discussions today highlighted our pride in our accomplishments during his first term, the deep mutual trust that we share, and also the resolve to attain new goals. We also agreed that the partnership and cooperation between India and the US can shape a better world. Friends, the people of America are aware of President Trump's motto, "Make America Great Again," or MAGA. The people of America are well aware of it. The people of India, too, are focusing on both heritage and development as they move forward at a fast pace and with a firm resolve to ensure a developed India by 2047. If I were to say this, borrowing an expression from America, our vision for a developed India is to make India great again, or MEGA. When America and India work together, that is, when it's MAGA plus MEGA, it becomes MEGA, a mega partnership for prosperity. And it is this mega spirit that gives new scale and scope to our objectives. Friends, today we have also set ourselves the target of more than doubling our bilateral trade to attain $500 billion by 2030. Our teams will work on concluding very soon a mutually beneficial trade agreement. In order to ensure India's energy security, we will focus on trade in oil and gas. Investment in energy infrastructure will also increase. In the area of nuclear energy, we also discussed increasing cooperation on small modular reactors. Friends, America plays an important role in India's defense preparedness. As strategic and trusted partners, we are moving forward actively towards joint development, joint production, and transfer of technology. In the times to come as well, new technologies and equipment will enhance our capacities.
We have decided to launch the Autonomous Systems Industry Alliance, and a defense cooperation framework for the next decade will be prepared. Defense interoperability, logistics, repair, and maintenance will also be its key components. Friends, the 21st century is a technology-driven century. Close cooperation in the area of technology between countries that believe in democratic values can give new direction, strength, and opportunities to the entire humanity. India and the US will jointly work in areas of artificial intelligence, semiconductors, quantum, biotechnology, and several other technologies. Today, we also agreed on trust, which stands for transforming relationships utilizing strategic technology. Under this, our focus will be on establishing strong supply chains for critical minerals, advanced materials, and pharmaceuticals. We have also decided to launch a recovery and processing initiative for strategic minerals like lithium and rare earths. We have had close cooperation with the US in the area of space. The NISAR satellite, developed with mutual cooperation between ISRO and NASA, will soon be flying into space on an Indian launch vehicle. Friends, partnership between India and the US strengthens democracy and strengthens democratic values and systems. We will work together to enhance peace, stability, and prosperity in the Indo-Pacific. The Quad will play a special role in this. During the Quad Summit, scheduled to be held in India this year, we will expand cooperation in new areas with our partner countries. Under the IMEC and I2U2, we will work together for the development of economic corridors and in the area of connectivity. India and US will stand strongly together in the fight against terrorism. We agree that in order to eliminate cross-border terrorism, we need concrete actions. And I'm very grateful to President Trump that In 2008, somebody who carried out genocide in India, that criminal is now going to be handed over to India, and I'm grateful to President Trump for this. And appropriate action will be taken in the courts in India. Friends, the Indian community living in the U.S. is an important link in our relations. In order to further deepen our people-to-people ties, India will soon open new consulates in Los Angeles and Boston. These will be new consulates. We have invited American universities and educational institutes to open their offshore campuses in India. President Trump, I am grateful to you for your friendship and strong commitment towards India. The people of India still fondly remember your visit in 2020 and hope that President Trump will come and visit them again. On behalf of 1.4 billion Indians, I invite you to visit India. Thank you. Thank you very much.
Thank you very much. Okay, thank you very much. That was excellent. We'll do a few questions, please. Please, go ahead. Please, go ahead. Yeah, blue shirt.
Thank you, Mr. President. People in India will naturally welcome your decision to extradite Thakur Rana to India back home. In that context, I would like to ask you a question about, in the last few years, we have seen several groups in the U.S. raising anti-India voice, calling about separation, terrorism activities in India. Do you think that should continue here in the U.S. as well?
You're going to have to go louder.
Mr. President, people in India would be welcoming your decision to extradite Thakur Rana to...
I can't understand what you're saying. It's not the accent. It's a little bit tough for me to hear. How about you, please? Go ahead, back there.
Mr. President, thank you. First, I want to ask
thank you very much.
A question. You and the President, you both spoke about combating ISIS. You both sounded very excited about this partnership upcoming. And I was curious, how much more confident are you with President Trump leading this country that there will be peace through strength and you will have a successful partnership with the United States versus with Biden's incompetence and weakness over the last 4 years?
That's your question, but I'll answer it. I agree with you. Gross incompetence. We're going to have a fantastic relationship, and it has been, look, the whole world's been set back over the last 4 years by the weakness of the United States, the weak leadership of the United States, but I think we've taken care of it in just 3 weeks. It seems to me that even some of the media that we wouldn't prefer has been writing that this is a much different country right now, that the world has a light over it, not only our country, but the whole world. The Prime Minister told me that before, too, even over India. The world has a light. They need the United States to be strong and powerful, but good. And I think that's happened, and I think it's happened in a very short period of time. But I will tell you, we're going to have a fantastic relationship, and it'll make both countries much stronger.
Mr. President, I have a question in Bible.
Okay, Geeta Mohan from India Today, sir. I'll just take my colleague Lalit Jha's question forward because you can understand.
Okay, fine.
The question is about the fact that you've decided to extradite Thakur Rana. Thank you so much. India has been waiting to have him back in India to bring him to justice. But there are many other elements in the United States of America, particularly Khalistani separatists who've been working against Indian interests. How is the United States of America going to cooperate on that front with India There have been allegations that have been leveled against Indian agencies by the Biden administration. Are you going to relook that with Tulsi Gabbard as DNI now?
Well, I don't think India had a very good relationship with the Biden administration. They wouldn't sell them oil and gas, which is rather hard to believe because it's a good thing to do. And a lot of things happened that weren't very appropriate, I thought, between India and the administration, the Biden administration. But as you said, we're giving a very violent man, it seems to me. I mean, I don't know that he's been convicted yet or will be, but let's assume he's a pretty violent person. We're giving him back to India immediately, and there are more to follow because we have quite a few requests. So we work with India on crime, and we want to make it good for India, and it's very important. So that kind of a relationship is very important to us. Okay? Go ahead, please. Go ahead.
Thank you. Mr. President, you've repeatedly called India a big abuser of trade and said it is really difficult to do business in India because of tariffs. You announced reciprocal tariffs today. I am hoping you can speak about what kind of reciprocal tariffs India can expect. Are you willing to make any concessions? And how can India head off these tariffs? I also have one for the Prime Minister.
Well, India's been, to us, just about the highest tariffed nation anywhere in the world. They've been very strong on tariffs. I don't blame them necessarily, but it's a different way of doing business. It's very hard to sell into India because they have trade barriers, very strong tariffs. We are right now a reciprocal nation. We are going to, if it's India or if it's somebody else with low tariffs, we're going to have the same. We're going to have whatever India charges, we're charging them. Whatever another country charges, we're charging them. So it's called reciprocal, which I think is a very fair way. We didn't have that. I was going to do that in my other term, but we had the greatest economy ever in the world. There's never been an economy like we had, and then we got hit with COVID. We had to focus on that, and I wasn't really in the mood to be putting it on Italy and Spain and France and India, frankly, and a lot of other countries, because the world was very troubled until we got rid of that nightmare. But we had the strongest economy anywhere in the world during that fairly long period of time during my first term, as you know, and we didn't do the tariffs. We would have done the reciprocal tariffs, but we decided, and I decided, I think on a human basis, on a humane basis, not to do them because of the fact that there was such suffering all over the world. The last thing we needed to talk about is trade problems. But now we do. We're doing, we see a tremendous future for our country, but we felt that now it's finally time, after 45 or 50 years of abuse, that we will do, and this isn't India, this is among a lot of nations. The European Union is very difficult for us, very, very difficult. They tax our companies at levels that nobody's ever seen before. They take advantage of a lot of things, so we're not happy about that. China, of course, is terrible, and we've never taken in 10 cents until I was president. We've taken in hundreds of billions of dollars from China since I've been president in the first term and now. And we have to do that just as a mechanism of fairness. And that's what I've done. And so we are being reciprocal with India. Whatever India charges, we charge them. So frankly, it no longer matters to us that much what they charge, because whatever they charge. I had discussions with India in the first term about the fact that their tariffs were very high, and I was unable to get a concession. So we're just going to do it the easy way. We're just going to say whatever you charge, we charge. And I think that's fair for the people of the United States. And I think it's actually fair for India. Okay? Please. Ask to the Prime Minister.
A question for the Prime Minister, please.
Ask to the Prime Minister, please.
Sorry. Yoshita Singh with Press Trust of India. Prime Minister, thank you, Mr. President. Prime Minister, the U.S. is giving a lot of push to curb illegal immigration, and India has been cooperating on this issue. How does India see this issue in the larger context? Thank you.
This is a question that is about India only, but even globally you can talk about this issue. And we are of the opinion that anybody who enters another country illegally, they have absolutely no right to be in that country. And as far as India and the US is concerned, we have always been of the same opinion, and that is that any verified Indian who is in the US illegally, we are fully prepared to take them back to India. However, it doesn't stop there. These are children of very ordinary families, and they are lured by big dreams and big promises. A lot of them are brought in without them knowing about why they're going to a country. And in fact, they are connected with a human trafficking system, and we have to make sure that we fight against this system. As far as the US and India is concerned, I think what we should do is make efforts to make sure that we uproot these from within the system, so that we can reduce or remove human trafficking. And basically, the young, vulnerable, poor people of India are fooled into coming over as illegal immigrants. And our bigger fight actually is against this ecosystem or this system that encourages such gangs to thrive. And I can tell you that India will completely support.
Thank you, Mr. President. The question for the Prime Minister Modi first, if I may. I wanted to ask you, did you discuss any possible business deals with Elon Musk during your meetings today, Mr. Prime Minister? And Mr. President, I wanted to ask you, today you spoke about hoping to have three-way talks with President Xi and President Putin. What would you say to European leaders and other allies who may be concerned that you're apparently more keen to speak to America's adversaries than to its allies? Thank you.
Maybe I'll just go first on this one. We had some talks, and we told the European Union, we told the NATO people, largely they overlap, you have to pay more money because it's unfair what we're doing. We're doing a tremendous amount more. We're probably $200 billion more going into Ukraine, using for Ukraine to fight. And Europe has not really carried its weight in terms of the money. It's not equitable. And we want to see a counterbalance. We want to have them put up more money. They have to do that. At the same time, we had a very good conversation with President Putin yesterday, and we also had a very good conversation. I did in both cases, with President Zelensky. And I think we're going to be able to do something. I think we're going to be able to make a deal. And I hope so, because it's a horrible war. It's a very terrible, bloody war with 1.5 million soldiers at least already dead on the battlefield, lying all over the fields like nobody's ever seen anything like it, certainly since the Second World War. And so I think we're going to be able to do something. We're working with President Zelensky and with President Putin, and my impression is that I know that President Zelensky wants to make a deal, and I also feel that I know that President Putin wants to make a deal. I wanted to know that before I began any detailed discussions, but the meeting and the conversation, also the meeting with Steve Witkoff in Moscow, was a very successful one, and my phone call with him was a very successful one. Please.
You asked a question regarding Elon Musk. I have known him for a very long time. I was not even Prime Minister at the time when I first met him. I was Chief Minister. And today he came to meet me along with all his family, with his children. And so we had a nice discussion. As far as EVs are concerned, the word EV has a copyright, and that is one person who has a copyright for the word EV, and that is Trump.
Thank you, Mr. President. Can I ask whether you discussed at all today the case of Gautam Adani, who's one of the wealthiest men in Asia and perceived as an ally of Prime Minister Modi? Prime Minister Modi, have you asked the President to take action on that case? Thank you.
India is a democratic country, and our culture and our thought philosophy is Vasudhaiva Kutumbakam, which basically means that the entire world is a family. Every Indian is my own family member. And when it comes to such personal matters, leaders of two countries will not get together on the topic and discuss anything on an individual matter.
Go ahead, please. Yeah, please. Sir, go ahead, please.
Yes. Thank you, Mr. President. Thank you, Mr. Prime Minister. I have a question for you as well. But, Mr. President, you have suggested, with regards to the Russia-Ukraine war, you've suggested several things that Ukraine should give up. The idea of NATO membership, territory that was seized back in 2014 by Russia. What should Russia give up?
Russia has gotten themselves into something that I think they wish they didn't. If I were president, it would not have happened. Absolutely would not have happened. And it didn't happen for 4 years. If you look at what has taken place under President Bush, they lost a lot. Under President Obama, they lost Crimea. Under Biden, it looks like they could lose the whole thing. Under Trump, they lost nothing. Ukraine lost nothing. They didn't give up anything. And you take a look at the other three presidents surrounding me, they gave up a lot. I think that when you look at Ukraine and when you look at the mess that they're in, it's got to be ended and it's got to be stopped. Now, Russia's taken over a pretty big chunk of territory, and they also have said from day one, long before President Putin, they've said they cannot have Ukraine be in NATO. They said that very strongly. I actually think that that was the thing that caused the start of the war. And Biden said it, and Zelensky said it, and I think that was one of the reasons, one of the starts of the war. But from long before Putin, they said you cannot have Ukraine going in any way into NATO. And I start from that standpoint. I think everybody knew that. Now, if a better deal can be negotiated, if they're able to make a deal where they can do that, that's fine with me. I really don't care. I want that bloodshed to stop. I don't want to see, we have an ocean between us and the site we're talking about, the site of death. We're calling it the fields of death. We have a big ocean in between us. This is more important for Europe. We shouldn't be in. They have to equalize, and they're going to have to do it fast, but they have to equalize. But as far as the negotiation, it's too early to say what's going to happen. Maybe Russia will give up a lot. Maybe they won't. And it's all dependent on what is going to happen. The negotiation really hasn't started. But I will say, as far as NATO is concerned, from many years before President Putin, I will tell you that I've heard that Russia would never accept that. And I think Ukraine knew that, because Ukraine wasn't in and never requested to be in until more recently. So that's the way it is, and I think that's the way it's going to have to be. Go ahead, please, with the time.
Mr. President,
yes, go ahead.
This is Saurabh Shukla from News Mobile. Mr. President, you spoke about Prime Minister Modi as a tough negotiator. Who was a tougher negotiator today, and who has a better negotiating tactic when it comes to tariffs?
Oh, he's a much tougher negotiator than me, and he's a much better negotiator than me. There's not even a contest. Okay? Yeah, go ahead, please. Go ahead.
Reena Bhagwat from ANI. How do you see this relationship between India and the United States to counter China? And what is your vision when it comes to India, brokering peace in the Ukraine and Russia conflict?
Well, I think we're going to have a very good relationship with China. I got along with President Xi very well until COVID. That was a bridge too far. But until then, I got along with President Xi very, very well. We were very close as leaders go. I don't want to be naive, but as leaders go, I think we were very close. And I think that China is a very important player in the world. I think they can help us get this war over with Ukraine and Russia. And I look at India, I do see the skirmishes on the border, which are quite vicious, and I guess they continue to go on. If I could be of help, I'd love to help, because that should be stopped. That's been going on for a long time, and it's quite violent. It's quite violent, but I would hope that China and India and Russia and U.S. and all of us can get along. It's very important. You know, the power of weaponry today is, and not only nuclear, but nuclear in particular, the power of weaponry is very important. I said before that I had very constructive talks in my first term with President Putin about the denuclearization of the two countries, and then we were going to go to China after we worked some kind of a deal. And we had the confines of a deal. I thought he really wanted to do it, so did I, denuclearize. And it's such a beautiful term when you think about it. In other words, to bring it down, because the power of those weapons is too great. And I did speak to President Xi about that, and I was getting also a very good response. He's building a very strong nuclear power. He's not very close to Russia or the United States right now, but he will be soon. I mean, he'll catch up over the period of 4 or 5 years, they say. But it would be a great thing if we could, on a military basis. We're going to spend this year let's say $915 billion on military. Russia, without the war, was spending close to 100, but with the war, I can't tell you what they're spending, but they're spending a lot. And China's spending $400 and $450 billion. We're over $900 billion. And I said, you know, it doesn't really make sense, does it? We're spending the money against each other, and we could spend that money for better purpose if we got along. And I'll tell you, I think that something like that will happen. First, when I left, as you know, 4 years ago, we didn't have Israel and the Middle East. We didn't have October 7th, a disaster, the disaster. Nothing was happening. Iran was not going to do anything, because Iran did not have much money at that point. They were broke. They were totally broke. They didn't have money for Hamas or for Hezbollah. And you didn't have Russia with Ukraine, and that would never have happened. But now I come back, and the whole world is on fire, so I have to put out the fires. But after I put out the fires, I'm going to meet with China, and I'm going to meet with Russia, and we're going to see if we can de-escalate it. We can bring it down military, especially as it pertains to nuclear. Please.
Prime Minister, how do you see India's role? You have had discussions with President Trump about de-escalating the conflict in Russia and Ukraine. As you know, I have been in constant contact with both Russia and Ukraine. I have also visited both countries, and many people are mistaken and they feel that India is neutral. I would like to clarify, India is not neutral. We have taken a side, and we have taken the side of peace. And it is based on this principle of ours that in the presence of President Putin, I clearly said in front of the media that this is not the era of war. And even today, it is my conviction that solutions cannot be found on the battlefield. Ultimately, you have to come to the negotiating table. And India has constantly made efforts that there are talks that take place where both parties are present. It is only then that we will find a solution. The efforts
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons, and we take you now to the Oval Office, where just moments ago, President Donald Trump met with Prime Minister Narendra Modi, answering questions from the press. We hear the Prime Minister, who is answering through a translator, and we'll listen in now.
Howdy Modi और गुजरात में अहमदाबाद में नमस्ते ट्रम्प, वो दो एक ऐसी बहुत बड़े विशाल कार्यक्रम रहे जिसकी गूंज आज भी भारत के हर कोने में सुनाई दे रही है.
I'm happy that as soon as I entered this room, my friend reminded me of Ahmedabad and the cricket stadium where we held the big rally, and the events that we did, the mega events that we did in Ahmedabad, Namaste Trump, or the Howdy Modi in Houston. We had conveyed a very strong message of our friendship through those events, and the resounding echo of those events can be heard even today in India and the world.
भारत अमेरिका संबंधों को प्रगाढ़ बनाने में, उसको एक नई ऊंचाई देने में और व्यापकता देने में राष्ट्रपति ट्रंप की पहली टर्म की बहुत बड़ी भूमिका रही है, और मुझे विश्वास है कि दूसरे टर्म में भी हम उसी गति से आगे बढ़ेंगे.
Excellency, you made immense personal contribution towards strengthening of our relations, towards making them more comprehensive, and in attaining unprecedented heights in our relationship. And I firmly believe that in your second term, we will work with even more speed.
और मैं जैसे भारत के नागरिकों को वादा किया है कि मैं तीसरे टर्म में 3 गुना गति से काम करूंगा, और मुझे विश्वास है कि राष्ट्रपति ट्रंप के साथ आने वाले 4 वर्ष हम भारत अमेरिका के संबंधों की गति में 2 गुना गति से काम करेंगे.
As I had promised to the people of India that in my third term as the Prime Minister of India, we will work with thrice the speed. I firmly believe that with President Trump during the next 4 years, during his second term, we will work with twice the speed that we did in the first term.
मैं राष्ट्रपति ट्रंप से एक बात हमेशा अप्रिशिएट करता आया हूं, सीखता आया हूं कि वे राष्ट्रहित को सर्वोपरि रख करके काम करते हैं. राष्ट्रपति ट्रंप की तरह मुझे भी भारत के हितों को सर्वोपरि रखते हुए कार्य करना ये मेरे लिए सौभाग्य की बात है.
One thing that I deeply appreciate and I learned from President Trump is that he keeps the national interest supreme, and like him, I also keep the national interest of India at the top of everything else, and this has been my real fortune.
राष्ट्रपति ट्रंप की जब भी बात आती है तब मेक अमेरिका ग्रेट अगेन हर किसी को याद आता है, हर किसी को उससे प्रेरणा मिलती है. वैसे ही भारत में विकसित भारत 2047, जब भारत की आजादी के 100 साल होंगे, तब तक भारत को विकसित बनाने के संकल्प के साथ 140 करोड़ देशवासियों का संकल्प, उसको आज नई गति मिल रही है, नई ऊर्जा मिल रही है.
President Donald Trump and Make America Great Again are inseparable. Whenever we talk about President Trump, one has to talk about Make America Great Again. Similarly, that vision inspires everybody. Similarly, in India, we have the resolve of 1.4 billion people of India that by the time India reaches the 100th anniversary of its independence, we will make our country a developed country by 2047. And this is getting new speed and new resolve.
America विश्व का सबसे पुराना लोकतंत्र, भारत विशाल लोकतंत्र, और इसलिए हम दोनों का मिलने का मतलब 1+1 2 नहीं, 1 और 1 11 होता है, और ये 11 की शक्ति, वो ताकत विश्व के कल्याण के भी काम आएगी.
US is the world's oldest democracy, and India is the world's largest democracy. So when India and the US come together, they make 1+1 11 and not 2. And this is the power of 11 that is going to work for the welfare of the humanity.
मैं राष्ट्रपति ट्रंप का मेरे एक अच्छे मित्र का हृदय से आभार व्यक्त करता हूं कि हम फिर से एक बार प्रगति की राह पर नई ऊंचाइयों को छूने के लिए चल पड़ेंगे.
I once again thank my friend President Trump, and we together resolve that we will together march towards progress and towards prosperity for our nations.
Thank you.
Thank you.
Thank you very much. He's doing a great job in India. Everybody talks about it. He's doing a really fantastic job. A great leader. Great leader.
मोदी जी बहुत अच्छा काम कर रहे हैं भारत में और हर कोई इसकी बात कर रहे हैं कि वे बहुत बड़े नेता हैं, बहुत महान नेता हैं.
मैं आपका बहुत आभारी हूं आपके इन शब्दों के लिए और मुझे विश्वास है कि भारत का हर नागरिक आपकी इस भावना का आदर करता है.
I thank you for your warm words, Mr. President, and I firmly believe that every person in India respects your sentiments.
Thank you. Thank you very much.
Thank you. Thank you.
Any questions, please?
Yes, President. You are both very popular leaders in your respective countries. You have spoken about a common sense diplomatic doctrine. So what's a Trump-Modi doctrine that we should expect from the meetings today to make our world better and safer?
Well, I think more than anything else will be the unity. We have great unity. We have great friendship, he and I and our countries. And I think it's only going to get closer. But it's very important that we remain united as countries. We're friends and we're going to stay that way.
President Trump, how are you going to fight China if you're going to be tough with India on trade? How are you going to beat China?
That's President Trump and India's Prime Minister Narendra Modi at the White House in the Oval Office, where they are now going to go behind closed doors. We just wanted to put an ear on that for you and get a sense of the start of that conversation. The pair are expected to try to lay the groundwork here for a trade agreement and discuss ways to strengthen cooperation on defense, on energy, and, of course, talk tariffs. The meeting coming as President Trump made a big announcement on reciprocal tariffs earlier today. And joining us now for more on all of this, Bloomberg's Courtney McBride. Courtney, it's great to have you. As we watch the Prime Minister now, the fourth bilateral meeting with a foreign leader since this new president took office just a couple of weeks ago. What will they have to show for it?
Well, President Trump and Prime Minister Modi do have an existing relationship. As the president just said, it's a positive one. Mm-hmm. And India stands certainly to face some challenges from a tariff fight. So certainly they're going to work hard to, I think, to find a mutually beneficial resolution of that. Yeah. But even dating back to the previous administration, the U.S. has really been trying to boost India's purchases of U.S. defense articles. And so, we could see potentially some agreements on things like that as well.
Well, and as we consider tariffs here, we want to bring Bloomberg's Enda Curran into this conversation, too, because it is noteworthy. India is one of the many countries, a lot of them developing and lower income, that have high tariff rates on the United States, 10% plus on average. So what does the timing really mean here, considering this visit is happening on the same day this announcement is made?
Well, it's maybe both awkward and possibly good fortune for India all in one. We had a big announcement over reciprocal tariffs, of course, in key trading partners. And India, above many other economies, has the most to lose because it does have high tariffs. It does have a lot of non-tariff barriers entrance to doing business with India as well. That's why they will be in the crosshairs of this. Now, the President has said there will be exemptions for anyone. It will be interesting to see whether or not Prime Minister Modi can plead his case here. The Indian government has already responded by bringing down tariffs on some of the goods they buy from the US. But on paper here today, India is among those countries with the most to lose with these new tariffs.
So with that said, there was a thought, an expectation maybe that the Prime Minister would show up with a bit of a gift for Donald Trump and maybe kind of head off the conversation here by lowering tariffs against the U.S. They're going to have a bilateral news conference later. Will we hear something like that?
It may depend on what they can really agree to. Mm-hmm. But, the president prides himself on making good deals. And so I think he may want to tout that if he's able to come to agreement with the Prime Minister.
Well, so it becomes a question of whether other countries can do the same. And if not, Enda, do we have a sense on what the economic toll of this could be for the U.S. or for these other economies that we're talking about?
Well, it's early days. This is going to be a very technical process. It's going to be a complicated process. The evaluation will be done by April 1. But on paper, it's the biggest kind of escalation of the trade war since President Trump first won office to begin with. Remember, it's not just matching tariffs or tariffs. It's going beyond that. He's talking about exchange rates, industrial subsidies, IP protection. There are all kinds of different areas where President Trump says we're going to have to put a price on the goods that we're buying from you. So as I say, we don't know the figures yet. On paper, it could be expensive. We'll have to see what kind of negotiations come out of it.
That's right. And as we mentioned, there will be a news conference later in the evening. At this point, we're a bit off schedule, but we'll let you know what happens when Donald Trump and the Prime Minister of India emerge. Bloomberg's Enda Curran, thank you so much. And Courtney, thank you so much as well. This is Balance of Power. I'm Joe Matthew in Washington, alongside Kaylee Lyons. Kaylee, we're also watching both ends of Pennsylvania Avenue today with, of course, a budget debate getting underway in the U.S. House. It's almost a race between the two chambers at this point with a markup that starts today.
Yeah, in the Budget Committee specifically after a blueprint was released that calls for trillions of dollars in spending cuts, in addition for trillions more in headroom to cut taxes. And this is something we spoke about with a member of the Budget Committee, Republican Congressman Ralph Norman of South Carolina, earlier.
The base budget I voted to get out of committee. We had the timeline to meet, which is today, for the markup, which we're doing. To be honest, I'm confident that we're going to have the amendments in place that will get the job done. I think we're going to get there. I think it's important for us to get our own version out. I know the Senate is working on one, but you know, all the House is responsible for the purse strings. So I'm confident we'll get it out.
And joining us now is a colleague of his on the House Budget Committee panel. Republican Congressman Tim Moore of North Carolina is live with us from Capitol Hill. Congressman, thank you so much. As far as we know, this is still well underway. So could you give us, please, a status update? Do you have to work all night?
Absolutely. Thanks. It's great to be with you. Actually, we're meeting just behind me down this hall. The Budget Committee is meeting through what's called the markup. We started around 10 o'clock this morning, and we're now into considering amendments. We'll actually probably start taking the formal votes here in just a couple more hours. But a lot, the Republicans are united on this committee, and we're frankly trying to lay out the facts as to why Democrats who want to get rid of waste, fraud, and abuse really should join in with us in voting for this bill.
There's been a lot of questions about actual Republicans on that committee, though. Congressman Chip Roy and Ralph Norman, who we just heard from and had a long conversation with on the early edition of Balance of Power, suggesting some real concerns about the level of spending cuts that are going to be presented in this budget. $1.5 trillion, some say $2 in cuts, $4.5 trillion cap on tax cuts, a $4 trillion extension of the debt limit. Can that pass your committee in the current form?
I do believe it will pass the committee in its current form because it is very fiscally responsible. We are finding all sorts of waste, fraud, and abuse in the budget, from prior spending. I think with what the DOGE committee has found, that's just the tip of the iceberg. You look at a lot of these programs that just go untouched and unaccounted for years and years. The American people want to make sure this money is being spent wisely. And so I think we can really put a fine point to this and deal with this now. And Democrats are trying to make a lot of baseless claims about cutting, benefits from Medicare. That's not happening. This is not going to hurt anyone getting Medicare, but it is going to get rid of a lot of the overcharge and a lot of the fraud that's out there. We know there's people who may not even be alive that payments are still being made for. So we're going to try to really deal with this and just try to, for once, run government like a business.
Well, are there, though, trillions of dollars worth of that waste, fraud, and abuse you speak of, Congressman? Because the other factor we have to consider here is if you want to get everything Donald Trump wants in terms of no tax on tips or overtime, lifting the SALT cap, there's going to have to be more pay-fors for those things with the current restrictions. And I just wonder what exactly you think you can tap beyond just identifying fraud that is out there, because surely it's going to have to go beyond that.
Well, we're looking at about $2.7 trillion in waste, fraud, or abuse. So we have waste, again, some of the examples of USAID, where we're paying for just these ridiculous programs in other countries pushing some woke agenda. We don't need to be doing that. We need to be taking care of Americans. And I'm going to tell you something. This is personal for me. I represent Western North Carolina, which was hit so hard by Hurricane Helene. And when I found out that FEMA was going to pay, $59 million to house illegal immigrants in New York, and at the same time we're telling people that I represented that they had to get out of their hotels when they had nowhere else to go. Those are just anecdotal exhibits or anecdotal examples. But to your point, we're identifying $4.5 trillion through the tax cuts. The other part that we're anticipating is 2.6% on the growth. We think we actually think we'll exceed that. 1.5 to 2 trillion in terms of the cuts that'll get there. And then the other part is going to be the economic prosperity that happens. We've shown when we cut taxes in America, it spurs the private sector. It spurs more income. And to that point, back in 2017, when the initial TCJA passed, it exceeded projections of revenue by nearly $1 trillion. I think we'll see this top that as well.
Congressman, in 29 days, we hit a funding deadline. Can you stomach voting for a continuing resolution if negotiations are underway on a real budget?
I would like to see us vote on this budget to get it done. But if we need to buy time, short time with a CR, absolutely. And look, that's why we dealt with the debt ceiling in this bill, because we know that, we didn't get here as a country in just a few months. This is decades and decades of mismanagement and overspending. And so it's going to take us, a couple of years to get this fixed. But we're ready to hit the ground running. And that's why this bill is so aggressive in this respect, because we know this is an amazing opportunity to finally get the house in order, or the budgetary house, if you will, of the country. So I saw this done. I was a part of seeing this done in my state legislature, and we can certainly do this here at the national level.
Well, on the subject of your state, Congressman, you represent an area in North Carolina where obviously there was hurricane impact and aid that was passed in a continuing resolution at the end of the last Congress. But as you hear language now coming from this administration about potentially getting rid of FEMA entirely, of sending things back to the states, how do you view that kind of language? And should we expect more aid for North Carolina or for California, for that matter, to be wrapped up in one of these things that we're talking about?
Well, a lot of that conversation about FEMA and how useful it is, frankly, came from a conversation that we in the North Carolina delegation had with President Trump on Air Force One when he was flying down to Western North Carolina a couple of weeks ago. And we were pointing out to him examples of where FEMA, in terms of the bureaucracy, we're getting it wrong. And if you think about disaster response, like in the immediate hours when something happens, FEMA doesn't show up to help. It's the local fire departments, rescue, emergency management, volunteers, nonprofits. Those folks are doing the immediate stuff, and then, of course, in those first few weeks after they are. Then FEMA comes in to try to help essentially coordinate relief. And what I hear, frankly, is a lot of my friends in state and local government say these folks sometimes get in the way. Not the folks who are there trying to actually do the job, but just the constraints that they have to deal with of the bureaucracy. So if there's a way to effectively just get that money to the states so that the states can deal with it, I think that's even better, because at the end of the day, it's the states and the local governments that know best the needs instead of bureaucrats here in Washington, D.C.
Congressman, it's good to have you as part of our conversation on Bloomberg. Republican Tim Moore of North Carolina, thank you for the insights. President Trump set to impose reciprocal tariffs, as we've been reporting, on other countries as soon as April, taking executive action earlier today as we started our conversation here on Balance of Power. And with us now more from the White House is Peter Navarro, senior counselor to the president for trade and manufacturing. Mr. Navarro, it's great to have you back on Bloomberg. Thanks for joining Balance of Power. So I'm not going to ask you if you're disappointed that these tariffs are being delayed until April. What I want to know is what happens between now and then? Are you about to enter trade negotiations with every one of our partners?
What happens between now and April 1st is that Secretary of Commerce nominee Lutnick, United States Trade Representative nominee Jamieson Greer are going to roll their sleeves up and analyze the many and varied ways that different countries around the world with which we run massive trade deficits are cheating America. And it's just a fact that America has the lowest tariffs in the world. We also have the lowest tariff barriers. And that's not fair. And President Trump wants to eliminate a $1 trillion a year trade deficit that has risen to the level of a national emergency because it's very destructive to our economy and our national security. And so the idea here, and it's historic, and it's really a revolution in how the structure of the international trading environment will be organized. We're just asking people to treat us fairly, and they're not doing that.
Well, as we talk
now.
about, Peter, a restructuring of the way in which trade moves throughout the world, is the goal here for all tariffs to be equal or for all tariffs on U.S. imports to be zero?
We want a level playing field. The president said he'd be happy to have just a level playing field. We don't have that. So, for example, if a country that is charging us high tariffs and erecting high barriers takes them away, then we'll take ours away. But there's considerations here that you need to understand. It's like some countries, every country is like fingerprints. They're all different with respect to the mix of the ways they cheat us. And so you have a country like Japan, which has relatively low tariffs, but very high non-tariff barriers. If you go to the EU, the president has rightly made a very big deal of the VAT tax, the value-added tax, because that value-added tax acts as an additional tariff, but also as a massive export subsidy. And we see this mostly in how the auto industry is structured between the U.S. and America. It's just grossly unfair. Like Germany sells us 8 times more cars than we sell them. It's not because of design or safety or production cost. It's simply because you have a 10% EU tariff on autos, which is 4 times higher than the American tariff, and you add to that a 19% VAT on top of that. And that VAT, when a German car, a BMW, comes here, that VAT is taken away, so it's an export subsidy. And then when an American Cadillac goes to Europe, they slap that VAT on. And I've calculated that for a $50,000 car, BMW or Cadillac, at this point, once you calculate all of that tariff and VAT tax stuff, it's about a $20,000 differential. Yeah. Germany gets to sell a BMW here for almost $10,000 less. We have to sell that car over there for more than $15,000 more. Wow,
so we get the spirit of that argument, Peter. I understand where you're coming from, but I'd like to ask you about raising revenue, because a lot of President Trump's economic proposals have also relied on revenue that would be raised from tariffs. We had these conversations with Scott Bessent before he moved into the Treasury. So is the point here, to get back to Kaylee's question, to zero out these trade relations, or is it to in fact impose tariffs and raise revenue for our coffers?
The goal is to have fair and reciprocal trade, and if we have that, we will have jobs, high wages, and high productivity, a rapidly growing gross domestic product. Well, look, there's going to be a lot of revenue. I mean, it's going to be a beautiful thing, okay? And for example, the steel tariffs and aluminum tariffs, they're not going away because we've got another problem there. It's a national security problem. We've got a world in which governments around the world, Brazil, Japan, South Korea, China, Turkey, you name them, massive government subsidies for their steel and aluminum industries, which results in massive American markets, which results in the anemic ability of our steel and aluminum industries to survive. And we're going to stop that. So there's going to be a lot of tariff revenues, and we collected a lot, and it's a great thing. You have to remember here, the reason why we're forming the External Revenue Service is because President Trump believes, like Hamilton and Jefferson and McKinley, that tariffs are good, they protect our nation, And if you look at a chart, one of President Trump's favorite charts is the one that shows that prior to 1913, most of the revenues that funded our government were tariffs. And then once we went to the income tax, it went down to a flat line. We're going back to a world in which tariffs are going to be an important part of defending this country and be able to have a strong defense industrial base and manufacturing base. And remember, a lot of countries rely on us for their defense umbrella, and we can't do that if we don't have a strong defense industrial base and manufacturing base.
So, Peter, what's the answer to all of the American companies that make things in America who suggest tariffs will be bad for their business? You had the Ford CEO, Jim Farley, saying that if the 25% tariffs on Mexican and Canadian goods go into effect, this is a quote, it will blow a hole in his business. Why is he wrong?
Well, past his prologue in this case, if you go back to the first term, you see all sorts of people saying the same kind of things in the business world, the Business Roundtable, the Wall Street Journal. You have the networks that were attacking Trump and all of that. And they all warned about inflation, recession, and all these things. And guess what? It never happened. What we had
what's
Trump
being
tariffs,
suggested this time, Peter, is much wider in scale.
Well, I would suggest to you that the tariffs we imposed on China were historic and large, and we had no problem at all with that. We had dishwashers, solar, we had steel and aluminum. But here's the thing. Look, this is a bullish world that Trump is going to bring, and you have to look at everything we're doing in its totality. We're going to fight the inflation front, on the drill baby drill front, on the deregulation and Doge front, on the tax cut front. And when we have the trade front bringing in investment here, both domestic and from abroad, we get higher productivity because the capital labor ratio goes up. So you got to look
When
at
are we going to deal with China, Peter? I'm sorry,
totality.
we only have a minute left, and I want to ask you about China. That's a tariff that's already in place that no one seems to be talking about. President Trump has suggested that could go 50, 60%. Will you try to cut a trade deal with Beijing?
Look, the president is the commander-in-chief, and he's the commander of this ship. And I simply respond to whatever he requests the trade team does. And the trade team, I mean, it is the most impressive trade team America has ever fielded. You've got the great Howard Lutnick, who's going to be at Commerce. You got Jameson Greer, who was the lieutenant of Bob Lighthizer, the greatest USTR we ever had. You got Kevin Hassett, a veteran. It's going to be great.
And of course, you have Peter Navarro as well. Thank you for joining us from the White House this evening. He's the president's senior counsel for trade and manufacturing, live with us here on Balance of Power on Bloomberg TV and radio. We'll have more ahead.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Whatever they charge us, we're charging them. So it works out very well. It's a beautiful, simple system. And we don't have to worry about, gee, we're charging too much or too little. But traditionally, India is right at the top of the pack. They charge tremendous tariffs.
President Trump discussing the current trade relationship between the U.S. and India. This coming as the president meets with Indian Prime Minister Modi.
और गाइस क्रूड ऑयल देखोगे ब्रेकडाउन की कोशिश कर रहा है एफईजी का ध्यान रखना अगर ब्रेकडाउन सक्सेसफुल होता है तो फिर आना चाहिए नीचे प्रॉपर्ली बाकी अब यूएस मार्केट ही ओपन होगा उससे पहले न्यूयॉर्क सेशन 6:30 पे तो उसका ध्यान रखना नेचुरल गैस तो बिल्कुल ही साइड में चला गया है रिस्की ट्रेड लगाया था ना ऊपर जा रहा है फिर उसमें भी ना नीचे आ रहा है लेट्स सी क्या करता है देखते हैं 6:30 न्यूयॉर्क सेशन की ओपनिंग है तो थोड़ा वॉल्यूम वहां पर एक्सपेक्ट रहेगा आ जाना चाहिए बाकी ट्रेल करना चाह रहे हो तो क्रूड को ट्रेल भी कर लो बिफोर 5 और 6:30 वॉल्यूम आना स्टार्ट होगा तो फिर मार्केट वॉलेटिलिटी दिखाता है थोड़ी बहुत। बिटकॉइन को भी देखोगे जैसा मैंने बताया थोड़ी देर पहले अपने रिटेल जोन पर ही रुका हुआ है, ये भी ना ऊपर जा रहा है ना नीचे आ रहा है। कल सपोर्ट से बाइंग जरूर अच्छी आई है। ब्रेकडाउन तो हो चुका है, लेट्स सी क्रूड अब थोड़ा मूव करता है क्या। ट्रेल कर लेना जो लोग सेलिंग में हैं। टारगेट थोड़ा सा बड़ा है 90 पॉइंट, रिस्क रिवॉर्ड बेसिस पे देखोगे तो 1:3 है बट थोड़ा बड़ा लग रहा है। हाफ टारगेट ऑलमोस्ट हो चुका है 40 पॉइंट, देखते हैं नीचे निकलता है तो। कर रहा हूँ थोड़ा सा, एक कैंडल और क्लोज जाती तो थोड़ा कंफर्मेशन और मिल जाता। 6200 के नीचे एटलीस्ट 6200 के नीचे एक और कैंडल क्लोज हो जाए तो फिर कंप्लीटली मेरे अकॉर्डिंग आ जाना चाहिए। वैसे एफवीजी तो ब्रेक हो गया बट स्टिल कभी कभी रिटर्न कर जाता है एफवीजी से ही प्राइस। तो 6200 के नीचे कैंडल क्लोज, फिर थोड़ा बहुत वही 6180 एंड देन फाइनल टारगेट। सेलिंग में है, अगर बुक करना चाहो बुक भी कर सकते हो थोड़ा बहुत प्रॉफिट, या एसएल एटलीस्ट कॉस्ट पर रख लेना, रिस्क मत लेना। 6200 के नीचे कैंडल क्लोज हो जाए तो बढ़िया रहेगा। बाकी लाइक भी करते रहो गाइस। Forget to like the stream and subscribe the channel. Rich gangster. Your levels helps a lot. Please keep doing the full day stream. It helps a lot for full time trader like us. If पूरा दिन ही करते स्ट्रीम, अब कमोडिटी मार्केट में मॉर्निंग पे मोमेंटम आता नहीं ना, कभी कभी आता है। नॉर्मली 1:30 के बाद ही वॉल्यूम आना स्टार्ट होता है, तो 1 PM से शुरू कर देते हैं। बाकी थोड़ा लेवल आने में टाइम लगता है, इसलिए थोड़ा देखना पड़ता है मार्केट को। बाकी निफ्टी बैंक निफ्टी में भी इतना फिर मॉर्निंग से इवनिंग तक रात तक फिर कंटिन्यूसली ट्रेडिंग या फिर सिस्टम के आगे बैठा नहीं जा सकता, तो इसलिए। भाई क्रूड ऑयल में डेफिनेटली हाफ प्रॉफिट बुक करना। मैं स्टिल अभी भी कंफर्म नहीं हूँ ये नीचे जाएगा नहीं जाएगा। मैं अभी भी 6200 का वेट कर रहा हूँ कि ब्रेक डाउन करे। 6200 के नीचे कैंडल क्लोज अगर देती है मेरे अकॉर्डिंग, तभी मैं इसको ब्रेक डाउन मानूंगा एफईजी का। 6200 या 201 15 मिनट की कैंडल, नहीं तो ये रुक सकता है यहाँ पर। बाकी ये रेंज रहेगी फिर उस केस में प्राइस के लिए 50 पॉइंट की छोटी सी रेंज। किसी ना किसी एक साइड पे जब ब्रेकआउट या ब्रेकडाउन करेगा तभी बड़ा मूव आएगा। करते रहो गाइस। जिन लोगों ने लाइक नहीं किया स्ट्रीम को अभी तक, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल एज वेल। बाकी मेरे अकॉर्डिंग अगर ये ब्रेक हो जाता है 6200 के नीचे, तो फिर नीचे रुकना तो नहीं चाहिए इसको। फिर 6150 120 ये सारे लेवल टेस्टेड हैं। इम्पॉर्टेंट है 6200, क्या ये ब्रेक करेगा या फिर नहीं। नैस्डैक के सपोर्ट और रेजिस्टेंस देख लेते हैं। नैस्डैक के सपोर्ट और रेजिस्टेंस, बिटकॉइन तो रीटेस्ट पे रुका हुआ है, 10 घंटे हो चुके हैं उसी एरिया के अराउंड। US 100 नैस्डैक को देखोगे अगर इंडेक्स IG ब्रोकर में, लेट्स सी सपोर्ट कहाँ पर है। एक बार पहले सपोर्ट देख लेते हैं, फिर रेजिस्टेंस भी देख लेंगे। काफ़ी अच्छी रैली दिखा दी थी परसों के बाद से। देखो नीचे सपोर्ट 21,950 के अराउंड आपको एक देखने के लिए मिल जाएगा। 15 में टाइम फ्रेम की मैं बात कर रहा हूँ, ये IG ब्रोकर है, ठीक है। सपोर्ट आपका वही 21,920 से लेकर 21,940, ये आपके पास एक सपोर्ट है 15 मिनट टाइम फ्रेम पर। उसके बाद देखोगे नीचे, फिर नेक्स्ट सपोर्ट आपका 15 मिनट टाइम फ्रेम पर। जस्ट गिव मी अ मोमेंट, देख लेते हैं एक बार। या फिर नेक्स्ट सपोर्ट आपको डाउन साइड पे 15 मिनट टाइम फ्रेम पर ही बता रहा हूँ, 21,600 21,575 से 21,645, ये रेंज पे मिल जाएगा। ऊपर रेजिस्टेंस अगर देखोगे 15 मिनट टाइम फ्रेम पे, ठीक है। रेजिस्टेंस भी देख लेते हैं, दो सपोर्ट हैं फिलहाल 15 मिनट टाइम फ्रेम पे। ध्यान रखना कैंडल ओपन इक्वल टू हाई ना बने सपोर्ट पे। कैन नॉट सी द इन द स्क्रीन पे नहीं दिख रहा है। अच्छा दूसरे पर है ना ये है। लेवल बता दिए मैंने, लेवल को ध्यान रख लो, फर्स्ट वन सेकंड वन। रेजिस्टेंस देखते हैं अभी कौन सा है। अगर फॉल अच्छा है रेजिस्टेंस से तो भी बड़ा फॉल हो जाएगा। लेट्स सी द रेजिस्टेंस एज वेल फर्स्ट। क्रूड का सेलिंग का टारगेट देखो 6,160, 6,120, 6,100। बाकी एक बार 6,200 के नीचे क्लोजिंग आ जाए तो मेरे अकॉर्डिंग अच्छा फॉल हो जाना चाहिए, नहीं तो फिर मार्केट ना रेंज बना के बैठ जाता है। बाकी ट्रेल जरूर कर लेना, अभी 5 PM तो हो गया, वॉल्यूम थोड़ा बहुत तो आ ही जाना चाहिए प्रॉपरली। हाँ ठीक है, ग्रेट। बाकी अगर थोड़ा पुल बैक आएगा तो वापस सेलिंग का प्लान करेंगे, ठीक है। एफईजी को कैंडल क्लोज हो गई शायद मेरे अकॉर्डिंग, होने वाली है। अभी इसको रिमूव कर देते हैं, क्लोज होने देते हैं कैंडल को, फिर रिमूव कर देंगे। थोड़ा पुल बैक भी पेंडिंग है। जो लगाया हुआ वही है, सेम ही है जो लगाया वही है। एफईजी को रिमूव कर देना, ठीक है। कैंडल हाँ क्लोज हो गई है बिल्कुल। कैंडल क्लोज ऑफ दिस, ये एफईजी आप रिमूव कर सकते हैं। एंड इसको थोड़ा सा एडजस्ट करके दूसरा एफईजी यहाँ पर मार्क हो गया, उसको क्रिएट कर देते हैं। ठीक है, अब देखो नीचे आता है, थोड़ा सा पुल बैक देता है, अगर ये ना पुल बैक भी आ सकता है, पुल बैक भी अच्छा रहेगा वैसे, अगर आता है तो वापस एक सेलिंग अपॉर्चुनिटी हम कह सकते हैं। हाँ, हम नेस्डेक पे थे, नेस्डेक को ट्रेल कर लो। रेजिस्टेंस अगर देखा जाए नेस्डेक का 15 मिनट टाइम फ्रेम के अकॉर्डिंग, वैसे तो ये ऑलरेडी ऑल टाइम हाई के अराउंड एक बार फिर से चक्कर लगा के आया है, वहीं से रेजिस्टेंस ले रहा है। क्या ये स्ट्रांग होगा, ये मुझे देखना है, नया रेजिस्टेंस बना है या फिर पुराने से ही रेजिस्टेंस लेके आया है, क्योंकि पुराने से लेके आया होगा तो फिर लोअर लो बनाना जरूरी हो जाएगा, नहीं तो रेजिस्टेंस वीक हो जाते हैं। वी ऑल नो दैट, राइट? सो यस, ओके, पुराने रेजिस्टेंस से ही रेजिस्टेंस लिया है इसने, दैट्स ग्रेट। हाँ, ओके, ग्रेट ग्रेट। लगा रहा हूँ, एक सेकंड पहले लेवल तो क्रिएट कर दूं। के ऊपर ये रेजिस्टेंस 22,000 कितने बार टेस्ट करेगा लेवल, पता नहीं। तीसरी बार आया था यहाँ पर आज ये, एक बार देखोगे तो 18th ऑफ दिसंबर 2024, उससे पहले 17th ऑफ दिसंबर 2024 को ये प्राइस इस लेवल पे आके हिट करके जा चुका है। दैट इज द ओनली रेजिस्टेंस वी हैव। ये थर्ड टाइम आया है, एक बार लास्ट टाइम देखें लोअर लो बनाया था क्या इसने। पहली बार सेलिंग आई थी, लो बनाया था, दूसरी बार आई थी लोअर लो बनाया था, तो ऑब्वियसली ये रेजिस्टेंस स्ट्रांग ही होना था। थर्ड टाइम है, इसको स्ट्रांग ही रहना है तो काफ़ी बड़ा लो बनाना पड़ेगा। तो यस, रेजिस्टेंस से सेलिंग आई है, इंपॉर्टेंट लेवल ऑफ 21,900 वाला सपोर्ट है, वो हो गया। अगर अब ये होल्ड नहीं किया तो फिर प्राइस अच्छा खासा फॉल हो जाना चाहिए। ठीक है, ये रेजिस्टेंस पे एक बार पहले सेलिंग आ चुकी थी, एक लो बना था, फिर दोबारा आई थी, एक लोअर लो बना, ये थर्ड टाइम आई है यहाँ पर सेलिंग। अगर ये लोअर लो नहीं बना पाए प्रीवियस लो के नीचे तो फिर वीक हो जाएगा लेवल, तो इसलिए मैं बोल रहा हूँ ये लेवल नीचे सपोर्ट बड़ा इंपॉर्टेंट है। ब्रेकआउट हुआ 22,100 तो ऑल टाइम हाई को ही ब्रेक करेगा, नीचे सपोर्ट ही बनाई दिया है आपका। ये रेजिस्टेंस है, अब थोड़ा वीक समझ सकते हो, 3 बार रेजिस्टेंस आ चुका है, सेलिंग आ ही चुकी है। बाकी और हाँ, थोड़ा वीक ही है अभी। सो ये लेवल है कुछ फिलहाल के लिए, कोई नए लेवल बनेंगे तो देखेंगे, अभी के लिए इतना ही है। नेचुरल गैस का ऐसा लेट हो चुका है, निकलना चाहो तो निकल जाना। इस रिस्क की ट्रेड को किसी ने अगर लिया था, देखते हैं फिर से कुछ नया ट्रेड बनता है तो इसमें लेवल पे आने का ही वेट करना पड़ेगा, और अब कोई ऑप्शन है नहीं। लेट्स सी, एक बार थोड़ा सा लेवल और देख लेते हैं कुछ। ऊपर अभी भी एफईजी है, बिल्कुल है। वही रेजिस्टेंस है, फिर और कोई रेजिस्टेंस तो बना भी नहीं है इसमें। एफईजी है वो बात अलग है, बट उसके अलावा देखोगे तो मेन रेजिस्टेंस ही बना हुआ है, नथिंग एल्स। पर भी काफी बड़ा गैप अप है अभी एक। निफ्टी अब पाताल में जाने की तैयारी कर चुका है, क्या कह सकते हैं। ठीक है, रिस्की ट्रेड लिया था किसी ने, एसएल जा चुका है, ध्यान रखना, होल्ड मत करना अगर किसी ने रिस्क लिया था। यहाँ पर छोटा सा एसएल था, काफ़ी देर होल्ड किया, नहीं जा पाया, रिस्की था थोड़ा सा, बट अब कोई लेवल ही नहीं बनाया बीच में तो क्या कर सकते हैं। नाउ ओनली दिस एफईजी इज देयर, सिर्फ एक एफईजी है हमारे पास। एक बार थोड़ा सा फॉरेक्स का चार्ट भी देख लेते हैं इसमें ना, क्योंकि एमसीएक्स में इसके ऊपर सीधा वो गैप डाउन वाली कैंडल बनी है तो लेवल वहाँ पर क्लियर ही नहीं है। एमसीएक्स थोड़ा सा क्लियरिटी दे देगा हमें। फॉरेक्स में ठीक है, फॉरेक्स में गैप डाउन नहीं हुआ है ना, तो चल जाएगा ये काम। फॉरेक्स में देखोगे तो ऑलरेडी एक बार यहाँ से सेलिंग ये दे चुका है, कल वापस आया था तो कल सेकंड टाइम दी है इसने, थर्ड टाइम आ रहा है यहाँ पर ये नेचुरल गैस के मेन रेजिस्टेंस की अगर मैं बात करूँ। दिस इज द थर्ड टाइम प्राइस हिट करेगा इस लेवल को, ये कोई पहली बार नहीं है, तीसरी बार है। एमसीएक्स में उतना क्लियर नहीं है, फॉरेक्स में थोड़ी सी क्लैरिटी है। क्रूड ने ऊपर बना दिया है। ओके 1 2 3, मिनट में इतने पीछे लेवल जा भी नहीं रहा है अब। नेचुरल गैस अगर ये ऊपर का रेजिस्टेंस भी ब्रेक कर देता है तो फिर थोड़ा सा लेवल ही चेंज करने पड़ेंगे, टाइम फ्रेम चेंज करना पड़ जाएगा। देखोगे तो सपोर्ट बनाने की कोशिश तो करी थी नेचुरल गैस ने, फिर वो एक 1230 वाली कैंडल थी उसका न्यूयॉर्क सेशन ओपन हुआ, ब्रेकडाउन ही हो गया। टू मच वॉलेटिलिटी ओवर हियर। Time, 2 time, 3 time, 4 time, this is a 5th time. Remember 2 days before सीपीआई का डेटा आया और नेस्डेक गिरा था, उसके बाद सारे बायर को मार दिया, उसके बाद हायर है। वो मैंने बताया था आपको, मुझे याद आ गया, उस दिन डेटा आके सडनली बड़ी कैंडल बनी थी, नीचे सपोर्ट था उसमें 15 मिनट टाइम फ्रेम पे, वहां से रिवर्स कर गया प्राइस, वो सपोर्ट पे था उस समय। उस दिन वो लेवल देखोगे ना, वो सपोर्ट पे था, मैंने बताया भी था। बाकी सिर्फ एक न्यूज़ का इम्पैक्ट नहीं है, बहुत सारी न्यूज़ होती हैं, सबका कंबाइन इम्पैक्ट देखने के लिए मिलता है। बाकी आप उसमें सपोर्ट पे बाई करके रख दो, एसएल जाएगा तो जाएगा, टारगेट मिलेगा तो थोड़ा एटलीस्ट रिस्क रिवॉर्ड तो बड़ा होगा ना, दैट इज इन योर फेवर। बाकी तो कितने अच्छे से अच्छा सपोर्ट वो भी ब्रेक हो जाता है, रेजिस्टेंस कितने अच्छे से अच्छा वो भी ब्रेक हो जाता है, तो वो उतना मैटर नहीं करेगा उस समय। द थिंग विच इज मैटर उस समय वो होगा आपका रिस्क रिवॉर्ड जो आपने फाइनल किया है उस पर्टिकुलर जोन पे। यहाँ पर देखो एक ट्रेड अगर प्लान करें, वैसे लेवल तो अभी भी नहीं आया है नेचुरल गैस में, इसको रिमूव करके अभी जितने देखो नेचुरल गैस में ट्रेड बनेंगे सारे के सारे रिस्की बनेंगे बिकॉज लेवल पे है नहीं प्राइस। मॉर्निंग से देखोगे, मॉर्निंग पे फ्लैट ओपन था, 15-20 मिनट 1 घंटा ऐसे ही रुका, फिर एक मोमेंटम आया, उसके बाद बिल्कुल ही साइडवेज हो गया। ऐसा नहीं है कि कुछ मोमेंटम हो रहा है प्रॉपरली। तो अभी जितने भी ट्रेड बनेंगे चाहे बाइंग सेलिंग कुछ भी हो, सारे रिस्की होंगे अगर लोगे तो। फिर अदरवाइज अवॉइड कर रहे हो तो चॉइस इज यूर, क्योंकि जब तक कोई प्रॉपर लेवल पे आएगा नहीं तब तक फिर ट्रेड करना। जैसे क्रूड आया था रेजिस्टेंस पे तो सेलिंग बनी थी, अब बीच में कोई ट्रेड ले ले तो फिर वो अलग गलत हो जाएगा एक तरह से। तो नेचुरल गैस अगेन एक रिस्की ट्रेड ही बन रहा है। हाँ, एफईजी के ऊपर नहीं जाना चाहिए तो पुल बैक ही मेंशन करा जाएगा। अगर एफईजी के ऊपर निकल गया तब थोड़ा सा फिर पुल बैक कंसिडर नहीं करेंगे, फिर तो रिवर्सल है वो। क्रूड की बात कर रहे हो, आई होप सो। ठीक है, नेचुरल गैस में देखो एक रिस्की ट्रेड ही बन रहा है। मैं फिर रिपीट कर रहा हूँ, अभी जितने ट्रेड बन रहे हैं सारे रिस्की ही हैं बिकॉज प्राइस किसी पर्टिकुलर लेवल पे नहीं है कि मैं आपको बोलूँ कि एक बहुत अच्छा लेवल है, सपोर्ट रेजिस्टेंस मिल गया है, ऐसा नहीं है। तो अभी यही ऑप्शन है, या तो रिस्की ट्रेड लो या फिर बिल्कुल अवॉइड करो नेचुरल गैस को। ठीक है, ये एक रिस्की ट्रेड है, वैसे छोटा सा ही एसएल है, छोटा सा ही टारगेट है अगर ट्राई करना चाहोगे तो। बाकी अगर नहीं करना है, अवॉइड करना है, रिस्की है पहले बता दूं है, तो फिर क्वांटिटी कम रख लेना या फिर अवॉइड भी कर सकते हो। फिलहाल के लिए हमारे पास लेवल जिस लेवल पे रखा हुआ है प्राइस, दोज आर द ओनली मेजर लेवल्स। दिस इज ऑल्सो रिस्की ट्रेड, रिमेंबर। जो रिस्क नहीं ले सकते तो बिल्कुल अवॉइड कर लेना। नेचुरल गैस में वॉल्यूम नहीं है, कम है कह सकते हैं, है नहीं है कहना गलत होगा, कम है। भी करते रहो गाइस, 40 people are watching, 14 likes are done, 100 likes is the target। जिन लोगों ने नहीं किया लाइक कर दो फटाफट से। Don't forget to like the stream and subscribe the channel, and if you have any question you can ask in the comment box में पूछ सकते हो अपना क्वेश्चन। से ये रिस्की ट्रेड निकलता है तो नेचुरल गैस में छोटा सा ही है, बहुत छोटे एसएल के साथ कह सकते हो। ये नीचे और देखोगे कल क्लोज होते होते बड़ी बड़ी कैंडल बन गई थी रेड कलर की इन नेचुरल गैस। सिक्स थर्टी पे न्यूयॉर्क सेशन 6:30 पे ओपन होगा इंडियन टाइम के अकॉर्डिंग। कल को भी देखोगे कैंडल ओपन इक्वल टू लो बनी है एग्जैक्टली करंट कैंडल। कोई न्यूज आई है शायद, ट्रेलिंग एसएल का ध्यान रख लेना। न्यूज बेस्ड मोमेंटम हुआ तो प्राइस चला जाता ही चला जाएगा ऊपर की ओर। को देख के कह सकते हैं डेफिनेटली ओपन इक्वल टू लो कैंडल है विद हैवी वॉल्यूम। रेफ्यूजी के ऊपर चला गया तो फिर ध्यान रखना, फिर पुल बैक कंसिडर नहीं करेंगे इसको। देन इट इज कॉल्ड अ रिवर्सल फ्रॉम द लेवल। कुछ न्यूज़ आई है लग रहा है, लेट्स सी कुछ स्टेटमेंट वगैरह। कंप्लीट स्ट्रेट अप कैंडल। नैस्डैक में भी ओपन इक्वल टू हाई है बिल्कुल। इंपॉर्टेंट है देखना कि ब्रेकडाउन ब्रेकआउट करता है या फिर वापस रुकता है उसी रेजिस्टेंस पे। क्रूड फिर से सेल करें क्या? रिस्की है अब सेल। कैंडल ओपन इक्वल टू लो बनी है, कैंडल क्लोज होने दो, नेक्स्ट कैंडल पे देख लेना। ओपन इक्वल टू लो नहीं बननी चाहिए ना। बाकी ध्यान रखना, अब सिर्फ आधा घंटा रह गया न्यूयॉर्क सेशन की ओपनिंग का।
times.
It's just a nondescript Ramoa, just sort of thrown out there.
Nondescript
no one knows.
Ramoa.
You're looking for that guy who's like really like pulling that.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Let's show you what's happening in the markets right now, because a hotter than expected wholesale inflation report not really getting in the way of the stock market. You can see the S&P 500 up by 0.5%, and big tech is driving the gains, led specifically by Tesla and Nvidia. The Mag 7 up by 0.9%. When you look at yields, they are giving back some of the big gains that they saw yesterday. The surge yesterday was the biggest since December. The 10-year yield down 8 basis points to 4.54%, but still very much at that 4.5% handle. And the dollar weaker by 0.4% before President Trump is due to announce new tariffs, reportedly in the next hour at 1 p.m. Eastern Time. Now, there is a report that these new reciprocal tariffs will not go into effect until April 1st, so maybe that is helping the dollar ease a little bit here. In the meantime, let's go back to the equity market and highlight a couple of individual names that are moving. And Isabel Lee joins us to do that. Isabel.
Hey, Scarlett, we're looking at Hertz. The stock is seeing immense pressure, down by more than 10%. That comes after the company reported a loss of $2.9 billion in 2024, worse than analyst expectations. Hertz also said that it finished off selling 30,000 electric vehicles, most of which are Tesla models, as it moves on from an ill-advised bet on plug-in cars that customers didn't really want and were expensive to maintain. Up next, we're looking at Robinhood. So this is going the opposite direction. Shares are edging higher by nearly 10%. The company reported revenue that more than doubled. Of course, this is boosted by crypto market transactions around the U.S. presidential elections. Revenue grew to $1 billion in the fourth quarter. This is beating estimates. Crypto revenue, this is what we want to highlight. It increased by more than 700% to $358 million. And last, we have Cisco. Shares are edging slightly higher. Cisco gave an upbeat sales forecast, helped by companies spending more on computing infrastructure to take advantage of this whole AI tech revolution. The company, which is the largest seller of networking gear, also raised its fiscal 2025 target to about $1 billion. Back to you, Scarlett.
All right, Bloomberg's Isabel Lee, thank you so much for those movers. Now let's get back to the macroeconomic picture and the latest read on inflation. Andrew Hollenhorst of Citigroup Global Markets was on Bloomberg earlier today, and here's what he said about why the market is shrugging off today's PPI number, despite it coming in higher than estimates.
You can look at all these different metrics on inflation. When you dig down into the details, the fact that shelter inflation is slowing down, I think that is going to give Fed officials confidence that we're getting some slowing. In terms of what this PPI number means, I think part of the reason the market is reluctant to react is you really have to look at these detailed categories and how they're going to play into that PCE reading that I think is going to be softer than the CPI reading we saw yesterday.
All right, joining us now with her take on this week's inflation data and what it means for the Fed and rates is Kelsey Barrow. Kelsey is a fixed income portfolio manager at JP Morgan Asset Management. Kelsey, great to see you.
Good to be here.
So let's talk a little bit about this week's inflation data, because CPI surprised to the upside. Yep. PPI also, for the most part, surprised to the upside. There were some sharp upward revisions as well for the previous month, with the exception of the core PPI month over month for January. Yet the bond market not too worried about it right now. Andrew Hollenhorst talked a little bit about the components within. Walk us through the market's thinking.
Yeah, so this is a bit of inside baseball, right? Because like you said, we had CPI, which came in significantly hotter than expected. Bond yields did move higher in response. The 10-year yield, I think, got up to about 9 or 10 basis points higher on the day. Then you had PPI that came out this morning that also came in hotter than expected. And suddenly, we've essentially reversed the whole move that we had higher in yields because of CPI with PPI. And it's because of not the headline numbers, but the individual subcomponents that feed into the Fed's preferred inflation gauge, which is PCE. And PCE inflation has been running at a much cooler pace than the CPI inflation data. And with the numbers we have in hand, both CPI and PPI, most economists are expecting PCE on a month-over-month basis for January to come in around a 0.2 to 0.3. that would probably result in the 3 and 6 month run rates staying around 2.5%, and the year-over-year rate actually ticking down from 2.8% to 2.6%. So it's a much more stable, sanguine picture for inflation when you look at the PCE data versus the CPI data. And I think the market is taking a lot of comfort in that.
Okay, and I think the key words that you said there were staying at. So it suggests that things are not necessarily getting worse. And if anything, through one prism, it could look like things are getting better. In terms of what that means for the Fed and what it does next, yesterday we're looking at just over one rate cut for this year, perhaps not even until December. Does that sound appropriate to you?
It does. So I think that the Fed is on hold. The data has been volatile. What does the Fed do historically when the data is volatile? They pause. They pause to reassess the data. So our view is that they may be able to cut one more time in the first half of this year, but I wouldn't be surprised if they stay on hold for an extended period of time. And although that sounds bizarre, given everything that's going on in the economy, it's actually not at all historically unprecedented. Just think back to where we were. We were at 5 3/8. The Fed was on hold at that level for 14 months. And there are many other periods, 2006 to 2007, the Fed was also on hold for about 15 months. 1997 to 1998, also an 18-month extended period where the Fed was on hold. So it is not historically unprecedented for the Fed to just stay on hold. What does that mean for bond yields? It probably means that the front end of the yield curve is fairly pinned. The pricing of the terminal rate, so the lowest rate that the Fed funds rate gets to in the cycle, is probably going to stay fairly stable. And all the volatility in yields is probably going to come from the term, more of the term premium. So like today, what you're seeing is a bull flattening, where the biggest moves are happening in the longer end of the curve. And that's because most people expect the Fed to stay on hold, and then all of the shifts in expectations are occurring around longer-term growth prospects, longer-term inflation prospects.
So we know that Trump has made clear that he wants lower rates, and Scott Bessent, his Treasury Secretary, has clarified that the administration is looking for lower 10-year yields. How do they manifest that? I mean, what actions can they take beyond talking about it, talking it down?
I mean, that's a really good question. So I think that the signal that Bessent was sending by talking about the 10-year yield is that this administration is still sensitive to financial markets, and there are certain indicators that they use as guideposts in terms of assessing the success of their administration's policies. I think there are two primary ones. One is the equity market. Are equities going up? That's a sign that Trump's policies are going well. And secondarily, it's the 10-year yield. Now, just a 10 basis point move up or down in any given day, I don't think that that's what's going to worry them. But if we do get to a point where 10-year yields are approaching 5%,
that's a different story.
I think that's a different story, and it's an indication and a signal to the administration that something in their policy mix is not jiving well.
Okay, so to your point about the first measure of success for the Trump administration, the stock market, Goldman Sachs' Scott Rubner talked about a bearish trade looming for U.S. stocks, saying dip buying is kind of running out of steam at this point. If there is a positioning switch to a more bearish stance in equities, how do you see that affecting positioning in fixed income?
Well, a couple thoughts on that. One is we have not seen any fall in demand or appetite to take on risk in the credit markets. So credit spreads remain incredibly tight. And even yesterday, talking to our investment grade traders, after the CPI report, there was a very small widening in spreads in the knee-jerk reaction, and immediately dip buyers came in to buy any backup in yield. So we really are seeing very strong demand for fixed income continuing. But I will say that some of the price action we've seen more recently does encourage me from the perspective of bonds working as a diversifier in your portfolio. So if you look at the day, Deep Seek Monday or the Trade Monday, those were days where you saw the traditional bond equity correlation kick right back into gear, where bond yields went down as the stock market went down. So meaning bond prices went up as the stock market went down. And that's what we like to see. And I think it's a function of the level of yields currently, and the fact that for now, the signs that we see is that inflation remains under control. As long as inflation remains under control, the Fed has the flexibility to cut rates if necessary, if growth or the labor market were to falter.
Right, responding to those macro conditions.
Right.
Kelsey, always appreciate your coming in and talking about the markets with us. Kelsey Barrow is fixed income portfolio manager at JP Morgan Asset Management. Now, coming up on Bloomberg Markets, India's Prime Minister Narendra Modi arrived in Washington last night, and he is set to meet with President Trump today. India hoping to dodge tariffs from the U.S. We'll take a closer look at what's at stake for both countries. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. India's Prime Minister Narendra Modi is set to meet with President Donald Trump in Washington today. But a deepening partnership with the U.S. might not spare the country from a new wave of Trump tariffs. Also, there's other topics on the agenda as well. You've got nuclear energy investment for India, as well as U.S. defense sales to India. So for more on all of this, let's bring in Lisa Curtis, Director for Indo-Pacific Security at the Center for a New American Security. Lisa, great to have you on the program. The two got along pretty well during Trump's first term. Do you think that will matter in today's meeting? How much does it matter?
Well, I think it will matter a lot. The fact that Prime Minister Modi is visiting President Trump just 3 weeks into his term shows the importance that President Trump attaches to the relationship and I think really sees India as an important counterweight to a rising China. And it's true, the two leaders had a good rapport in the first Trump term. They got along very well. They participated in large events. You had a Howdy Modi event where 50,000 Indian Americans were packed in the Astrodome in Houston, Texas. 2 months later, President Trump addressed a crowd of 100,000 Indians in a stadium in Ahmedabad in Gujarat. So they have a lot of respect for each other. And I think that this will carry over into this meeting.
Okay, so there's a lot of common ground to be mined here. And I know that you focused on India and South Asia when you worked at the White House National Security Council during the first Trump administration. Which of the Trump administration's priorities have shifted the most, either become more or less urgent since that first administration? We talked through some of the items on the agenda. It ranges from tariffs to nuclear energy to, defense sales.
Well, I think tariffs is a common thread here. President Trump focused a lot on trying to get India to reduce its notoriously high tariffs on U.S. imports. Unfortunately, the two sides did not achieve a trade agreement during Trump's first term. So I think President Trump is going to redouble his efforts and, has really high expectations that the U.S. and India will achieve a fair trade deal. Prime Minister Modi has tried to get out ahead of this. He's already lowered some import duties on things like high-end motorbikes, which would allow the U.S. to export more Harley-Davidson motorcycles. That's something very important to Trump. But I don't think it's going to be enough. I think what we'll see is more pressure on India to reduce these tariffs. And this is something that will be actually, central to President Trump's meeting today.
So what does a win for President Trump look like, and what does a win for Modi look like, given that some of these concessions already came out before the meeting even took place?
Well, I think a win looks like a decision to commit to a fast-track trade negotiation. It's clear that both sides want the relationship to work. It's an important relationship for strategic reasons. And so I think a commitment to negotiate a trade deal is very important. The question will be whether over the long term they can actually achieve that negotiation. But for today, I think simply announcing the will and the interest in trying to negotiate a trade deal could be considered a success.
Okay, interesting. And you mentioned, of course, India as this counterweight to China, which back during the first Trump administration was in a very different economic state than it is now. One thing about India is that it has been very careful about avoiding picking sides, right? It doesn't want to pick up, its allies right in front of the U.S. So it's still buying Russian energy, for instance. It hasn't cut that tie off. Does India have a role to play in President Trump's effort to end Russia's war in Ukraine? That's something he's talked a lot about in recent days.
Well, when it comes to China, of course, India and China have a border dispute that actually went deadly in 2020. So the tensions between India and China are very high. And I think India does look to the United States for support when it is looking at the China threat and China aggression on the border. When it comes to Russia, you're right. They have a traditionally strong relationship. India has relied on Russian military equipment. And as you mentioned, they have increased their oil imports from Russia over the last couple of years. But I think what we will see Modi do is say that he wants to import more U.S. energy, including oil. And so that will be helpful. But in terms of helping to bring peace to Russia and Ukraine, I'm not sure that Modi will play a role in that. He doesn't want to do anything that would jeopardize his strong ties to Russia. So I think he would prefer to stay neutral on that issue and probably stay out of any negotiation to end that war.
Okay, got it. Thank you for explaining that, Lisa. Narendra Modi will also meet with Elon Musk during this trip to Washington. Do you think that'll pay dividends in terms of what Modi hopes to accomplish with President Trump?
I think it will. Prime Minister Modi has had many meetings with Elon Musk in the past. They've known each other before, so it makes sense that he's going to meet with them. And I'm sure their discussions will be wide-ranging, talking about the future of technology. Prime Minister Modi will probably even talk about some of the things he's done in India on the technology front. So this will be an important meeting. One thing I personally hope that Prime Minister Modi will raise the issue of U.S. foreign assistance and how important that is in countering China. And this is important for India in terms of the U.S. assistance that goes to India's neighbors, because India is seeking to keep China out of the region. And so any reduction in U.S. foreign assistance to the South Asia region will just open the door for China to increase its own influence there.
Okay, so that's something to watch for. We've talked about how you're looking for some kind of statement that they're working towards a trade deal and maybe talking about that foreign assistance as well. Where could this meeting surprise us? If there's any room for surprise, where would it be, Lisa?
Well, I think a surprise would be, a breakdown in the talks. If there's, simply no common ground, met on the trade issue. I don't expect that to happen, but I think that is the area where there is most tension is on the tariffs and the trade. And even though both sides, I think, are seeking to minimize that from blowing up the meeting, this is something they will have to pay close attention to, because there certainly are differences over this issue.
All right, so it always comes back to trade, at least for this relationship today. Lisa, really appreciate your joining us today. Lisa Curtis is Director for Indo-Pacific Security at the Center for a New American Security. Coming up on Bloomberg Markets, we're going to take a look now at Social Security. It does face scrutiny from lawmakers always, but will it face scrutiny from Elon Musk? He's certainly hinted that it will, but the benefits, they're typically a political third rail. Our next guest is Catherine Ann Edwards, a Bloomberg opinion columnist and labor economist as well. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
This is Bloomberg Markets. I'm Scarlett Fu. It's time now for our weekly segment focusing on retirement. Social Security considered a political third rail. No one will touch it in Washington except Elon Musk. The tech billionaire has decamped to D.C. with a mandate from President Trump to cut government spending. And just last week, he posted on X that he found a database feature that he says could, quote, enable massive Social Security fraud. So how could the White House affect Social Security, and what are potential fixes to the system? Catherine Ann Edwards is a labor economist and columnist for Bloomberg Opinion. She wrote on this topic this week. Catherine, Musk has actually tweeted about Social Security fraud several times, at least 6 times in a 24-hour span, while we know President Trump has made clear that Social Security will not be touched, his words. That's kind of awkward, or that creates an awkward situation, doesn't it?
It does create an awkward situation where someone who claims federal employees are inefficient are tweeting 6 times in 24 hours, but that's neither here nor there.
It's neither here nor there, but to what extent does that take reforming Social Security off the table? The program is something that you say in your column is in sore need of reforming.
Well, I think it's important to remember that Elon Musk doesn't have any support, factual evidence or otherwise, behind the things he's saying about Social Security fraud. Social Security fraud is very well studied and very much sought after from the Social Security Administration, because most victims of Social Security fraud are elderly Americans whose checks or identity is stolen, either by some type of scammer, by a family member who's being opportunistic. And so fraud prevention from Social Security is absolutely a priority. They have zero tolerance for it. So I don't know what he's trying to claim. I do wonder what he's looking at and if the data he's looking at is violating the Privacy Act.
Okay. But, I mean, when it comes down to it, Social Security, at least for my generation, we tend to think it's just going to run out of money at some point, and we're not going to get paid the benefits when we actually retire. And this is something that you bring up, that it is going to run out of money at some point in 2035, based on the last reform that was made to the program in 1983. Why is it only good until 2035?
So very careful terms here. Social Security is between 2 financial milestones when it no longer took in taxes what it pays out in revenue. It had a surplus for about a quarter of a century. That surplus is now gone, and it has a trust fund that it's built up to cover the years in which it no longer had a surplus, and that trust fund runs out of money in 2035. However, those are the milestones, 2010, 2035. So yes, Social Security is...
NASDAQ का बता दिया था लेवल आपको अभी थोड़ी देर पहले बताया था NASDAQ के लेवल 15 मिनट में वही हैं चेंज नहीं हुए अभी तक Well, it is my perspective. What is your analysis? Change of direction. मेरे अकॉर्डिंग अभी सपोर्ट पे नहीं आया US Treasury Besant observing trading partner reaction. Trump may implement tariff if deemed necessary. अच्छा ये थोड़ी देर पहले जो एक कैंडल बनी है एक्चुअली क्रूड ऑयल में सडनली ये एक स्टेटमेंट की वजह से बनी है एंड दिस स्टेटमेंट इज कमिंग फ्रॉम यूएस के जो ट्रेजरी सेक्रेटरी हैं लाइक वित्त मंत्री कह सकते हो फाइनेंस मिनिस्टर वहाँ के उनकी ओर से स्टेटमेंट जो आई थी जहाँ पर उन्होंने ये कहा है कि यूएस के जो प्रेसिडेंट हैं वो टैरिफ लगा सकते हैं अगर नेसेसरी हुआ उन सभी ट्रेडिंग पार्टनर पर जो रिएक्शन देंगे ट्रम्प के लगाए हुए टैरिफ पर तब ये सडनली कैंडल बनी है इन क्रूड ऑयल थोड़ी पहली स्टेटमेंट आया था 5 PM के अराउंड वो सेम ही कैंडल है 5:15 के अराउंड सेशन ओपन होगा 6:30 लिखा हुआ है। 7 PM पे डेटा भी है, ध्यान रखना वो गोल्ड और सिल्वर के लिए इंपॉर्टेंट है। नीचे वाले एफईजी को रिमूव कर देना, नेचुरल गैस क्रूड में, सॉरी, ये हमने सेलिंग के पर्पज से लगाया था, बाइंग के नहीं। ये नेचुरल गैस में थोड़ा सा एक बाइंग का ट्रेड था, रिस्की ट्रेड था, लेवल पे अभी तक आया नहीं है प्राइस मॉर्निंग से किसी भी प्रॉपर लेवल पे। नेचुरल गैस एफईजी पर ही है अभी भी। यही थोड़ा सा बाइंग का ट्रेड लगाया था बस, मिडिल ऑफ द लेवल, और कुछ कर नहीं सकते। थोड़ा बहुत प्रॉफिट हो गया होगा तो निकल भी सकते हैं, वैसे ये रिस्की ट्रेड है वैसे ही। बाकी अभी तक लेवल पे आया नहीं है किसी पे। कहाँ तक है? 308, 15, 307। नेचुरल गैस में ट्रेड करें सेल यहाँ से। अभी नेचुरल गैस में मेरे साइड से कोई ट्रेड नहीं है, बी लेवल पे आ ही नहीं रहा है प्राइस, मिडल ऑफ द लेवल ट्रेड बनाया नहीं जाता है, सारे अभी ट्रेड बन रहे हैं और रिस्की हैं। यहाँ पर भी एक ट्रेड बनाया था, रिस्की ट्रेड था, वो हो चुका है अगर लिया है तो। बाकी एफ से मैं बाइंग सेलिंग की रिकमेंड नहीं करता हूँ कभी भी। इससे पहले भी यहाँ पर एक छोटा सा सेलिंग का ट्रेड बनाया था, उसका एसएल जा चुका है और रिस्की ट्रेड है, ये भी रिस्की है, थोड़ा बहुत मूव कर चुका है। बाकी मैं एफ से कभी रिकमेंड नहीं करता, अभी सपोर्ट रेजिस्टेंस पे कहीं पर आएगा तो देखते हैं। बाकी अगर ये ट्रेड लिया हुआ है विच रिस्की ट्रेड तो प्रॉफिट बुक कर लेना थोड़ा सा। नो फ्रेश एंट्री राइट नाउ। नीचे अभी भी सपोर्ट एक एग्जैक्टली लेवल पे अभी नीचे भी आया नहीं है, एक बार फॉल तो ऐसे करना चाहिए लॉजिकली इसको। लॉजिकली देखा जाए तो एक बार 308.7 के अराउंड आना तो चाहिए। अब कल हो सकता है आया हो क्योंकि हमारा मार्केट तो क्लोज हो गया था यहाँ पर, इसके बाद क्या हुआ है वी डोंट नो। तो यहाँ पर एक सपोर्ट है, अभी भी वो एग्जैक्टली हिट किया नहीं है प्राइस ने। कि अगर एफ के ऊपर कैंडल क्लोज कर देता है फिर एफ रिमूव कर देंगे नेचुरल गैस में। हो गया। पर कहाँ पर है? घंटा और है न्यूयॉर्क सेशन की ओपनिंग। बाकी ये हो चुका है नेचुरल गैस रिस्क की ट्रेड जो बाइंग वाला था, निकल जाना। नया ट्रेड देखते हैं कुछ बनता है तो इसमें। हुआ क्या क्लोज? अभी नहीं। ट्रेड से निकल जाना। एफ के ऊपर शायद कैंडल अभी हाँ कर गई है कैंडल, एफ के ऊपर कैंडल क्लोज कर गई है। एफ को रिमूव कर सकते हैं अब। ठीक है, छोटा सा रिस्की ट्रेड था, हो चुका है। जिन लोगों ने लिया होगा थोड़ा बहुत प्रॉफिट बुक कर लिया होगा। कुछ खास नहीं आया, थोड़ा बहुत ही मोमेंटम मिला। Okay. एफ के ऊपर कैंडल क्लोज हो गई है तो रिमूव कर दिया एफ, ध्यान रखना। ठीक है, एक बार मेरे अकॉर्डिंग यहाँ पर प्राइस को आना चाहिए लॉजिकली देखा जाए तो, ये अभी तक हुआ नहीं है MCX में लेवल टेस्ट। तो ये कैंडल है, बड़ी सी कैंडल जो बनी है 515 वाली, न्यूज़ थी इस वक्त ये 515 वाली जो कैंडल बनी थी, स्टेटमेंट आया था वहाँ पर एक उनके सेक्रेटरी की ओर से। देखो तो इसमें ये लेवल ऊपर और नीचे सबसे पहले बना रखे हैं अभी भी 308.7, ये टेस्ट हुआ नहीं है, तो ये एक अच्छा सपोर्ट है अभी भी, इसमें कोई डाउट नहीं है। ओके, ऊपर देखेंगे तो एक रीटेस्ट है, वो भी स्ट्रांग ही है, मार्केट ने सीधा ही गैप डाउन किया था, तो अभी भी रीटेस्ट मार्केट किया नहीं है, वो एक सपोर्ट हुआ करता था, ब्रेकडाउन हुआ है तो रीटेस्ट पेंडिंग यहाँ पर भी समझ सकते हो, तो ये रीटेस्ट भी स्ट्रांग है। फिर आते हैं ये दो लेवल बीच के, ठीक है, फर्स्ट वन दिस इज वो एफईजी रिमूव कर देना, वो एफईजी हमारे काम का नहीं है अब। सेकेंड वन दिस इज सपोर्ट की, अगर पहले रेजिस्टेंस की बात कर लेते हैं ऊपर, तो यहाँ पर प्राइस एक बार पहले रेजिस्टेंस ले चुका है, कल एक बार फिर से रेजिस्टेंस लिया है इसने नया, थर्ड टाइम आ रहा है इस लेवल पे। सेम नीचे जो सपोर्ट है वो ऐसा नहीं है कि पहले नहीं बना था, बट प्राइस अब उस लेवल पे एक बार ब्रेक डाउन करके उस लेवल को डिस्ट्रॉय कर चुका है ऑलरेडी। नेचुरल गैस में अब एक्सपेक्ट कर सकते हो बेस्ट सेलिंग ओवर हियर, बेस्ट बाइंग ओवर हियर, थोड़ी बहुत बाइंग यहाँ से एक्सपेक्ट कर सकते हैं, थोड़ी बहुत सेलिंग यहाँ से एक्सपेक्ट कर सकते हैं। बाकी ये रेंज थोड़ी सी अगर मूव हो जाए, कहने का मतलब है दोनों लेवल रिमूव हो जाएं तो फिर थोड़ा बेटर रहेगा मेरे अकॉर्डिंग, क्योंकि ये बीच वाले सपोर्ट रेजिस्टेंस बने हैं ये दोनों ही टेस्टेड हैं अब। हाँ वो तो निकल गया। अभी 20 मिनट रह गए हैं न्यूयॉर्क सेशन पे, देखते हैं किस तरह का वॉल्यूम जनरेट होता है।
News when you want it with Bloomberg News Now. I'm Karen Moscow. President Trump has signed an order to consider reciprocal tariffs on numerous trading partners. In an Oval Office announcement, he said the world's trade balance is tilted against the U.S.
Our allies, in many cases, are worse than our enemies in this, having to do with trade. And this has been going along. That's why we have a $36 trillion amount of money that we owe.
And President Trump's order directs the U.S. Trade Representative and Commerce Secretary to propose new tariffs on a country-by-country basis and to consider offsets to both tariffs and non-tariff barriers. Commerce nominee Howard Lutnick says all studies should be complete by April 1st. Another legal setback for President Trump. A federal judge last night lifted the administration's funding freeze for the U.S. Agency for International Development. Judge Amir Ali cited the sweeping damage that the sudden shutdown has done to the nonprofits and other organizations that help carry out U.S. assistance overseas. President Trump and Elon Musk accuse USAID of being out of step with Trump's agenda. The ruling also bars Secretary of State Marco Rubio and other Trump officials from enforcing stop work orders that the Trump administration and Musk have sent to the companies and organizations carrying out foreign aid. The Trump administration's push to thin out the federal workforce is now targeting probationary workers. Bloomberg News has learned the Office of Personnel Management has told multiple agencies to lay off employees going through the probationary periods. As of last year, that covered about 10% of the civil service, mostly in defense and the VA. Meanwhile, a union chief tells Bloomberg Law the Department of Housing and Urban Development is cutting half its staff. HUD currently employs 9,600 people. The president is floating the idea of a three-way meeting with the leaders of Russia and China in which the countries would agree to cut defense spending in half.
When things straighten out, which I hope will be in the not-too-distant future, the meeting I want to have first is a meeting with China and a meeting with Russia on slowing down, stopping, and reducing nuclear weapons in particular, and also on not having to spend the kind of money we're all spending on weapons, military weapons generally.
And President Trump says the money could be spent better elsewhere. Ukrainian President Volodymyr Zelensky said he's prepared to engage with Donald Trump's peace initiative and signaled willingness for direct talks with Russia. The comments ahead of Zelensky's meeting at the Munich Security Conference with U.S. Vice President J.D. Vance came as U.S., European, and Ukrainian negotiators positioned themselves for talks between Trump and Russian President Vladimir Putin on ending the three-year conflict. Meanwhile, Zelensky says a Russian drone with a high explosive warhead hit the protective containment shell of the Chernobyl nuclear power plant in the Kyiv region during the night. But a senior Russian official rejected blame for the strike. Zelensky and a UN agency said radiation levels at the plant have not increased. In company news, Apple and Google have both restored TikTok to their mobile app stores. Sources say the iPhone maker made the move following a letter from U.S. Attorney General Pam Bondi. Both companies had removed TikTok in the U.S. to comply with the law passed last year. HSBC planning a new round of job cuts next week. Bloomberg News has learned that changes to its investment bank workforce will affect employees globally, starting in Asia. Moderna recorded another quarterly loss as vaccine sales wane, and the company had an unexpected charge for a canceled manufacturing contract. And Pope Francis has been hospitalized to continue his ongoing treatment for bronchitis in the hospital and undergo tests as well. Francis has long battled health problems, including long bouts of bronchitis. He uses a walker or cane when moving around his apartment and recently fell twice, hurting his arm and chin. And U.S. stock index futures, they are lower this morning, with S&P futures down 0.1%, Dow futures down 0.25%, NASDAQ futures down almost 0.2%, and the 10-year Treasury yield at 4.53%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Able to unwind or lower some of these tariffs from India by the time this visit is over?
Well, Joe, good to be back with you. Always a pleasure to be on Bloomberg. And I was appointed by President Obama, not President Bush, but got along great with President Bush. I think what you're going to see here, Joe, is the stage is set here between two great negotiators. President Trump has been promising to the American people, I'm going to make America great again. Mr. Modi has been promising, I'm going to make in India. Those two things are diametrically opposite. Now, the U.S. needs to use tariffs and other mechanisms to get access to this Indian market. My guess is Mr. Modi, after seeing Mr. Trump cave a little bit on the tariffs that he put on Canada and then removed them for the creation of a Canadian czar up there to monitor traffic on drugs, I think that gives Mr. Modi a bit of an opening here to say, here are some concessions on things like motorcycles, high-end cars, and I'm going to buy some more liquefied natural gas. We're going to do some more business deals. Now let's conclude the trade negotiations and let's get on to how we're going to cooperate on China, how to do new deals on intelligence, AI. Mr. Musk probably talked to Mr. Modi today about space, about Starlinks and other things. So my guess is they move this conversation along fairly quickly.
Well, and Ambassador, we do want to talk to you about some of those other things, too. But if we could stick on trade for a moment longer, India is not alone in having a relatively high rate that it puts on U.S. imports in terms of tariff. Can you just walk us through how we should be viewing India and other developing economies and why this tariff structure is in place in the first place and what it will do to those economies and the way in which they get revenue if this administration forces that to change?
Well, Kayleigh, as you remember, Mr. Trump did this back in his first term. He had tariffs on steel and aluminum. He removed the generalized system of preferences for India, which caused another tension or irritant. He was calling Mr. Modi and India the king of tariffs. And he was saying, if they don't do more to allow our product into their market, I am going to take more excessive steps than what I've already done. And so we've seen Trump 1.0. Now we've got Trump 2.0. And we have to be careful, too. I just listened to Mr. Navarro for a while. Egg prices are going up. Americans are very concerned about housing prices, construction prices going up. Inflation continues to be an issue. When you put tariffs and new prices on products being shipped in, American businesses pay those fees. And it costs either the consumer here in America or the U.S. business more money. And they usually pass on those costs to the American consumer. When we have inflation, as we are seeing right now, and as the recent report just came out the other day, you have to be really careful about how you use tariffs and where. And Kayleigh, the other point is when you use them, they must be effective. You can't simply use them like I think President Trump did against Canada, merely to say, OK, I'll remove them now, not on economic grounds, not on more manufacturing in the U.S., not based on more access to the Canadian market, but because Justin Trudeau is going to appoint a czar on drug trafficking. I think Mr. Modi looks at that and says, I can get an opening here. Maybe I don't have to make concessions. So I hope Mr. Trump can try to make sure that the American worker is who we're looking for here. More jobs created in the United States, more manufactured product here that the Indians will buy and help our economy grow, help protect India and their national security interests, and help our farmers, help our defense industry do better in the long term.
Last time the prime minister was here meeting with Joe Biden, the Biden administration was making a concerted pivot toward India when it came to trade and other relations at the expense of China. With that in mind, with Beijing in mind, what does Donald Trump want out of this relationship?
Well, Joe, that's one of the keys here. I think you put your finger directly on one of our shared key interests between India and the United States. As we negotiate, and the United States needs to be a tough negotiator on trade for our jobs, our manufacturing, our farmers, our middle class, we also have so much in common with India. And that's how we view China, more and more as a threat, more and more as a common strategic opponent in many areas. And how do we work together on technology, on artificial intelligence, on defense? President Biden sold the Indians about $3.3 billion worth of Predators, drones that will help protect India from China and from threats. There's more and more cooperation between the United States and India through the Quad, which is basically an agreement between the United States, Japan, Australia, and the U.S. to help secure the Great Pacific, the Indian Ocean, and ensure free trade and ensure prosperity and peace in that area. We're going to talk, you're probably going to see both countries talk more and more about energy. How do we sell India more liquefied natural gas and oil for their own growth and their security? They buy less from Russia and more from the United States. We are the biggest producer of LNG and oil in the world now. We and our producers and our trade should get benefit from that, not Russia.
Well, and certainly we know well about the energy partnership, and the president did speak in the office about how India is going to buy more oil and gas when we heard from them during that brief question and answer session with reporters. Again, we are expecting a joint news conference to take place shortly. So where do you expect, we've just discussed a lot of areas of cooperation, some difficulty when it comes to trade. Is there anywhere else you are watching for tension, perhaps, in the U.S.-India relationship, or beyond the trade issues? Do you not see that?
No, I think there are. The Indians call these irritants. We call them, tensions in the two countries. We're inevitably going to have those, Kayleigh, and we have to manage through those irritants. Iran can be an irritant at times. India is very interested in building a port up there so they get access to Central Asia and trade routes for them. The United States is very concerned about that. The Trump administration talked about this in their last four-year term. Iran can be a sense of tension. There can be immigration as a sense of tension. Both Mr. Musk and Mr. Trump have very different views about H-1B visas for high-tech workers. One wants them, one doesn't. India wants to be able to have more high-tech workers come to the United States. How is that resolved? What are the tensions there? And then there's some high-end technology that sometimes the United States has and treats very sensitively, as we should. And how much of that do we share, whether that's civilian nuclear technology, which we've decided to go forward and do more and more in partnership with India, or whether that's very high-tech intelligence sensitivity equipment that we want to share information, but not necessarily the equipment. How do we move forward there? And then AI. What guardrails do you put around AI to protect jobs and not eliminate a lot of blue-collar and white-collar jobs with the advancement of AI? We want AI in biotechnology and science, curing diseases, but we don't want it to start eliminating college entry jobs, legal assistant jobs, all kinds of white-collar jobs that could be eventually eliminated. How do we talk to the Indians who have several common interests in that? And then finally, over dinner, I think, Kayleigh, both of them are going to talk about the commonality that both countries have in democracy. We've both gone through elections successfully. There are 5 million Indian Americans in the United States and 300,000 Indian students studying here. How do we continue to build that bridge in safe and effective national security and legal ways so that both countries prosper in a win-win relationship?
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live from the Munich Security Conference today. These are your top stories. The future of Ukraine hangs in the balance here in Munich as European leaders consider their role in negotiations after Donald Trump's phone call to Vladimir Putin. A 50% cut in defense spending. Donald Trump floats the idea of a deal with Russia and China as a way to radically reduce military budgets. Plus, signs of tariff fatigue. Well, Bloomberg's dollar index actually slides to a 2-month low as investors wind back bets that President Trump will ramp up levies. Well, we have a really packed show. We have a host of top guests this hour, including the Singaporean Defence Minister, the EU's Economy Commissioner, Valdis Dombrovskis, and then, of course, a little bit later on, we also have a great panel here at the Munich Security Conference on the future of the U.S.
गाइस न्यूयॉर्क सेशन ओपन हो चुका है, ध्यान रखना थोड़ा सा वॉल्यूम आ सकता है कैंडल पे सडनली. न्यूयॉर्क सेशन इज ओपन नाउ. लास्ट ट्रेडिंग सेशन है, सैटरडे है, कल परसों मार्केट बंद रहेगा. थोड़ा सा क्वांटिटी साइज का ध्यान रखना. नाउ वी कैन एक्सपेक्ट क्रूड थोड़ा मूव करे और नेचुरल गैस इस छोटी सी रेंज के बाहर निकल जाए कहीं, अब नहीं तो ये इसी रेंज में है.
Building Ukraine's military. Well, I'm delighted to be joined by Anya Manuel, former diplomat and executive director now of the Aspen Security Forum. Anya, as always, thank you so much for trying to make us smarter on all of the diplomacy that's going on behind the scenes. Do you worry? Is this a historic moment for cooperation between the U.S. and Europe?
This is a historic moment. It may not be cooperative immediately, but I do think you need to everyone should take a step back here at the Munich Security Conference, and instead of focusing on the minute-by-minute headlines coming out of Washington, and I understand there are a lot of them, focus on the trends that are consistent. And I'd give you 3 important ones. One, from previous presidents to Biden to now President Trump, there has been a call by Americans to say our allies must do more. We cannot do these long, faraway wars by ourselves. The American people are sick of it. We're going to need the allies to step up. That's okay. Trump may say it less diplomatically, but it's a trend that continues. So that's one. 2, our southern border needs to be secure. Immigration has really become an issue. It's now a bipartisan issue. So to the extent that you hear the president talk about immigration issues, those things are going to be ongoing. And 3, I know there's a lot of talk about Russia here. China is front of mind for a lot of people in foreign policy circles in the United States, and there continues to be a bipartisan, fairly hawkish consensus on China. There's real worries that under Xi Jinping, China has become increasingly authoritarian, increasingly pushing out of its boundaries in a way that worries all of us.
And there's very clear anxiousness amongst European leaders that actually the U.S. with Russia will redraw the map. And this is being zoned in on when it comes to Ukraine. We're seeing conflicting messages, frankly, from the Trump administration, depending on who you speak to. Does it take time for real policy to come through? Like, how do you cut through the noise?
Yeah, every administration, the beginnings of an administration are really complicated. No one is in their seats yet. There are a lot of really good people that are going into the Trump foreign policy establishment. Marco Rubio, head of CIA, Mike Waltz, who's running the National Security Council, Keith Kellogg, who's here leading on Ukraine. Those are really good, smart, seasoned people, very thoughtful. The president is someone who likes to make big announcements and then see if a deal can get done. So I think you're seeing here a lot of announcements being made, but behind the scenes, I think you'll see some more careful and thoughtful diplomacy.
We're also expecting at 2 p.m. the speech by J.D. Vance. It's very difficult to know what's in it. But again, there's a murmur in the corridors at the Munich Security Conference that it will be more like a wrecking ball. Can Europe and NATO still count on the U.S. as a key ally?
Of course you can count on the United States as a key ally, but alliances are a real partnership. And I think president after president has said, look, we're spending 3.5% of our GDP on military European countries. We've gotten more countries to 2%, but boy, we're not quite where we need to be. So the Trump administration will say it more aggressively than maybe a previous administration would have. But the sense remains the same, that if it's going to be an alliance and a partnership, it needs to be a true partnership.
Anya, I know you spend a lot of time trying to understand China's thinking in all of this. How are they looking at this conversation between Russia and the U.S.? How are they looking at Ukraine and the Middle East?
Well, I wouldn't want to speak for the Chinese. They're here. I'm sure you'll be interviewing them. When Chinese officials have spoken to me in the last few weeks, trying to figure out how to approach this new administration, I have said what I would say here, which is help us. You know, there doesn't need to be a war in Ukraine that's killing hundreds of thousands of people. China is a big power on the world stage. They can use that power for good. And if they can use their good offices behind the scenes to get a lasting, sustainable peace that's right for the Ukrainian people, then that's a good thing.
You know what I feel is very different from other administrations is that between the deal and diplomacy, there's quite a fine line. So you don't really know ever what the end game is. Like we've seen, with Greenland, what we've seen with maybe minerals in Ukraine. How do you navigate that?
I think in all of these pronouncements, there's a core element of truth. And that's the thing to focus on. So if you talk about Greenland, all the headlines were Trump wants to take over Greenland. I think when you dig beneath the surface, there's a real concern in the Arctic about what the Russians and the Chinese in particular are doing. I think the Russians have dozens of icebreakers. I think the U.S. and NATO together have something like 2. There are real concerns about security. There are real concerns about critical minerals and where are we going to get them if the Chinese keep cutting off our supply. So if you look instead of where the ball is bouncing, but where the broad trajectory is, I think we can get to some reasonable solutions.
Where do you think Europe can actually either push back or negotiate? This is a region that is extremely splintered.
Yes.
You have elections in a couple of weeks in Germany. France is also kind of on the brink. How difficult is it going to be to have a united front?
It is difficult, but I hope we don't see it as a U.S. front versus a Europe front. I think we are often separated by the tyranny of petty differences. There's so much that the U.S. and Europe have in common, even with the Trump administration, which I know is difficult for some Europeans. But if you look at, for example, I gave you 3 big trends that are consistent. A fourth one is technology is going to continue to be front and center. J.D. Vance comes from the technology world. A lot of people going into the Trump administration come from that world. And there's an area where the U.S. and Europe could do more to collaborate, building out these data centers, building out the AI ecosystem that we all need, the U.S. and Europe together.
And do you think on AI it's going to be a real race between the U.S. and China, especially after the news a couple of weeks ago on DeepSeek?
That is the current race. There are a lot of others. I live out in Silicon Valley, so I see this up close. Wow, this technology is moving really quickly. It's moving really quickly in the U.S., in the Middle East, in China, in France, in certain ways. So I wouldn't count Europe out of all this. And this isn't going to be a have and have-nots. This technology is going to be diffused to everyone and help everyone. The question for me is, how can we do it at speed, at scale, but also making sure we have really basic safeguards, like just the national security safeguards to ensure that AI doesn't intersect with bioweapons, chemical weapons, cyber in a way that makes us less safe.
But was DeepSeek, the timing of DeepSeek was actually quite convenient. Was it almost a message, a political message, a geopolitical message, because it's open source and it's kind of saying like, hey, don't disregard China right now?
Interesting. Look, I don't know. What I've heard from Chinese friends and Chinese sources is that this wasn't a big Chinese government push to have DeepSeek. I think they were as surprised as the rest of the world was. And it just shows you how fast this technology is moving, how more and more is possible with less and less compute. By the way, DeepSeek wasn't trained on $5 million. That was maybe the final training run. So there's a lot that's still unknown. But no, I don't think this was the Chinese government saying, hey, look at us. They're running fast. We're running fast. The whole world is running fast.
Anya, thank you so much for joining us. I know you have to go to a panel. Anya Manuel there, the executive director at the Aspen Security Forum. Plenty more to come. We discuss Trump, tariffs with Bloomberg's head of economics and government, Stephanie Flanders. That's next. And this is Bloomberg.
On February 23rd, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in February 23rd, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back, everyone. Now, U.S. President Donald Trump has ordered his administration to consider imposing reciprocal tariffs on numerous trading partners. The development raises a prospect of a wider campaign against the global system that he says is tilted against the U.S. Now, Stephanie Flanders, Bloomberg's head of economics and government, joins us with the very latest. Stephanie, it's a good job you're head of government and economics. The two worlds are colliding more and more. What's the main message the Trump administration is trying to send to Europe and the world this week?
Well, I think we've seen in the last 48 hours he's just willing to and quite keen to turn things upside down in the space of a very short time. So even though we feel like it's been a very fast-moving first couple of weeks.
इस फिलहाल के लिए 6:30 की कैंडल के बाद थोड़ा बहुत वॉल्यूम आया है. नेचुरल गैस क्रूड बिल्कुल ही साइडवे चला गया. 7 PM पे डेटा है, गोल्ड और सिल्वर को इम्पैक्ट करेगा, तो ध्यान रखना. नेचुरल गैस रुक सकता है थोड़ा बहुत एफईजी पर. T20 एफईजी के नीचे अगर क्लोजिंग आई तो फिर एक टारगेट और 316 तक रखना. बाकी अब अगर ऊपर गया तो फिर ऊपर से वापस सेल मत करना, फिर ये हमारे पास रिटेस्ट वाला जोन रहेगा, वहां से देखेंगे सेलिंग अगर ये डायरेक्टली नीचे नहीं आता है, क्योंकि फिर सीधा सीधा कुछ ये फॉर्मेशन दे रहा है अगर रिटर्न यहीं से कर गया. बाकी फिर 317-16 के आसपास थोड़ा बहुत रुकना चाहिए. ओपन इक्वल टू हाई बनाएगा तो डायरेक्टली ब्रेक कर देगा, नहीं तो थोड़ा बहुत वहां पर रुक सकता है. सीधा क्रूड ऑयल एज वेल एक बार, क्या ये जाएगा ऊपर या फिर साइडवेज ही रहना है इसको. न्यूज़ की वजह से रिटर्न कर गया. क्या एफईजी पे आ गया है नेचुरल गैस. लेट्स सी रुकता है या फिर ब्रेक करता है. क्रूड में भी अब मैं एक्सपेक्ट करूंगा कि अगर ये नहीं रुकता है तो थोड़ा सा ऊपर आए, यहाँ पर जो सेलर बैठे हैं उनके एसएल हिट करे और फिर गिरे। ये एक अच्छा ऑप्शन हो सकता है यहाँ पर वापस सेल करने के लिए, क्योंकि सेम लेवल पे वापस सेल करना रिस्की हो जाएगा ऑब्वियसली है। दैट इज़ अ ग्रेट अपॉर्चुनिटी अगर हम इस तरह से देखते हैं यहाँ पर। तो फिलहाल के लिए रेंज ही आप मान के चलना। नीचे वाला लेवल ब्रेक हुआ तो फिर और गिरना चाहिए अगर अब डे लो 6186। बाकी अगर ये ऊपर ब्रेक हो गया 6265 तो फिर ये तो ब्रेकआउट हो जाएगा कैंडल अगर क्लोज होती है कंप्लीटली। देखो एक पॉसिबिलिटी ये हो सकती है कि एक अराउंड 6318 के आसपास कहीं रेजिस्टेंस बनने की, नई रेजिस्टेंस बनने की कोशिश हो। वन पी एम पे डेटा भी है, 9 मिनट रह गए हैं, देखते हैं डेटा क्या आता है। इंपॉर्टेंट रहेगा गोल्ड और सिल्वर के लिए ऑब्वियसली है। चल कैसे भी ध्यान रखना, अगर ये एफईजी ब्रेक कर दिया तो फिर ये नीचे थोड़ा सा लेवल लगाया है 316, यहाँ तक का फाइनल टारगेट रहेगा, यहाँ पर रुकना चाहिए। कैंडल ओपन इक्वल टू हाई बनाया तो अलग बात है, फिर तो गिरता ही चला जाएगा, बट अगर रुका तो फिर थोड़ा सा पुल बैक यहाँ से भी प्लान करेंगे। ओपन इक्वल टू हाई नहीं बनना चाहिए बस, जैसे यहाँ क्रूड ऑयल में ओपन इक्वल टू लो बन गया था इस कैंडल पे।
A 50% cut in defense spending. Donald Trump floats the idea of a deal with Russia and China as a way to radically reduce military budgets. Plus, signs of tariff fatigue while Bloomberg's dollar index slides to two-month low as investors wind back bets that President Trump will ramp up levies. Now, Donald Trump has left European leaders scrambling for answers just weeks into his presidency. He's ordered tariffs on European steel and aluminium imports and is threatening more to come. He also blindsided the EU, saying he'd agreed to negotiate an end to the Ukraine war with Russian President Vladimir Putin. Now, while his defense secretary has said NATO membership for Ukraine was unrealistic. So lots to discuss with Dominique de Villepin. He's a former French prime minister and former foreign minister who joins us exclusively from Paris. Monsieur de Villepin, thank you so much for speaking to Bloomberg. Given everything that's happened over the last 5 days, given what Donald Trump has said was told in the in the phone call with Vladimir Putin, do you worry that the risk of a global conflict has just gotten bigger?
Well, yes, the risks exist. And it seems very much that the season part one on Ukraine is already finished. The declaration of Pete exit and the phone call between Donald Trump and Vladimir Putin has said and closed almost all the possible doors for a good outcome on Ukraine. All the red lines that Ukraine has put during the last years concerning, for example, the possibility to get back the territories, it seems very much that that's not on the table. The possibility to have American troops on the ground, it's not on the table. The possibility for Ukraine to have a NATO guarantee is not on the table. So very much it looks like part one is finished, and now it's a matter of knowing what can the Europeans do. What can Ukraine do? What can Ukraine do with the European? But I think we are not going to have some very nice surprises coming from the US.
Yeah. But so, Monsieur de Villepin, to just be very clear, do you think the U.S. plan on Ukraine is the only viable plan? Do you think Russia should rejoin the G7? And do you think Ukraine needs to forget about joining NATO?
I think that it shows very clearly that the U.S. Trump administration has no ideas on Ukraine, no willingness to defend the interest of Ukraine, and is only interested by some big geopolitical plan. He wants to have a photo with Vladimir Putin. He wants to have some nice move like Vladimir Putin going back into the G7. But this is not going to change the reality of the Russian policy towards Ukraine, and not change the fact that in 2022 we have been going through a Russian aggression towards Ukraine. So I don't see any kind of solutions to the problems we are facing in Ukraine. It is like just closing the parentheses, just like closing the eyes on the reality and forgetting about this reality. It's a totally virtual game, and it shows that the US don't want anymore to cope with the European issues. The US wants to go and address the China issue, and of course now it's up to the Europeans to take their destiny into their hand and help Ukraine.
But so what is the way forward for Europe? Do you think the U.S. is still a reliable ally for Europe? And what's the right thing to do for Europe? Does Europe even have the money to put up for the $3 trillion that would be needed in defense and rebuilding over the next 10 years?
I think in the last weeks we had the answers. The U.S. administration doesn't want to have the attitude of an ally. They don't want to pay the price for friendship. And I don't think anymore in U.S. foreign policy the paradigm of democracy and values is anymore at the center of their concern. The main paradigm for U.S. policy is the America's interest and dollar. Everything is guided by the single interest of the U.S. and not anymore by the idea of having a role to play towards the world, having a role to guarantee peace around the world. So it is a huge and main change for world policies, and everybody has to take the lessons. For Europe, it is the opening of a new chapter, and they have no other way than to write their own story from now. Of course, it's very costly. Of course, it's very painful. But this has been on the table for many years now, and I'm very enraged by the fact that not as many Europeans has been clear-sighted enough to take the lessons before, because all this was written, and now we have to face realities.
Monsieur de Villepin, how seriously do you take Trump's plan for Gaza, and what can Arab countries do to prevent it?
I think that the same situation we are seeing in Ukraine, we are seeing it in Gaza. Donald Trump doesn't care about the Ukrainian people.
Okay, डेटा आ चुका है गाइस 7 PM का. रिटेल सेल्स और कोर रिटेल सेल्स दोनों ही डेटा नेगेटिव है डॉलर के लिए, पॉजिटिव है गोल्ड और सिल्वर के लिए. ठीक है, रिटेल सेल्स और कोर रिटेल सेल्स का जो डेटा है नेगेटिव फॉर यूएस डॉलर, पॉजिटिव फॉर गोल्ड एंड सिल्वर. बाकी एक नेचुरल गैस में लोगों ने सेल किया है, रुक रहा है एफईजी में. थोड़ा सा ध्यान रखना, इस एफईजी के नीचे अगर कैंडल क्लोज हुई तभी ऊपर नीचे आएगा, बेरिस होने के चांसेस रहेंगे. अदरवाइज अगर ये यहीं से रिटर्न कर गया इन केस, तो फिर थोड़ा सा प्राइस एक्शन देख लेना. ये कुछ इस तरह का बना सकता है उस केस में. अगर ये यहाँ से नीचे आता है तो फिर एक पॉसिबिलिटी रहेगी कुछ इस तरह का फॉर्मेशन देने की. तो ये एफईजी बड़ा इंपॉर्टेंट है. वापस अगर रिटर्न करता है तो वापस सेल मत करना, फिर ऊपर वाले लेवल पर जाने का वेट करना. नीचे आ जाता है तो फिर बाइंग जरूर बनेगी. कैंडल का ध्यान रखना, ओपन इक्वल टू हाई पे सेल मत बाई मत करना. अगर नीचे आ जाता है एफईजी ब्रेक करके कर दे तो बेटर ही है. 9 पॉइंट का मोमेंटम समथिंग कुछ कैच होगा. क्रूड रेंज है, किसी एक साइड के एसएल जाने जरूरी है, या तो ऊपर या फिर नीचे, तभी कुछ बड़ा मूव आएगा. नीचे ब्रेक होता है तब भी अच्छा मूव है, ऊपर ब्रेक होता है तब भी अच्छा ही मूव है. राइट नाउ इट इज ऑन अ रेंज. करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल. जिन लोगों ने अभी तक लाइक नहीं किया फटाफट से लाइक करते हैं स्ट्रीम को. अब कोई डेटा नहीं है आज, ध्यान रखना. देयर इज नो डेटा शेड्यूल फॉर टुडे. वॉल्यूम ठीक है, वॉल्यूम ठीक हो चुका है. एफईजी ब्रेक करता हुआ नेचुरल गैस में, लेट्स सी कंप्लीट ब्रेकडाउन होता है या फिर नहीं.
My sons have turned on a television set in 5-6 years. So if no one's turning on the TV, they're finding their content in other places. It's not like they don't like the content. It's just where they're finding the content.
Why? Like, what is so special about the streaming experience?
Well, I think people are using their phones a lot differently than they ever have, their iPads. The distribution platforms have completely changed. And people want to watch where they are and when they have the opportunity. Sometimes you're sitting at a dinner, whether I like this or not, and a text comes to you that the Knicks are tied 101-101. Do you want to watch? Click here. Well, now you can watch the last 2 minutes. There's just too much access and too much opportunities to not change your viewing habits.
And where does big TV go?
It sticks. There's always going to be room for a lot of people, including me, like to watch on big TV screens, 55-inch, 75-inch.
Oh, you got a bigger one than 55-inch.
Okay. How big is yours?
I actually have an 81.
Holy.
Yeah. Hey, look, I saved a couple bucks. I work hard. Yeah. You know, why not? I just plaster my whole wall with the TV.
Yeah. I mean, I don't enjoy viewing on a phone, except when that's the only access I can get, right? If I'm in an airport or I'm somewhere else and I want to see the game or I want to see the content, you'll watch it, and you're getting more attuned and comfortable with watching on smaller devices. In the beginning, it was horrible. Now it seems to be natural.
I recently spoke to Disney CFO Hugh Johnston. I've known this guy for over a decade. He used to be PepsiCo CFO. And I've asked him recently, like, what do you want to do with these TV assets? Now, he's told me we're going to hold onto them, but you look at the profits that they're putting out. I mean, it's seemingly declining every quarter. What's the end game for the likes of an ABC and these legacy media assets?
Listen, we're in certainly some changing times, so to speak. But these brands like Turner or ESPN or ABC, the media, what I would call established media companies or traditional media companies, they have to figure out how to diversify, right? The cable networks are still spilling out a tremendous amount of EBITDA. Maybe not what the EBITDA was 5 years ago, but still very, very profitable.
So they make money.
They make money, but they're public companies. And public companies that don't have a growth strategy, what happens to their stock? Their stocks decline. Doesn't mean that the asset itself isn't still producing revenue and EBITDA, and they are, and pretty sizable ones. So now what happens is, does private equity come in and sort of take it from a public perspective into a private perspective, which could happen. Ultimately, some of these cable companies could go private and still spin off a ton of cash. So that's one, what I would say, solution, opportunity, whatever. But while you're having this cash, can you also then use that and invest in other things that are growing, like streaming services? I think that's why you're seeing, HBO Max or Max come out. Sorry, not HBO anymore, just Max.
It's hard to keep track.
Peacock, Paramount Plus, Hulu, ESPN Plus. These are extensions of content that these media companies own, and are figuring out ways to have a direct-to-consumer relationship.
Like, I think we're all looking at Comcast. I mean, they've announced that they're going to want to split that company up. Do you think it's just those spun-off assets are privately owned?
Could be. I mean, that's going to be Mark Lazar's decision, how he does with SpinCo, so to speak. But one thought process is, there's not going to be, from what I read, a lot of debt put on to those assets, which normally when you spin something out, you kind of throw your debt over the boat with it. He seems to, what I've heard is that they're not going to load that up with so much debt, so that would give opportunity to invest and figure that out, buy other cable companies, figure out new types of strategies with that. I mean, I think you could go and acquire some programming and then maybe simulcast it out across all of their platforms, because he has maybe 15 to 20 cable networks. Imagine if you went out and bought and purchased something that you can now simulcast it across all of those networks at the same time. Not that those networks are all similar, but there's things that you should think through like that. So he may be aggressively going out and purchasing cable networks or programming, and or he may eventually turn around and take it private. Who knows?
Is the day over? Because you manage, I imagine, a lot of talent over at Turner through the years.
Yes.
Is the day? Yes, right. I mean, they're all. Yes, but is the day of the well-paid anchor? Is that over? And we've seen cuts across the board here, and we've continued to see them into this year.
I think you have to think about, when you say the traditional well-paid anchor, is Charles Barkley worth what he's getting? I think so. He attracts viewership. He attracts advertisers. And there are reasons why you pay people.
Stephen A. Smith?
Yeah, Stephen A. Smith.
You turn on the TV to watch him.
Right. You have some people love him, and he's polarizing, right? And so some people love him, some people hate him. But the point of the matter is he brings eyeballs to the networks. And so I don't know if it's over. Listen, there are podcasters that are making tons of money. That has nothing to do with TV.
Huge money.
Right.
Is that a bubble? I mean, what was the $125 million deal?
It's consumption habits. All of these things we're talking about today, whether you're in the podcasting business, the streaming business, the television business, every single one of them have opportunities, right? And every single one of them will pay talent where they believe it will drive revenue, whether it's advertising revenue, subscription revenue, or merchandise revenue.
Are you surprised to see Fox get involved in podcasts? They recently made an acquisition of a right-wing podcast platform, and then Netflix.
I'm not familiar with that.
Netflix now too, rumored to be interested in podcasts.
Podcasting business is a extension of IP that you may own, and it's acquiring new IP that you may end up put into film, you may put into TV shows. I mean, some of these podcasts are ending up going to turn into different types of IP and different types of content. So I think whoever's managing those businesses have to think through all of those different aspects.
It's like our podcast, David.
It's like our podcast today.
We just crossed the 1 billion viewer mark.
Congratulations.
Not yet. We're trying to
just today. Today.
As they would say, the growth is up and to the right, David. It's up and to the right. Hang with us. We're going to go out for a quick break. We'll be right back.
मार्केट कितना वॉलेटाइल हो रहा है पता है? मैं सोच रही हूँ अपने म्यूचुअल फंड्स के एसआईपीज बंद कर देती हूँ।
मार्केट के अप एंड डाउन मूवमेंट को प्रेडिक्ट करके इन्वेस्ट करना इम्पॉसिबल है। फॉलिंग मार्केट्स में सेम एसआईपी से तुम्हें ज्यादा यूनिट्स मिलेंगे और राइजिंग मार्केट्स में कम। ओवर टाइम ये वॉलेटिलिटी एवरेज आउट हो जाएगी।
इसीलिए मैं सजेस्ट करूंगी स्टिक टू योर एसआईपीज।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
All right, welcome back to Opening Bid. Having a fun chat here on the future of media, a little sports with David Levy, co-CEO of Horizon Sports and Experiences. So talk to me about what you have been working on at Horizon.
So when we started Horizon Sports and Experiences, Chris and I, about 2 years ago actually, our vision was really very simple. We wanted to kind of create the next generation of a sports marketing agency, taking the best of what I would say brand consulting and brand sponsorships and activations, and coupling that with the ownership and creation of IP, and create our own IP. So the first one we did was the Pickleball Slam. We're now, again, this Sunday is going to be Slam 3, the Duel in the Desert.
Who's playing?
Agassi and Steffi Graf, who won Slam 2, is playing Roddick.
How can you not watch that?
I know.
That's like nostalgia factor right there.
And is playing Roddick and Jeannie Bouchard. So for $1 million purse, live on ESPN, at 1 o'clock West Coast time, so 4 o'clock East, right before the All-Star game, which airs at 6. So it's a 2-hour window, $1 million purse at Mandalay Bay. Kind of special.
Why pickleball? Why is pickleball still having that moment?
You know, it's one of these growing sports that you can play easily. There's now 36 to 40 million people playing pickleball in the United States. It's unbelievable, men and women. And it's growing because people are actively playing the game itself. Now, what we did at HS&E is we said, listen, we have this huge growth sport, a recreational sport that is growing like crazy. Let's put the greatest brand names in racket sports in this. So our first one was Agassi and Chang versus Roddick and McEnroe.
Wow, it feels like I'm back in my mom's living room as a kid.
And but they're great racket players, right? The best of the best, you know, Grand Slam champions. And put them in $1 million purse. One of the things that has to be in these, what I would call destination programming, appointment viewing, so to speak, you have to make sure it's authentic. So if they're not playing for anything and it's an exhibition, I don't think it works. So they're playing for $1 million purse. That means real money to their bottom line. They're playing live on ESPN, all right? Not on, you know, I'd say ESPN 7 or 8, so to speak. So has to be on a premium channel with a premium event with the marketing capabilities. We also have ticket sales. We've sold out Slam 1 and Slam 2. We have merchandise that we're selling. So it's kind of like, you know, a flywheel where we create the IP, we sell the sponsorships, we sell the activations, we sell the merchandise, and we sell the tickets.
It's almost like we're seeing a complete reinvention of what sport is. I mean, you have pickleball, of course, a sport, but I'm watching what TGL is doing over with Tiger. I found it fascinating that I have wanted to watch Tiger hit up against a digital screen, and I've been wanting to watch the whole program.
So that's a really good topic. So one of the other things that we're invested in, we invested in a new 3-on-3 women's basketball league called Unrivaled. And Unrivaled takes the best top 36 WNBA players, one specifically missing, but hopefully get her next year, Caitlin Clark. But other than Caitlin, all of them are down there and competing really, really hard. At the same time, TGL launched as well. So you have two, let's say, new leagues in the sports space. The difference, I think, is interesting. Both of those leagues, when I say the names on the back of the jerseys mean something, obviously TGL has all the great brand names, Tiger, Rory, on the back of the names of their jerseys. So, well, they don't have jerseys, but you know what I'm saying. Yeah. Great brand names. And the same thing for Unrivaled. I think the difference, and this is where I'm interested to see how the golf league happens and the success rate of it in the future, is they don't seem to be competitive. It seems to be fun. It seems to be interesting. You just said, I can't believe I'm interested to see Tiger hit the screen.
I just need to see Tiger. Like, it's strange because I'm now at the point where if Tiger's not in a golf tournament, I'm not watching. So if I can get a little taste of Tiger on my TV screen, my 81-inch TV screen, I'm going to watch.
But what happens when Tiger's not there?
Well, then I don't watch any golf anymore.
Right. Well, my point is, what happens when Tiger's not playing in that league at that particular time, that team aspect of it? So I think, and the difference in Unrivaled is it's competitive every night. They want to win. So the product on the floor is authentic, real, and people are tuning in for it. The product on the what's it called? TGL. Tour Golf League. The TGL product right now, I don't think it's that competitive. I actually think it's more like a unique situation that people are tuning in to see what it's all about. At some point, that has got to get competitive, or I don't think it's sustainable. Where I think Unrivaled, because it's so competitive and the product is so good, it's going to be long-term and successful.
Why are these new, I mean, they're not new sports, they're different takes on sports. Why do you think that they're being created? Is it attention span by the next generation of viewers? It's short. They don't want to sit and watch 18 holes of golf, so just give them the best of golf or basketball in that 30-minute time frame or however long it takes.
Consumer habits are certainly changing, but I think it's got to be quality and authentic. It just can't be made up, and just for the sense of making it up. I do believe sports in general is the last destination programming on television, appointment viewing. You have a built-in fan base, meaning, you know, if you love football or you're in fantasy football or you like the Giants or you like the Jets, you're going to tune in, right? It's a built-in audience. When you develop a scripted product for television, right, and it costs $5 to $10 million per episode, you have no idea whether it's going to be successful or not. Almost zero. It's, you know, matter of fact, I would tell you that probably 95% of all scripted programming is a failure after season 1. 95.
Wow.
Right? So when you go into the sports, you know, and you say, listen, should I buy the NBA? Should I not buy the NBA? Should I buy golf or not golf? You know you have a built-in fan base. You know that ultimately the Super Bowl, which we just went through, is it going to do a 55 rating or is it going to do a 50 rating, right? But you know it's not going to do a 10 rating.
Yeah. Isn't it great you don't have to worry about these things really anymore?
Yes. Well, I do. You know, I wish I didn't have to worry, but now, you know, we're investing in our own, you know, IP. So I'm hoping that the Pickleball Slam does really well. I'm hoping that the Shark Beauty Women's Champions Classic that we did last December on Fox Primetime, we're hoping that does well. Both of them have been successful because my background kind of understands the Rubik's Cube of where these events need to show up, the time period they need to show up. It's not unusual or didn't come out of thin air that the Pickleball Slam is from 4 to 6 on ESPN, and then at 6 o'clock on TNT is the NBA All-Star Game, right? I didn't want to put it at 6 o'clock because it wouldn't be successful. So you have to find these little time periods that work.
I want to leave enough time on this one.
Yeah.
I'm sure you've seen Netflix's push into live sports.
Yeah.
What do you think of that? And at the end of the day, is Netflix and Amazon, are they the ones that are just going to have all these sports assets? Because I can't see how legacy media, with the balance sheets that they have today and where they're likely to go, they can support the costs of putting this programming on.
Okay, those are like 4 different questions in
I mean,
one.
I used to be an analyst. I'm like dumping all these things. My time period is short.
A lot
here.
of 4 questions. So first, let me say, let's talk about the streaming services in sports. These streaming services were built when I was back at Turner and didn't even have a streaming service at that. Well, we had HBO, but not what I would call, you know, the streaming services that are today. That was more of a premium channel on the cable business. But the streaming services were built on the backs of content libraries, right? Then they moved into original programming, which was really smart. And they built incredible subscriber bases. But they were doing the same thing, right? Original content, libraries, original content, libraries. And eventually what happened was they were starting to have big churn on, you know, because it's very easy to cancel your streaming service than it is your cable, right? You could you push a button on streaming, you're out. You can watch Yellowstone and then click out. I can watch this and come in and come out, right? So the churn started to happen far greater than it used to. And so in order to stop churn, you have to provide different types of programming, right? And so now sports is starting to fill and eliminate the churn rate. So if you know, let's use Amazon for example. They had Thursday Night Football, right? So that was 18-week schedule. That's 18 weeks that if you want to watch Thursday Night Football, you're not canceling your Amazon subscription, right? Netflix now has got the WWE. If you're a WWE fan, right?
You're not canceling Netflix.
You're not canceling Netflix subscription, so you're churning. Now, you're also probably adding new subscribers. If you didn't have the WWE, right, you're not going to get those new subscribers. So Netflix, in order to continue to grow their sponsorship, they have to get into the sports business, right? Amazon getting into this. So that's why you're seeing this shift, because they are adding new subscribers. because Wall Street is demanding that they continue to grow.
Sure.
Okay. And again, as I just mentioned earlier, you know, scripted programming, you don't know whether it's successful or not. You know sports is going to be successful, and you know they have built-in fan bases.
Sure.
Those fan bases travel into the streaming services. So I think it's to help eliminate churn and to drive new subscribers. Where do I think, and you said this, is this where all sports are going to go? No, I think there's an opportunity even for the television business in the simulcasting business. And let's just take a look at the NBA deals. Every NBA deal that was just recently done, NBC bought it for their broadcast channel because guess what? Big reach. But they also are going to air games on Peacock, right? Amazon and ESPN is going to air it on ESPN and ESPN, their new direct-to-consumer, what's it called, flagship. Flagship. Yep. You're going to see that these media companies are going to buy it for cross-platform opportunities.
Let me get your hot take on this one before we let you go.
Sure.
Does the NFL opt out of its deal in a couple of years?
I would be surprised if they didn't, because it was a 7+3. Is that what it was?
Yeah.
So, you know,
they can't. To be clear, they can't opt out with Disney. Just everybody else.
Okay. So I don't know whether it's Disney or whoever they can opt out with. I would say 7 years is a lifetime in this media business right now. It is evolving and changing at every single moment. So it would be surprising to me that there would be some change in viewership habits and consumption, in maybe even in legal matters, or bankruptcies or things like that nature over these next 7 years, that they wouldn't opt out. I'd be surprised if they wouldn't.
It's going to be an interesting time. We're going to leave it there. David Levy, co-CEO of Horizon Sports and Experiences. Good to see you.
Good to see you, and I hope everybody watches the Pickleball Slam
and
this Sunday.
You picked the Eagles to win, right?
I did pick the Eagles.
There we go. See, we just leave it on that. All right, and that is it for the latest episode of Opening Bid. Continue to hit us with those 5 stars on all the podcast platforms and likes on YouTube. I'm really enjoying all your comments. I try to answer them all. We'll talk to you soon.
Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Brad Smith alongside Madison Mills this morning. Let's get to the three things that you need to know today.
First up, U.S. stock futures wavering this morning after the latest read on the economy. Retail sales data for January falling by more than forecast for the month, marked by wildfires and severe weather. The value of retail purchases decreased by nearly 1% in January, the biggest drop in 2 years, while December data was revised to the upside.
Plus, President Trump imposing reciprocal tariffs on numerous trading partners to rebalance U.S. trade relations. The tariffs would be customized for each country, aiming to offset not just their own levies on U.S. goods, but also non-tariff barriers, and could take weeks or months to complete. The move is seen as a potential opening bid for negotiations.
And on the earnings front, shares of Coinbase falling despite the company reporting revenue and profit that topped Wall Street estimates. The crypto company saying revenue more than doubled for the quarter amid the return of retail investors. This year alone, shares are up 20%. Meantime, Moderna shares tumbling after the drug maker recorded another quarterly loss, aided by an unexpected charge for a canceled manufacturing contract.
Retail sales fell at a steeper clip than anticipated in January, while retail sales ex-autos posted a surprise decline. 9 of the report's 13 categories saw decreases in a month marked by wildfires and severe winter weather. Here to discuss what this latest reading tells us about the U.S. consumer, we've got Yahoo Finance's Josh Schaefer here. Josh, the newsroom was abuzz when we saw the numbers cross.
Of course.
We all huddled around your desk just to see what was going on. What did we ultimately find?
Yeah, so retail sales, as you said, declining at 0.9% in January. That's the largest decline that we have seen in a year. Also probably notable that what was also a year ago, January retail sales, what often happens in January, you have a little bit of a holiday spending drop-off, right? I think a lot of us might have spent more money on perhaps gifts or traveling or something.
Stop looking at me like that.
Over November and December, maybe we hit some shoe deals, Brad, and then January, we do a little bit less shopping, right? So to see a drop in January isn't necessarily surprising. Economists arguing you add in the severe weather, just kind of adds up to a print that makes a little bit of sense. Of course, it still is a larger drop than economists had expected. One thing of note is sort of with these releases, they are month to month, so they're a little bit volatile. Sometimes you see sales will dip significantly in January, then you get kind of a bounce back effect come February, so that will be something people are watching for here. It's hard to really make a trend out of 1 month of this data. You would need it to fall several months in a row to really say, okay, consumers definitely slowing here. But I think overall, what it does do is it is 1 month of data and it's 1 month of consumer spending that sort of indicates perhaps, at least per some economists' early estimations, maybe GDP will fall below 2% in the first quarter. It's a little bit hard to recover from this big of a decline. But again, 1 month perhaps does not make a trend at this point, just something that I think we'll probably have our eyes on. Doesn't look like the market is necessarily overreacting to this report either.
Well, it makes me wonder if the market is taking a note from Bank of America's Michael Hartnett this morning, saying that there's this idea that maybe the hotter than expected inflation data that we have gotten throughout this month is indicative that Trump might be handcuffed by the market because he's not going to be able to go full throttle on tariffs because those would also potentially be inflationary. What are you hearing from sources about the totality of those impacts on the inflation picture?
I mean, I think, Maddie, if you look at the overall market action this week and the market action that we've seen over the last 2 or 3 weeks, the market still does not believe that we are getting full tariffs, right? I think that's clearly what the market has shown us at this point. And I think to Hartnett's point, we've talked a lot about the different tools that Trump has and what he can actually do to sort of impact the market. Tariffs clearly would be one of them. And it doesn't seem like if that's going to stoke inflation, that would be something the president would want to do. Again, we heard from the administration, one of the key things they're watching is the 10-year Treasury yield, right? Well, think about if he were to put full tariffs, we're talking about inflation, what's that going to do to rates? Likely moves your 10-year higher. We know the correlation we've been seeing with 10-year higher, that likely means stocks lower. So if he can avoid doing that, that would seem like a likely option at this point. But again, remains to be seen a little bit, of course, on the tariff front. Seems like we're getting a new headline on that every 30 minutes or so. So perhaps something will change while we're sitting at this desk today. But for now, seems like it's delayed, and the market doesn't really trust that the full tariff, the full Trump tariff plan is ever really coming, at least at this point.
Right, and the market also anticipating that the Fed is going to kind of sit still until it sees what the impacts of tariffs are on the economy and where that puts them towards that 2% goal that they've been crystal clear about and reiterated time after time again to this juncture.
Yeah, and then you wonder, Brad, we talked about one bad month of retail sales. If it continues, how more complicated does this Fed conversation get, right? If you had something like employment starting to slow a little bit more than we thought, and you have a little bit more pressure on sort of the Fed's other side of the mandate, perhaps maybe that's a conversation that comes into play too if we continue to see some weaker economic data like this. Weaker economic data has largely not been a part of the story we've been talking about for the last couple months.
Absolutely. Josh, thanks so much for breaking this all down this morning. Appreciate it. On Thursday, President Trump laid out his plan to impose reciprocal tariffs on all foreign nations, saying he wants a level playing field between the U.S. and its trade partners. At a press conference, the president called his plan simple.
I have decided, for purposes of fairness, that I will charge a reciprocal tariff, meaning whatever countries charge the United States of America, we will charge them. No more, no less. In other words, they charge us a tax or tariff, and we charge them the exact same tax or tariff. Very simple.
So yes, in theory, the plan sounds simple, but reality may prove much more complicated and more expensive for American consumers as the effective tariff rate is driven up.
That's right. So the effective tariff rate, let's really break this down because that includes the tariffs applied not only to the finished products, but also every single individual imported input, like the raw materials used to make that final product. So take, for example, a finished product like a car. Not only would the final product be taxed, but levies could also apply to products used in production, like electrical components, metals, and things like a literal battery itself. Once reciprocal tariffs are put in place, the effective tariff rate could increase as retaliatory measures escalate taxes on those individual components and materials. President Trump has also said non-tariff barriers, including subsidies, regulation, and value-added tax, will be considered when calculating retaliatory measures. So take the UK, for example. We're currently at a 3% tariff rate. Under the new order, taking into account regulation, IP, all those non-tariff barriers you see on your screen, that could land us closer to a 20% tariff. And that's where negotiations would start, at 20% versus 3%. So the tariffs could also hit developing countries particularly hard, given that they have some of the widest differences in tariff rates charged on U.S. goods brought into their countries compared to what the U.S. charges them.
So what does President Trump's latest tariff plan mean for the U.S. economy? Joining us now for more on this, we've got Wendy Schiller, who's the professional of political science at Brown University. Wendy, always a pleasure to grab some time with you. Let's start there. What economically is the pass-through here that we're anticipating, and over what stretch of time would that ultimately be seen as well?
Well, this is the big uncertainty that people are trying to sort of gauge. You know, what tariffs will actually hold. We had the president announce very large tariffs against Canada, Mexico, and within 48 hours they didn't exist anymore. So this time, though, as opposed to the Trump 1, Trump 2 is using tariffs strategically, not just for economic goals, but for political and geopolitical goals. So fentanyl on the northern side and migration on the southern side, and he wants to claim victory. So what he's looking for from Europe, that's an interesting question mark. Is it greater contribution to NATO? Does he want to push them in other realms that aren't economic? And the other issue is what happens if the summer comes and there's inflation and there's layoffs and consumer goods are more expensive? That will hit the president's approval ratings. And even though he cannot run for re-election again constitutionally, cares a lot about being popular, so does his GOP allies in the Congress. So we're going to have to see whether he pivots, where he goes back and forth over the next couple of months, whether he edits the recommendations from the Commerce Department. But I think the American voter doesn't really think about this right now because it's not hitting right now. But we will see that it will hit. We've seen this before, and in particular with subsidies in the farm and exports. This really hits farmers. These are Republican states. So I think you're going to see a lot of conversation between the White House and the Congress in the coming months on tariffs.
Sounds like you agree with Michael Hartnett of Bank of America this morning, saying that rising inflation handcuffs the president's ability to go full throttle on tariffs, to summarize Hartnett's words there. Do you agree with that Trump will be handcuffed?
Well, I think it's sort of a dream signal to the White House, to the president, who rarely ever feels handcuffed, that we've seen. You know, he'll push the boundary. He'll use it to negotiate. And if you can give him a victory, he'll back off. And I think that's what people have to figure out in all these industries and all these trading partners. We are a global economy. There is no question about that. You can't just make one move and not expect ripple effects. But if you can hand Trump some victory, even symbolic, then he will back off. And I think that's what the markets and that's what international, multinational corporations have to do right now to give him something else that he can focus on.
Wendy, you mentioned something really key in that he's not going to be running for re-election. So approval ratings, all of the making sure that you're satisfying the base, it doesn't matter the same as it does for him, but perhaps for the party that he's representing, it does matter. And so all those things considered, who would he be trying to appease if he does go full throttle, regardless of what inflation is already doing?
I mean, I think what we've seen so far from this president, by the way, he can't really run. He can't certainly be elected or serve, but that doesn't mean he's not going to try. So I don't want to be on the record as saying he's not doing that. But I will say that he is basically exerting and flexing U.S. power. That is what he wants to do, domestically and internationally. He's pushing Putin to come to the table, theoretically, on Ukraine. He wants to figure out the Israeli-Gaza situation. This is his ambition, and his ambition feeds his desire, I think, to have a better approval rating, to be thought as a better president than the first time, and lay the groundwork for options should he decide to try to run again, even though right now he's constitutionally prohibited. So right now it's about him, and it's about what people think of him, and being a globally powerful leader. And that's where we've seen his sort of exercise of power much stronger in the early days than we did in his first administration.
And you can't really talk about tariffs right now without talking about tax cuts, because to a degree, Congress is factoring tariff revenue into that massive $4.5 trillion tax package that they unveiled last week. But Trump, he seems to be in negotiation mode, not in revenue building mode. If tariffs do end with concessions, if Trump gets a little bit from these countries and then backs off, is that a negative signal for tax cuts, which the market is very excited about getting?
No, I think that Trump will do absolutely anything in terms of negotiation with the Congress to get his tax cuts. I mean, and Congress wants to do it too. They're all up in the House of Representatives anyway for re-election in 2026. They don't want to walk out the door without tax cuts. They all want it except the ones who care about the deficit. They're thinking about raising the debt ceiling by $4 trillion. And that's a pretty big credit card for the president. And thinking about debt, there's no way debt will go down. The national debt won't go down. They're not going to be able to cut enough spending in nearly enough time without harming the economy. We've just seen that even attempting to talk about massive cuts in the federal budget sends shivers through the economy. So, I don't know how you balance the budget here. You don't. So you incur more debt. Trump doesn't care about debt. He ran his whole life in terms of business on debt. So in that sense, he's not worried about it. He's going to put that onus on members of Congress, particularly in the Republican Party, who have been saying they care about it. But in the end, we'll pretty much have to vote to increase the national debt.
Yeah, well, ultimately, some of those debts led to falsified business records as well here, which we're convicted on. Wendy, thanks so much for taking the time.
My pleasure.
Coming up on Morning Brief, we dive into earnings and break down what's weighing on Moderna shares. Plus, we get the latest read on crypto demand as Coinbase reports revenue that more than doubled amid a return of retail investors. And we count you down to the opening bell on Wall Street after a tumultuous week for the stock market.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Yahoo Finance Sports Report, a unique look at sports business brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'll be breaking down the financial side of the game for your financial gain. We'll go beyond the headlines, analyzing all the latest sports news, the teams, the trades, and billion-dollar deals, so you and your portfolio will win big. Catch Yahoo Finance Sports Report on Thursdays on all your favorite podcasts and streaming platforms.
That's the opening bell that we're tracking up against here, just seconds away from right now as we're taking a look, hey, there it is on your screen, at Carman ringing the opening bell at the NYSE. And you got another opening bell, this time at the NASDAQ for Saturday Night Live here. And looks like Jay Farrow up there. You got some of the original, the OG cast members up there ringing the bell here. Oh my gosh, yeah, that is, I mean, anywhere you look, you'll spot somebody who you know from SNL from over the years there as we take them full screen. Taking a look at the major averages coming into the start of today's trading activity. The futures were pointing lower here. Despite the clapping and cheering, there's going to be some sad faces out there here today. But we've got a lot of time left on the clock as we're just beginning today's trading activity and taking a look at the Dow Jones Industrial Average, highlighting that. That's flat, just barely to the upside as of right now. And then additionally here, taking a look at the NASDAQ Composite. Well, that's going to calibrate for us in a hot second. S&P 500 flat, just barely to the upside here. And then just going to load up a chart here for us as well, so you can see what the context is coming into the start of today's trading activity. S&P 500 past 5 sessions, you're seeing it net positive by about 1.5%. And then the NASDAQ Composite, okay, seems like that's calibrating here this morning. We're seeing that higher by about 1.5% to start off today's trading activity. I want to take a look at some of the sector activity as we begin today's trading session. 11 S&P 500 sectors. Got them pulled up here for you on the screen so you don't got to go looking for them. XLK, technology, pulling up the caboose. That's down right now by about 0.1%, but leading the pack out in front here in some Kelly Green. You're seeing that higher. Consumer discretionary by about 0.7%. We've got more Kelly Green on the table here than the red of the Chiefs, which are in decline right now and perhaps just out playing golf somewhere. But anyway, happy parade day to all the Philadelphia Eagles fans out there. And taking a look at the NASDAQ 100. We are seeing quite a bit of red here. Let's put this on an equal view just so you can see exactly where things are shaping up. More gainers than decliners here, leading the pack. Airbnb, we broke down those earnings here. Investors certainly catching a bid there this morning. And as I was trying to blow up that chart for you, ultimately the number says 13% higher. So trust me on that one. Applied Materials, we broke that down for you a hot second ago as well. You're seeing that start off the day lower by about 5% right now. Also, right next to them in some lake red, some maroon red, whatever you want to call it down for Palo Alto Networks by about 5%. For a deeper dive on today's early tape, let's get to Yahoo Finance's Jared Blickery for a look at what's moving.
Thank you, Brad. I want to start out with the indices, and I've been kind of hammering home how they have just been begging to break out. And this is the NASDAQ and as well as the S&P 500 that I wanted to look at. Let's put the 5-day chart on there. Well, it doesn't want to populate just yet, but suffice to say, a lot of these stocks near record highs. And so we had this bullish, we had a bullish reaction off of CPI Thursday morning, and it might not have seemed that way. However, it was a big day. It might have been Wednesday. That was discounting a lot of bad news, those higher prices, and what we saw was a reaction to the upside off of that. And so when we have a bullish reaction off of a potentially bearish report, that means I turn bullish. And let me take a look at the 10-year here. We'll see if we can at least get a quote. We can see that's down about 6 basis points, down to 4.46%. That is actually the biggest 2-day drop because it was down yesterday as well in about 4 weeks. And then just taking a look at the US dollar index, that has dropped to the lowest point in 8 weeks. You put all this together, so we have the indices like the S&P 500 and the NASDAQ very near record highs. Now we have the US dollar index dropping. That was a big headwind. That was a big concern when it was heading higher. It just kind of paves the way for a risk rally, a break to the upside here. So in the absence of catalysts, it looks like the next move is bullish, which is just a continuation of the short, medium, and long-term trend. Let's take a look at the sector action. Tech noticeably in the red, but not by a lot. Energy is leading, so are retail stocks. We got XLY, consumer discretionary, up about 0.5% there. I did want to focus on the NASDAQ real quick. Meta, I think it's every day this week. It has just been starting the day down and then climbing its way back into the green. Today would be an historic 20. I don't know of any other stock. You'd probably have to go into microcaps to find any instrument that has been up 20 straight days. So impressive impressive there. And then futures. I'm going to close out with silver futures. I've been talking a lot about futures, gold, copper, and some others, coffee, and some streaks we had there. But silver today is breaking to the highest point that we have seen in 3 months. And let me get a price there real quick for you. Doesn't look like it wants to come up, but you'll have to take my word for it. Meanwhile, OJ futures down almost 5%, and coffee, which we were catapulting to record highs only days ago, that is in the red for about 2%, guys.
All right, Jared, thanks so much for joining us. Appreciate it. It's time now for today's strategy session. Inflation anxiety returning to Wall Street this week, but our next guest says despite the bad headlines, the price action is still strong. Joining us now, we've got Jay Woods, Freedom Capital Markets Chief Global Strategist. And Jay, I love the way you phrase this. The market's tough to read, but there are too many silver linings to ignore. What are the silver linings?
Yeah, the silver linings is price action. I mean, the headlines, the inflationary data makes us shake our heads and wonder exactly why we're staying at all-time highs. I think we were 3 points away from the S&P 500 closing at an all-time high yesterday. This is coming from someone that turned slightly near-term bearish at the end of December, seeing overall weakness. But when you look underneath the surface, the QQQE, which is the equal-weighted NASDAQ 100, we're up. We're at all-time new highs. The S&P equal-weighted is beating the S&P 500, which is market cap-weighted. So we're seeing stocks rally, stocks that you don't talk about. No one's talking about AT&T at all-time new highs. Coke and McDonald's had great earnings on Monday, Tuesday, early this week. They're coming back. Disney, Starbucks, 52-week high. So there are some names that we've kind of forgotten because we're so focused on tech. But when you showed us that board earlier, all in Kelly Green except for technology, so a domination by Kelly Green, which is what Eagle fans like us.
It's out for this reason.
Yeah, this is a parade day. It all works out. But the point is, technology, which tends to lead the market higher, is falling by the wayside, and you have every S&P select sector up for the year, but the ones that usually lead are not. Financials doing well, that is important to the market. So I don't see us running away here to the upside given the macro backdrop, but we're treading water, and that's not a bad thing as we go sideways for a little while.
I mean, the long Mag 7 trade is already so overcrowded. Is it possible that we're seeing now for investors that are looking for other areas of the market to find value and looking towards some of those household names that you just mentioned, looking at everything from telecoms that are going to be needed, looking at those little luxuries in your coffee that's needed, looking at some of the major stays in entertainment, i.e. a Disney, needed. All of those things considered, it seems like these staples are being redefined here a little bit.
Yeah, there was a lot of concern with the strong dollar, and now the dollar coming in a little bit will help the staples. But we're going back to some boring names, and there's been rotation under the surface. I was just talking to Josh Schaefer outside. 48% of the S&P 500 is beating the average. 48% of the stocks within it are beating the average, but we're focused on those that aren't, like the Nvidias and the Apples of the world. This Meta run has been fantastic, almost 20 days. So we're seeing a little rotation within the Mag 7. It's not hurting the market as much as we thought. Look at something like materials. Materials, no one talks about, but the tariff talk has helped them. They were beaten down. I was looking at it as more of a mean reversion, but then when I looked under the surface before I came on air, so I didn't prepare you guys with any notes, but the XLB has a lot to reverse. It's starting to look good. Its main stock, 20% of it is Lindy. LIN is the symbol there. A nice little inverted head and shoulders bottom perhaps forming, and then the third biggest weight, Ecolabs, ECL symbol there, breaking out to all-time highs. So there is a lot of strength within this sector that no one talks about materials, but we're seeing a broadening out. I don't think it's enough to take this market much, much higher. And if we get a bad report out of NVIDIA in a few weeks, the 26th, I believe, then we could see the market turn lower, but we'll still see rotation, just not into the names that are really making headlines.
But I think about a category like materials, and then even what you mentioned, equal weight, S&P, for example. Tariffs has to come to mind. Like, do tariffs and potential policy implications come into play as potential negatives?
Yeah, but right now tariffs are just a fear factor. It's not a reality that we're seeing. It's being used as a negotiation tactic. And to the point, I forget what analyst said it, but with the CPI and the PPI numbers increasing, inflationary numbers increasing, maybe that is backing us away from increasing tariffs, because that would just put more kerosene on that fire. And I know Trump watches the stock stock market. So we'll see what happens with tariffs. But tariffs are that headline that keep us watching the tape back and forth. But it hasn't happened. And maybe he's screaming fire a little too often, and we're just forget about it.
Market is really ignoring the tariffs thing. It's fascinating to me.
It was the biggest fear coming into this year. It's been the headline mover. Let's see how we act on Friday. Fridays have been really bad. People have taken risk off going into the weekend. I don't think we're about to run into this market on a Friday afternoon and make new highs, even though we're so close. But if we do end this day at new highs, that's a breakout. That could lead to a little more near-term momentum. But it is a head-scratching market when you look at the macro data, and then when I look at price action is telling me we're not done just yet. But will we take that euphoric leg higher?
Right.
Not so much. But if you're going to be somewhere safe, I think financials are still the way to play it. There are a lot of good names in that sector.
We only got 30 seconds left here. Do you think AI exuberance still has more legs to it, especially hearing how companies like Alibaba want to capitalize on the boom?
Without a doubt. In Alibaba, you look at charts on a long-term basis. I think Jack Ma is coming out of the woodwork too. If that breaks above 120 earnings next week, that has a lot to reverse. So yes, AI is going to be a theme. You had a new IPO, Pony, which is taking off, and then NVIDIA released their 13F, and they looked at different AI stocks that are moving as well. WeRide being the new one, Chinese autonomous driving. So it's going to move, but if you're trading these stocks, you got to be careful. Use stops. Be very on top of any trade you make with these AI stories that are, kind of smallish trades, if you will.
As Jay-Z once said, you could have been anywhere in the world, but you're here with us. We appreciate that, especially knowing you could have been at that Eagles parade today.
It's not too late.
Thanks so much. It's not too late. Coming up, everyone, Coinbase shares falling despite a strong quarter. We break down what's weighing on the stock next on the Morning Brief.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Shares of Coinbase falling despite the company's fourth quarter earnings beating the street's estimates on the top and bottom lines. Revenue more than doubling year over year in the quarter, driven by Bitcoin's post-election rally. Citizens JMP raising its Coinbase price target to $475, also maintaining its outperform rating. For more, I want to bring in Devin Ryan, Citizens JMP Director of FinTech Research. Devin, great to speak with you. This is crazy. Revenue spiking 138% for Coinbase, and I'm coming to you saying that the stock is down. What's going on?
Hey, good morning, Madison. Well, the stock did go up over 8% yesterday, so it ran pretty hard into results. It's up 50% since the election. So, I think it ran pretty hard into results, and you're just seeing a little bit of small sell-off this morning and kind of a little bit of volatile market. But the story here is fantastic, and obviously huge fourth quarter results. They gave some kind of early indication in the first quarter maintaining that momentum. And when you take a step back, this is much more than about kind of what's happening in the fourth quarter or first quarter. It's about really the seismic shift happening in the crypto space more broadly, and how blockchain is now going to see a step function in adoption. And that's what gets us excited, and that's really driving our price target, not the fourth quarter results or even what's happening in the first quarter.
Devin, from Robinhood, we heard a lot about tokenization of private assets. To what extent is that a similar case for huge opportunity for Coinbase?
Yeah, Brad, it's going to be huge. And I think that's the big picture here, that you've had an industry that has really been held back for really the past handful of years here. And so what's happening is we're in process of getting to a point of clarity. You have the trifecta. You have a White House that's supportive. You have a bipartisan Congress right now that's looking to pass legislation. And then you have a regulatory backdrop where we're now finally getting to a point of clarity. And so areas like tokenization, areas like payments, remittance, integrating with Web3, and just integrating blockchain into the economy more broadly, we're finally getting to a place where I think companies that are in the space like Coinbase are going to be able to execute on the vision that they've had for many years. And that's what's exciting. But yet tokenization could be multi-billion-dollar kind of long-term opportunity for firms like Coinbase, in our opinion, as can an increase in stable coins, as can staking, as can all these other ancillary areas, which are not really even in results in a major way right now.
Is good news for Coinbase always going to be good news for Robinhood? And at what point does the success story for both of those companies potentially start to run into one another?
There is a lot of correlation.
Guys, crude oil को देखोगे वहीं का वहीं रुका हुआ है, still in a range. सैटरडे है, लग रहा है यहीं रेंज पे क्लोज कर देगा. अगर ब्रेकडाउन हो जाए तो बेटर है, रेंज थोड़ी बड़ी हो जाएगी, फिर नीचे हमारे पास यहाँ पर सपोर्ट है, या फिर ऊपर रेजिस्टेंस ब्रेक होता है. जिन लोगों ने सेल किया था फिर से ट्रेल कर लेना, चाहो थोड़ा बहुत प्रॉफिट बुक कर सकते हो. नेचुरल गैस में सेलिंग आई थी, टारगेट हो गया था, उसके बाद सपोर्ट ले लिया वापस. ये भी इसी रेंज के अंदर चल रहा है अब फिलहाल के लिए. किसी एक साइड के अगर एसएल जाए तो थोड़ी रेंज बड़ी हो जाएगी उस केस में. यूएस मार्केट ओपन हो चुका है, वॉल्यूम एक्सपेक्टेड अब आना चाहिए और थोड़ा बहुत. साइड पे भी एक एफईजी था, वहीं पर रुका हुआ है. थोड़ा सा और लो लेवल को टच करता तो बेटर था. एनजी नेचुरल गैस, बट यहाँ पर ये ना एक एफईजी बना रखा है, उसी पर रुक रहा है बार बार. लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। जिनको ऑलरेडी जिन लोगों ने ट्रेड ले लिया अवॉइड करना। नेचुरल गैस में सेलिंग का टारगेट हो गया सर, अब कितने बार करोगे? किया नहीं क्या पहले सेल? अब तो ये ऊपर चला जाए तो बेटर ही है, क्योंकि थोड़ा सा प्राइस एक्शन देखोगे ना, एक बार पहले यहाँ से सेलिंग आ चुकी थी, लो बना था, ये दूसरी बार सेलिंग आई, लो बनाया, ये थर्ड टाइम सेलिंग आई थी, मार्केट कंटिन्यूसली हायर लो बनाया जा रहा है। तो प्राइस एक्शन थोड़ा सपोर्ट नहीं कर रहा है, स्टिल रेजिस्टेंस है, ऐसा नहीं है रेजिस्टेंस नहीं है। वैसे मैं कह रहा था ये लोग कुछ अगर इस तरह से बन जाता तो बेटर था, ये बड़ा फॉल करता उस केस में। बाकी कर रहे हो तो फिर से क्वांटिटी कम रख लेना, इतना ही एसएल है, इससे बड़ा मत रखना, लेट एंट्री मत करना। यहाँ से सेलिंग आए तो अब और बेस्ट है। क्या था तो फिर अभी क्वांटिटी कम रखी हो या फिर थोड़ा ऊपर आने दो। यहाँ से ले रहे हो तो प्राइस एक्शन मैंने बता दिया किस तरह का बन रहा है, विच इज़ नॉट सपोर्टिंग सेलिंग। दिस इज फोर्थ टाइम ये यहाँ पर आया है। बाकी अगर क्रूड ब्रेक डाउन कर दे तो यहाँ सेलिंग जरूर बन सकती है, अगर ये कुछ ब्रेक डाउन कर दे लाइक अगेन। ये भी ब्रेक डाउन नहीं कर रहा है अभी भी। बाकी अभी शायद आई थिंक थोड़ी देर पहले एक न्यूज़ भी आई थी नेचुरल गैस के रिगार्डिंग, रसिया की ओर से, उनकी ओर से एक स्टेटमेंट आया था कि जो अच्छा ऑयल के रिगार्डिंग, 1 मार्च 2025 से जितने भी जो भी गैसोलीन एक्सपोर्ट होती है ये लोग सेल करते हैं, उस पर एक बैन लग जाए, ऐसा एक स्टेटमेंट आया हुआ था। ये रसिया और डिस्कस कर रहे हैं, लेट्स सी, रशियन गवर्नमेंट एंड ऑयल प्रोड्यूसर टू डिस्कस पोटेंशियल फुल बैन ऑन गैसोलीन एक्सपोर्ट्स फ्रॉम मार्च ऑफ फर्स्ट, मीटिंग शेड्यूल फॉर नेक्स्ट वीक मीटिंग है, देखते हैं क्या निकल के आता है। अगर ऐसा होता है गैसोलीन को ये लोग बैन करते हैं तो डेफिनेटली उसका इम्पैक्ट फिर से देखने के लिए मिलेगा क्रूड एंड नेचुरल गैस। बैन कर दिया तो फिर एक तरह से कहीं ना कहीं सप्लाई रोक रहे हैं लोग। मार्केट ऑलरेडी ओपन है, That must do more. More than 500 million take holy dip in India's Mahakumbh festival. 500 million. I am one of them. Vance uses Munich speech to criticize Euro for censoring free speech.
Spending initiatives related to DEI, and kind of went on a tirade about more generally the bank's waste and potential waste and bureaucracy, and how he wants to cut back on that. So this kind of goes back to his chief worry, that is after 2 years of incredible profits, and he says this later on in the conversation or the talk, is that the bank could be losing its edge. And so he's coming in right now this week, and it's clearly a moment where he's this recording is sort of riding the zeitgeist, because it's got a lot of things going on in other parts of the world, like the federal government. Wall Street has obviously been focused on return to office and headed in this direction for some time. But this is really kind of hitting the moment.
Yeah, it's really interesting. He also talked about how it's hurting young individuals because there's not as much face time in the office, a lot of really important points, but the main one, get your butt back in the seats in the office. David, thanks so much for joining us. That does it for Morning Brief. Join me next hour for more analysis right here on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh.
Mills, we are 30 minutes into the U.S. trading day. Let's get the three catalysts we're watching this hour. First up, we'll break down Trump's tariff plans and what it means for global markets. Plus, a check-in on the tech sector as Meta extends gains of its record-breaking run. And a check-in on the consumer as retail sales drop and inflation looms. All of that and more coming up on Catalysts. Kicking off the hour with a quick check of the markets following President Donald Trump's implementation of sweeping reciprocal tariffs. Taking a look at the major averages here, you've still got green across your screen. The S&P 500 up about 0.9%. We're really seeing the majority of the gains in the tech-heavy NASDAQ here, up nearly 1.4%. This is also interesting in the context of that retail sales data coming in this morning. A little bit disappointing, indicating perhaps some softness in the American consumer, but the market clearly looking past both that and any policy coming from the White House. This idea being that tariffs were not implemented today, so we're not going to worry about it today. Market sloughing that off. Really interested to watch whether or not we get a all-time high in the S&P 500. You can see yields continuing to come in. The 10-year significantly off of that 4.6% level we saw earlier this week, with yields down just a bit today and really across the board here. And finally, I want to flip the board over to Bitcoin, I believe. Actually, we're going to take a look at currencies. You still got that dollar weakness coming in here, which is really interesting given the strength of the dollar has been a challenge for a lot of the companies that we've been covering, even Airbnb out earlier. And you've still got some strength coming in those countries that will be impacted by tariffs. You've got the loonie there, the peso, and the euro all strengthening against the dollar today. Well, we're seeing a mixed picture for European indices after President Donald Trump announced reciprocal tariffs, which are set to be implemented as soon as April 2nd.
The European Union is wonderful. We all love Europe, love the countries in Europe, but European Union has been absolutely brutal on trade.
Joining us now to discuss the potential impact on global markets, Ed Al-Husseini. He is a global rate strategist at Columbia Threadneedle, and Jurrien Timmer, the director of global macro at Fidelity Investments. Thank you both for joining me this morning. Jurrien, I want to start with you. The market is looking past any of these potential tariff policy implications for now. What does this policy do to the current bull market that we're in when it is implemented?
Well, good morning. The market obviously has a lot of cross currents right now. We don't really know how much of these tariffs or threats of tariffs are going to stick. And in the meantime, earnings are very, very robust in the U.S. The economy is quite resilient. There's a lot of optimism right now about the length and strength of the economic rebound that happened since COVID. And so I think that right now is overriding the threat of tariffs, either raising in price levels or decreasing profit margins, because they would have to get worked through on one way or the other. And of course, the question of how much of these tariffs would be offset by a stronger dollar. And then on the other side, we have, of course, a very big debt situation, ongoing deficits. What does that do to the 10-year Treasury yield, which is right now at 4.5? Every time it starts to creep up towards 5, the stock market starts to wobble, and that's for very good reason, because treasuries are considered the risk-free asset. And if the risk-free asset goes up in value or down in price or in valuation, it starts to compete with the risky asset. And towards 5%, that's been the case. But now we have, of course, the government efficiency, momentum underway. Again, we don't really know how much of that will stick, but that's providing some hope on the Treasury side. So all in all, the tariff question is really just one of multiple questions facing the market. And of course, we have the valuation question, we have the Mag 7 concentration. And I think for now, the market is focusing on earnings, and it's focusing on the 10-year Treasury being more better behaved in the face of the hope for less government spending.
Ed, what are you thinking about tariff and the impact?
Yeah, I mean, for me, the highest conviction view around tariffs is that they're negative for growth. They are ultimately a tax. They're a tax on spending. They're a tax on capital investment. And that is the first order effect that I'm looking for. I think secondary to that is inflation. It does cause a sort of a one-off, a temporary increase in prices. But I think from a market perspective, We're very used to, at this point, relatively elevated growth, and tariffs are likely to challenge that assumption.
And how are you thinking about the different growth impacts for different types of tariffs? There's the tariffs on something like aluminum versus the tariffs on finished products. Does it matter what the difference is in terms of the inflationary impact?
Yeah, I'll be honest, I don't know how to figure it out. There's so many different flavors.
That's important because the market also doesn't know how to figure it out. If you can't figure it out, neither can investors.
I think that's right. And one way to look at it is what is going on in aggregate in terms of the aggregate tariff or tax rate that we're applying to our imports offset slightly with dollar strength. And the net impact so far, we have had an increase in tariffs on metals, on China. The net impact so far is de minimis. The economy has not really felt it. But as the conversation heats up and eventually crystallizes into more tariffs, I expect to see that impact in growth first, and then we will start to think about what that means for risk markets.
And Jurjen, let's talk to you specifically about that. What does happen to risk markets in this environment? Specifically, let's actually broaden and go to the global context here, because we've seen global stocks outperforming the S&P year to date. Is that a dynamic you expect to continue given the potential tariff impact?
So my main focus is the juxtaposition of how much of the bull market is driven by earnings. And of course, at the end of the day, over very long periods of history, earnings are the driver for stock prices. But oftentimes you will get that earnings gain amplified by increases in valuation. And so 2023, the first year of the current cyclical bull market, and 2024, both saw valuations really amplify, right? So in 2023, earnings fell 3%, but the market went up over 20%. That was all PE driven. In 2024, the market was up, more than 20%. About a third of that came from earnings. The rest came from valuation. So for me, the question is, can the market do a three-peat on having both earnings and valuation drive the train? And to me, I think it's very unlikely that that will happen. I think the earnings side is very robust. Fourth quarter earnings are underway. They're growing at 13% year over year. The outlook for 25 and 6 and even 7 remains robust as well. The typical earnings cycle lasts, 3+ years. We're only in the beginning of the second year. So I think we have room there. But as rates start to creep up, and again, that risk-free asset going to 4.5, maybe to 5, that should undermine the PE side. And then, of course, we run the risk that if the air ever comes out of the Mag 7, with the Mag 7 being a third of the market and trading at 40 times earnings, it's likely that the whole market would be under pressure. And that would be a scenario where actually the rest of the world can do better, at least on a relative basis, maybe not on an absolute basis.
Something else that's impacting the Mag 7 trade in the broader market is, of course, some of those other macro factors we haven't talked about, like the Federal Reserve. And talk to me about those macro factors and what the monetary policy could potentially look like in terms of impacting the trade.
Yeah, I think the good news for investors is, at the moment, if you're looking at the Fed, you're very likely to see them stay on hold through the summer. So at least among all the moving pieces we have right now, it's a really decent assumption to look at the Fed and expect them to stay on hold. Now, beyond that, I think it gets really interesting. There are two tail risks around in this environment. One is the economy overheats. We have some negative supply side effects playing through, immigration, tariffs, and positive demand in the form of maybe perhaps additional spending, tax cut changes. If they combine in such a way that the economy heats up, similar to what we saw in 2017, 2018, then the Fed will have to consider hikes.
Yeah.
On the other side, if tariffs are a drag on growth, as I expect them to be, if inflation continues to be relatively well-behaved, we'll return to the cutting cycle. And the bet you're placing on the second half of the year is really which side do you think things will skew towards?
Right, and it's interesting to kind of monitor the moves in the 10-year and what the rates market is trying to tell us about what that might look like. Unfortunately, we have to leave it here, guys. So thank you both so much for joining me on our special coverage this morning of these reciprocal tariffs. Ed Al-Husseini and Jurjen Timmer, thanks so much. Let's turn now to how officials in Washington and business leaders are reacting to President Donald Trump's sweeping tariff policies. We've got AJ Dion Jr. He is a senior fellow in governance studies at Brookings. We also have Linda Yu, London Business School adjunct professor of economics. Thank you both for being here this morning. EJ, I want to start on this note we have from Bank of America, Michael Hartnett, saying that these inflationary pressures that we are seeing in the market right now will potentially handcuff the president's ability to go as far as he might want on tariffs. Do you agree with that?
Well, first of all, happy Valentine's Day to everybody out there. I think that the problem we have with judging what Trump is doing is that we don't know how what he says at a given moment is going to match what he ends up doing. And the market seems to have decided they're going to wait to see what he actually does. We saw with Canada and Mexico that he threatened these huge tariffs on a Friday, and by a Tuesday they were postponed. So first thing is we don't know where this ends up. But secondly, I agree with the danger that's being described there. These would be, Anna Swanson had a very good analysis in the New York Times that suggested these are the most sweeping, these reciprocal tariffs go way beyond anything Trump has proposed. They could blow up the whole world trading system. I don't think she suggested that. I don't think that's going too far. If he did everything he kind of threatened to do in that, we would be in a very new world when it came to trade. Tariffs obviously increase inflation to some degree. If we're lucky, we're saved by a change in the value of the dollar. Not all prices go up equally. But this is a big tax on what people buy, and that's a real problem for the broader economy.
And Linda, I want to go to you here because it's also a problem for companies. Talk to me about how you are thinking through the impact for earnings and therefore the impact to the market moving forward.
Yeah, it's absolutely a big issue for companies because this tax is being imposed on their final goods as they sell it into the U.S. market. So this is essentially an increase in production costs. And I think what's uncertain, and I think what you've just been discussing, is when it's going to fall and where it's going to fall. So for a lot of companies, if they're thinking, well, I've put my supply chain through, say, Mexico or Vietnam, which are ways of moving production out of China, those two countries have, they're in the top 5 in terms of trading surpluses with the United States. So if you're going to look for countries which run trade surpluses and goods, then I think it's going to raise challenges around how companies will organize their production, having already done so, spent money doing so, to move away perhaps from a connector country. So that's certainly one issue. But I suppose the overall issue, the problem for companies, is just that it adds uncertainty, and uncertainty deters action. Companies may hold off.
Yeah, Linda, I want to stick with you on that uncertainty because I wonder how you are trying to get clarity on what differentiates between tariffs that could cause a one-time price hike versus tariffs that could cause more significant and sticky inflation.
So reconstituting supply chains would actually be a longer-term uncertainty. So if we think that the U.S. in general just doesn't like unfair trade, and having a trade surplus is a proxy for that, then I think that could cause, higher costs for trade for several years. Now, if it's a tariff that's coming in because the U.S. wants to invite countries to negotiate, and it doesn't affect supply chains, so it's not targeting trade surplus countries, then I think it would be less sticky. But let me just say, reciprocal tariffs on countries that impose tariffs themselves, I think the Trump administration believes that value-added tax, so VAT or VAT, is an example of other countries taxing, being unfair in terms of trading with the U.S. That covers 175 countries in the world when you also include goods and sales tax. So that's nearly everybody. And that's almost unprecedented in terms of thinking about imposing tariffs by any country.
Yeah, it certainly is, and it also sounds like sticky inflation. So, EJ, let me go to you. You have a line in your latest piece in the Washington Post. You say Trump has a, quote, obvious indifference to rising costs. He was elected by constituents who wanted inflation to come down. How are you squaring the difference between what his policies are indicating and what constituents elected him for?
I think that is going to become a bigger and bigger problem down the road if inflation stays where it is or goes up. We're seeing in certain spheres the price of eggs going way up, for example. And I think in his campaign, he said over and over, I will bring prices down on day one. A lot of the swing voters, not his base who would be with him in any circumstance, but the people who actually elected him by moving his way, were people who were worried about immigration. And we can argue, and I have deep problems with the way he's doing this, but that was one issue. But prices were his major attack line on Biden, on Joe Biden and Kamala Harris. And if inflation goes up, I think this will obviously give a political opportunity for Democrats to say, all this crazy stuff you're doing with Doge, all these tariffs are not doing anything about the problem on which you got elected. And so I do think this catches up with him politically, maybe not tomorrow morning, maybe not next month, but certainly by the time we have midterm elections in 2026. And so I think that is a big problem for him.
All right. E.J. Dionne Jr., thank you so much for joining us. And Linda Yu, thank you for joining us as well. We appreciate you.
Be with you.
Coming up, we're looking at today's trending tickers, with one tech stock seeing the longest winning streak in decades. We'll get you that stock after the break.
गाइस क्रूड ऑयल ब्रेकडाउन कर चुका है। देखते हैं यहाँ पर एक और ट्रेड बनने की पॉसिबिलिटी है। कैंडल थोड़ा सा अगर नीचे क्लोज होती है तो पुल बैक में एक और सेलिंग का ट्रेड प्लान करेंगे वापस से। नेक्स्ट वीक देखोगे, नेक्स्ट वीक मंडे को तो मार्केट बंद है, यूएस मार्केट बंद रहेगा, वो बैंक हॉलीडे है वहाँ पे, तो मंडे को थोड़ा वॉल्यूम देख लेना, इवनिंग पे शायद ना आए। ट्यूसडे को एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा है, गोल्ड और सिल्वर को इम्पैक्ट करता है। वेडनेसडे के दिन कोई डेटा नहीं है, इन्वेंट्री भी नहीं है उस दिन। थर्सडे को आपका फरवरी 20 को देखोगे, उस दिन आपका एफओएमसी मीटिंग्स के मिनट्स रिलीज होंगे, तो एक तरह से आप कह सकते हो वेडनेसडे की रात को ही पता चल जाएगा। गोल्ड, सिल्वर, क्रूड ऑयल सभी को इम्पैक्ट करता है। फिर शाम को अनएम्प्लॉयमेंट क्लेम्स, नेचुरल गैस, क्रूड ऑयल की इन्वेंट्री एंड देन मेजर डेटा मैन्युफैक्चरिंग पीएमआई, सर्विस पीएमआई, एग्जिस्टिंग होम सेल्स, वो आएगा 21 फरवरी फ्राइडे के दिन। तो एफओएमसी मिनट्स हैं, मीटिंग मिनट्स, लेट्स सी क्या सोच रहे हैं एफओएमसी वाले आगे रेट कट करने के बारे में। रेट कट करेंगे भी या फिर नहीं। लेट्स सी क्रूड ऑयल पूरा टारगेट देता है या नहीं देता है आज। नैस्डैक फिर से रेजिस्टेंस लेवल पे आया है। ओके, आई एम हियर, यस। सिर्फ क्रूड ऑयल और नेचुरल गैस ही मैं देख रहा हूँ, उसके अलावा अभी और कुछ नहीं देख पा रहा हूँ। ओनली क्रूड ऑयल एंड नेचुरल गैस। ब्रेकआउट पॉसिबिलिटी है। रेजिस्टेंस पे है, सेल करेंगे यहाँ से। देखो ऑलरेडी अगर सेल करोगे थोड़ा सा संभल के करना, क्योंकि ये ऑलरेडी यहाँ पर 3-4 बार रेजिस्टेंस दे चुका है। फर्स्ट मैंने बताया था 17th ऑफ दिसंबर, उसके बाद फिर 18th ऑफ दिसंबर 2024 दो बार वहाँ रेजिस्टेंस मिला है, उसके बाद आज रेजिस्टेंस मिला है। रेजिस्टेंस वैसे ही ले रहा है, बाकी 22,075 के ऊपर निकला तो ब्रेकआउट ही हो जाएगा ये सीधा। तो अब रिस्की है यहाँ पर सेलिंग करना, कर रहे हो तो क्वांटिटी कम रखियो, ब्रेकआउट होता है तो फिर ये ब्रेकआउट होता है, थोड़ा सा ऊपर और आ सकता है एक लेवल पे, यहाँ पर टेस्ट नहीं किया, अगर यहाँ आ जाए तो और बढ़िया है। यहाँ पर अभी तक सेलिंग आई नहीं है इसमें, 22,085 से 22,100 के बीच में। करंट लेवल तो ऑलरेडी 4 बार टेस्ट कर चुका है। दिस इज अ फिफ्थ टाइम, 1 2 3 2 3 फोर्थ टाइम कह सकते हो। इसके ऊपर भी एक रेजिस्टेंस है 22,085 से 22,000, पूरा ही रेजिस्टेंस है, दो रेजिस्टेंस बने हुए हैं, कंबाइन करके देख सकते हो। ओके देखो, क्रूड ऑयल में एक ट्रेड और बनने की पॉसिबिलिटी है, कैंडल क्लोज होने दो, क्रूड में एक और ट्रेड प्लान करेंगे यहाँ पर। अगर कैंडल क्लोज होती है, इवन वी हैव अ 7 मिनट लेफ्ट, 7 मिनट और रह गए, थोड़ा नीचे आनी चाहिए, रिवर्स नहीं देना चाहिए। Russia confirms it has detained a US citizen suspected of drug offense. IFX reports. कैंडल क्लोज होने देना, फिर क्रूड में देखते हैं एक ट्रेड और सेलिंग के लिए बनेगा मोस्ट प्रोबेबली।
Today, Ukraine dominates the agenda of a Munich security conference as the city reels from a car ramming attack.
The growing tension between Elon Musk and parts of Trump's administration.
RFK's priorities as health secretary.
And fallout and resignations after the Justice Department orders the corruption case against Mayor Eric Adams to be dropped.
It's Friday, February 14th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in Liverpool.
And I'm Christopher Walljasper in Chicago. The Munich Security Conference kicks off today with global leaders gathering to tackle a wide array of security challenges facing the world. President Donald Trump's phone call with Vladimir Putin this week will put the war in Ukraine front and center. Our reporter Andrew Gray is covering the conference. Andrew, what's the mood like right now among Europeans, given that Trump has taken the wheel on negotiations between Russia and Ukraine?
Yeah, it's been a bit of a wake-up call, I think. There was a lot of talk from European officials that they expected the Trump administration to be in listening mode, that this was the Europeans' chance to influence the Trump administration when it came to Ukraine. And then they discovered that actually the administration was going ahead without them. They're clearly very uncomfortable with a lot of Trump's approach to foreign policy, now particularly what's happening with Ukraine. On the other hand, they see Russia as a growing threat. And they know that America is their protector. America gives them the nuclear umbrella. America has tens of thousands of troops on European soil. And America has a bunch of military capabilities that other countries don't have, other NATO members. They're trying to walk this very uncomfortable line of trying to keep in Trump's good graces as much as possible, while also not necessarily buying into all of it.
So what does this mean for the agenda at the conference?
It puts Ukraine right at the heart of it. President Zelensky will be there, Vice President Vance will be there, Secretary of State Rubio will be there. The last two, President Trump has said, are part of his negotiating team, and he says negotiations will start immediately. So that raises the prospect that actually peace talks of a sort could start already during the conference.
Trump has said that Ukraine would be involved in peace talks with Russia. Munich was in the spotlight before the conference's official start yesterday when a car driven by an Afghan national ploughed into a crowd, injuring 30 in what officials say was likely an attack. The incident and the conference come as Germany prepares for an election dominated by immigration and security issues. You can hear more about the upcoming vote in our weekend special episode of the podcast, out tomorrow.
The top federal prosecutor in Manhattan has resigned after refusing to drop the corruption case against New York Mayor Eric Adams. Danielle Sassoon, as well as 5 other officials at the Justice Department, all resigned following the order from a top DOJ official to drop the case. The first wave of a mass firing of federal workers has begun at several agencies, including the Education Department and the Consumer Financial Protection Bureau. Termination emails have been sent out in the past 48 hours, though it's unclear how many federal workers stand to lose their jobs.
Trump and Indian Prime Minister Narendra Modi have agreed to talks in an effort to land an early trade deal and resolve their standoff over tariffs. New Delhi has promised to buy more US oil and gas and military equipment, as well as fight illegal immigration. Hamas says it's committed to releasing hostages this weekend, as long as Israel upholds its end of the ceasefire deal. The fragile truce looked close to collapse earlier this week when Hamas announced it would stop releasing hostages, leading Israel to respond with a threat of returning to war. And a Reuters exclusive. The Trump administration's sweeping cuts to foreign aid has halted US-funded anti-narcotics programs in Mexico that were working to curb the flow of fentanyl into the States. And the Pope is in hospital, where the Vatican says he'll be continuing treatment for his ongoing bronchitis. President Trump has ordered his economics team to come up with a plan for reciprocal tariffs on every country that taxes US imports. Carmel Crimmins has more.
So Trump's directive stops short of actually imposing tariffs. What it does do is kick off weeks or even months of work for his team to calculate the duties that would match what other countries currently charge. If Trump does move ahead with such tariffs, it would kickstart a global trade war. But his decision not to go with tariffs right away could be seen as the start of negotiations to extract concessions from trade partners. Markets are certainly taking it that way for now. Wall Street ended higher and bond yields fell, suggesting investors are more confident about inflation cooling.
As Elon Musk expands his influence over federal agencies, slashing budgets and jobs, sources tell Reuters that frustration is growing among President Trump's top aides. Perhaps the most important person who has expressed some frustration with Musk is Chief of Staff Susie Wiles. Our reporter Alexandra Ulmer has been digging into what's happening behind the scenes.
The main issue seems to be about communication. Susie Wiles and her team don't always feel like they're in the loop about what Doge is doing, according to our sources. We have sources telling us that the White House team has found out about some of Doge's activities through X, i.e. they weren't in the loop ahead of time. Some of the emails that were sent out to federal workers in late January, offering them incentives, a buyout to quit. For instance, her team wasn't signed off on some of those emails, according to two of our sources.
Now, this is happening against the backdrop of Musk dismissing concerns over transparency.
So all of our actions are maximally transparent. In fact, I don't think there's been, I don't know of a case where an organization has been more transparent than the Doge organization.
White House Press Secretary Carolyn Leavitt addressed it too.
This is a unified team who is working at the pleasure of the president to do what's right for the American people.
Now, the administration is new. We have a source pushing back saying we've sorted out some of our differences. On the other hand, this could also foreshadow a bigger clash to come. Trump ran a very tight operation under Susie Wiles during the campaign, but his first administration was famously chaotic and had a lot of infighting. Are we at the brink of something else like that, or will they sort it out? I think that's one of the key questions for the kind of stability of his administration and the future of Doge.
Department of Health and Human Services, Robert F. Kennedy Jr. of California to be secretary.
Robert F. Kennedy Jr. has been confirmed and sworn in as the new U.S. Health Secretary. Senate Republicans were almost all united in Kennedy's confirmation, with Senator Mitch McConnell the only holdout. Reporter Stephanie Kelly has the details on what comes next.
When he was sworn in on Thursday during that ceremony, he said he wanted to prioritize on his first day radical transparency and removing conflicts of interest from government. At the same time, Trump also signed an executive order to establish a Make America Healthy Again commission that will investigate chronic illness and deliver an action plan to fight childhood diseases.
And he managed to win over some skeptics, right?
About a week ago, before Kennedy's confirmation, it was unclear whether a Republican Senator, Bill Cassidy from Louisiana, would end up supporting Kennedy. Cassidy was concerned about statements Kennedy had made in the past about vaccines and vaccine skepticism. And to gain the support of Cassidy, Kennedy pledged that he would not remove government health agency statements that vaccines do not cause autism. And he committed to honor decisions by an outside panel of experts on vaccines. Except we're not really sure how to take those commitments because he's not legally required to keep those pledges.
It's Valentine's Day, so we're recommending a breakup podcast for you about central banks. It's not quite conscious uncoupling, more like conscious decoupling between the Fed and its peers on rate cuts. President Trump's threatened trade war is helping to drive a wider wedge, and yes, there is the risk of financial heartache. That's all in the latest episode of Econ World, and there's a link in the pod description.
For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. We'll be back on Monday with our daily headline show.
गाइस क्रूड ऑयल में अगर एक हल्का सा पुल बैक आता है तो यहाँ पर एक वापस सेलिंग का ट्रेड प्लान कर सकते हो, ठीक है। कैंडल क्लोज हो चुकी है लास्ट 15 मिनट की। एक स्मॉल सा अगर पुल बैक दे दे ये तो यहाँ से एक सेलिंग डेफिनेटली प्लान होगी। बाकी बीच का लेवल अब रिमूव कर सकते हैं, इसकी ज़रूरत नहीं है। कैंडल हो चुकी है इसके नीचे क्लोज। ठीक है, ये एक ट्रेड और प्लान करना यहाँ से। बाकी अगर डायरेक्टली नीचे आ गया तो फिर तो सपोर्ट पे आ जाएगा। बाकी ये सपोर्ट भी देखोगे तो एक बार वैसे टेस्ट हो चुका है, दूसरी बार आएगा यहाँ पर, तो स्टिल एक्सपेक्ट करेंगे कि होल्ड करे लेवल को। बाकी नेचुरल गैस तो है साइडवेज कम्प्लीटली, तो लगता नहीं है अब मूव करेगा। थोड़ा ऊपर निकल जाता तो बेटर था। इस रेजिस्टेंस एरिया से भी सेलिंग अच्छी आ सकती है। या फिर नीचे ही आ जाए बिल्कुल, अब वापस 316 को टच कर ले। वीकली एनालिसिस कल करेंगे, सो डोंट फॉरगेट टू जॉइन वीकली एनालिसिस टुमारो। मॉर्निंग पे कर देंगे वीकली एनालिसिस कल।
Time from Yahoo Mail. Oh yeah.
And gloom. I am Akshat Rati. Listen to Zero.
News when you want it with Bloomberg News Now. I'm Nathan Hager. The war in Ukraine and President Trump's trade wars are taking center stage at the Munich Security Conference. Vice President J.D. Vance is representing the U.S. at the event and delivering tough words to Europe.
Unfortunately, when I look at Europe today, it's sometimes not so clear what happened to some of the Cold War's winners.
Vice President Vance accused European leaders of undermining democratic values by regulating misinformation and disinformation online. He called those ugly Soviet-era words. Vance said with President Trump in office, there's a new sheriff in town. We get more from Bloomberg chief political correspondent Anne-Marie Hordern.
He's going into Europe and he's rejecting European establishment, and he's saying it to their face, basically saying as as another member of Western democracy and as friends, we should be honest with each other. This is what J.D. Vance is trying to explain to this audience when he says also there's a new sheriff in town. Things are not going to be the same way they were over the past 4 years.
Bloomberg's Anne-Marie Horner. Now Vice President Vance is set to meet with Ukrainian President Volodymyr Zelensky. After this week's phone call between President Trump and Russia's Vladimir Putin, Zelensky is demanding firm support from the U.S.
Peace deal can only be meant as a plan to put an end to the war that needs to be supported by everybody, discussed with everybody, and supported by the president of Ukraine and the U.S. president.
Ukrainian President Zelensky spoke through an interpreter on a panel discussion with a bipartisan group of senators moderated by Bloomberg's Francine Lacroix in Munich. President Trump's plan for reciprocal tariffs is also sparking a harsh reaction. European Commission President Ursula von der Leyen told a Munich audience punitive tariffs make no sense. Brown University political scientist Wendy Schiller says Trump may have domestic politics in mind by keeping the duties on hold.
The Trump 2 tariffs at the moment seem far more targeted and to accomplish particular goals that Trump can claim credit for. So the big fight with Canada and Mexico that lasted maybe 36 to 48 hours. You know, there was some movement by Mexico on undocumented and migrant immigration. And Canada promised to try to do better on fentanyl. And, you know, we don't know if those things will all hold, but Trump could claim credit for that. So this strikes me as different from the first Trump administration in terms of how he's using tariffs not only as an economic vehicle, but also a foreign policy vehicle.
Wendy Schiller of Brown University was a guest on Bloomberg Daybreak. Nearly 1,300 probationary employees at the Centers for Disease Control are being laid off. That's about 10% of that agency's workforce. It's part of the Trump administration's latest push to thin out the federal ranks. The Associated Press says CDC leaders found out about the decision this morning. In a verbal notice from the Department of Health and Human Services. The Treasury
whether those are large screens, foldable display, phones, things of that nature. So they need to really kind of do something. I think more than just keeping up with the Joneses, as they say, when it comes to the AI aspect.
And what's that product launch this week about?
So that's going to be reportedly the iPhone SE, and that's going to be basically an entry-level iPhone. The last one came out in 2022. This is 2025. So a 3-year gap is a pretty big deal. And that old phone had Touch ID on it, your classic home button. It's pretty outdated at this point. So this is expected to look similar to the iPhone 14. It would have likely a single camera, which, I mean, that's not that great when it comes to, entry-level phones. If you look at something like Google's Pixel or what Samsung has to offer with their entry-level devices, they offer more as far as camera capabilities. But the display is going to be an OLED display, and they're going to have USB-C. And importantly, it's also going to have Apple Intelligence. So it's starting to roll that capability out to more consumers at different levels. Right now, you can only get it if you have the iPhone 15 Pro or Pro Max or the iPhone 16. You can't get it on anything else. And so it's seen as critical to getting people to upgrade.
And 30 seconds left, Dan. TikTok has been brought back on U.S. app stores nearly a month after it was taken down over that possible ban. What's the latest there?
Yeah, I mean, look, I deleted TikTok before or after the ban was put in place, just making sure that I could see what would happen. I downloaded it again last night. Obviously, that more people are doing that. It's interesting that Apple and Google are taking this stance that they have gotten assurances seemingly from the White House that they won't face any charges or anything along those lines as a result of the ban. It's a big risk. They were the holdouts. They were the reason why people couldn't download the app itself. It was still operating, but I think this is a rather large risk, and they must have gotten pretty tight assurances that nothing bad will happen if the ban does go into place.
All right, Dan, got to leave it there. Thanks so much for joining us. We appreciate it. We're going to have all of your markets action ahead right here, so keep it here with Yahoo Finance. You're watching Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks are mixed to end a busy week of shifting trade policy and mixed economic data. Shares of SoundHound AI, Serve Robotics, and ARM all lower on news that NVIDIA cut positions in the tech companies. An SEC filing shows the AI giant dissolved its stake in Serve and SoundHound while trimming ARM. Moderna reversing some of its pre-market losses, edging higher now. Shares initially plunged after its latest earnings report. One analyst saying the company, quote, could theoretically go out of business. Shares were briefly halted for volatility. And GameStop shares rising on a report the company is considering investing in crypto and other alternative assets. That's according to CNBC. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, the tools, the tips, and the tricks that you need to grow your money. Hey, on today's show, investor guidance. There's a lot of headlines out there about potential tariff policy under President Trump, but I'll talk to one portfolio manager about how he's helping clients reduce their exposure to these headlines and focus a little less on their portfolio. And housing hurdles. We dive into the state of the housing market as mortgage rates continue to inch lower but remain well above 6%. Plus, it's the day of love. We discuss why Valentine's Day might feel a little bit more expensive this year. Plus, tips for couples managing their money. All that and much more coming up during today's show. But first, we take a look at some of the market action 90 minutes into the trading day. Stocks mixed today, trading near the flat line after a winning week. Investors still digesting global trade policies and inflation data. Joining me now, we've got Dan Ryan, who is the Sinceris Advisory Managing Partner. Dan, great to have you here in studio with us. Now, you say you're helping clients reduce the noise, so turn down the volume there, and actually recommend checking your portfolio a little less, a little more woosah perhaps. Walk us through this.
Sure, Brad. Thanks for having me. Of course, it's been an interesting month or so where we're all just adjusting to this new influx of constant media coverage, and we're pretending to relearn the lessons from Trump 1.0 and calling them Trump 2.0. And really, it's just an administration that's less about having a constant thesis and more about just occupying the conversation constantly. And for investors, that's really tricky when you have to go home and create a thesis for your own portfolio, when you're tuned into that on a daily basis. And so maybe they can adjust their behavior a little bit so that they're not so subjected to it.
Interesting. Okay, so as you think about everything, because of course our job is to cover what is being talked about from the administration, and there's so much, but what are you dialing up versus dialing back in terms of things that are impacting portfolios right now?
Sure, and so there's a little bit of just behavioral shifts, right? If there's an article and you don't have time to read it, don't read the headline, because there's an emotional component to that you're carrying around with you through the day. And maybe you have to turn off the notifications on your phone, which is a horrible way to consume content, and take some time to de-appify your world a little bit so that when you're making those decisions, you're really grounded in having the complete data set in front of you.
And so that's how to turn down. So what about when you finally have time to read into an article? What is the kind of next leg of research that you should be doing on top of it if you know there's a potential impact to one of your portfolio components?
Sure. So having a data set that you know has kind of a long-term outlook. And again, because so much is going to be short-term in nature. And the reality is you have to have some general sense of the market in that a pullback is likely in the next 4 years at some time. Maybe that's 10% or 20%, but the reality is it's going to come. And if you are spending every day doom scrolling and expecting that pullback, then when it does come, you're going to have a tremendous confirmation bias, right? And you're going to say, I knew this was coming. And that's going to shade your decisions going forward.
In your notes to us, you said that big tech is undergoing a midlife crisis. Break that down for us.
Sure. So, big tech already bought the Porsche, right? It got its AI baby, and it's eroded around for a little bit now. And now maybe it's time that it has to go home and deal with earnings. And we've seen a lot of this forward guidance starting to have this softening language in it of like, hey, we we might be below expectations. So there might be some whipsaw effect here throughout the year.
I want to get some of your sector picks as well here. You like financials, utilities, healthcare. Rank them, and what are you expecting from these three?
Sure. So I'm going to do what an advisor does always when they don't have a better idea, and that's say we like high-quality stocks that pay a dividend. And so those are the major players there. I think first, financials, obviously. It has been a Trump trade with the potential deregulation. But more so than that, there's some really strong balance sheets and names out there that pay a dividend, maybe Goldman Sachs or JP Morgan. So that's probably top of our list. After that, again, utilities with the dividend component, we can all stare down the facing electricity need in the country. And so in that regard, there's some great names, maybe an EverSource or an AES there. And lastly, healthcare, there's less dividend-paying names, but we've seen things that do pay a dividend, like CVS is having a tremendous year already.
Interesting. Within those, and I know we're focusing in on sectors right now, but are there specific names within each of those sectors that you're a little bit more bullish on than others because of their own positioning right now?
Sure, yeah, absolutely. Like I said, Goldman Sachs, JP Morgan, those are great names. These are blue chips, and again, playing to the quality and just having a strong balance sheet, strong earnings. And certainly the energy names are a little bit more speculative. But again, it's not the energy that we all thought it was going to be. That's going to be drill, and oil. It's also electricity.
Interesting. Dan, great to have you here in studio.
It's a pleasure. Thanks so much, Brad.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. Joining me now, we've got market domination co-host Julie Hyman. Julie, great to see you.
Yeah, good to see you too.
First up here, let's talk a little bit about shares of SoundHound. We've been tracking this one this morning. SoundHound AI and Serve Robotics both falling after NVIDIA exited some positions in the companies. Yahoo Finance has reached out to both for comment here. ARM Holdings also falling on a reduced stake here. And so all of these things considered, NVIDIA also getting hit. They revealed positions of around $25 million in WeRide, $33 million in Nebius Group. Those shares are rising. So all of this because of some of the action NVIDIA is taking.
Yeah, exactly. And by the way, I reached out to NVIDIA for comment. They did not have a comment on these changes of their stakes. It's 13F season. And usually what 13F season means for us is that we're looking at big investment firms, right, and seeing what changes they make. But NVIDIA, because it has an investment portfolio, also has to file a 13F. So it's interesting to get some insight into what it is investing in. Now, wanted to sort of take these in two buckets, right? First of all, you have the trimming of the ARM stake, right? ARM, the big chip designer. And NVIDIA has a history with ARM, we should mention. At one point, NVIDIA was supposed to acquire ARM, and then they terminated that deal back in 2022. So there was also this sort of legacy investment in that company. So now NVIDIA is trimming that stake. They had about 1.1 million shares as of the end of the year. 2 million had been the third quarter filing. So a pretty big drop. They hold about 0.1%, though, of ARM shares outstanding. So just to give a little perspective, ARM, by the way, yesterday, if you recall, there was a report in the Financial Times that ARM was partnering with Meta to make chips. Now, ARM is primarily a sort of chip designer, and so the fact that it would be making more of the chip or responsible for more of the process was a big step for them. The stock went up, but it is a little bit lower today. When you're talking about a SoundHound AI, a Serve Robotics, these smaller companies that NVIDIA was investing in, it was sort of like a point of pride, a point of probably ability, something that helped them in the business to say, NVIDIA is invested in us. So it's quite interesting here that NVIDIA is now exiting its stakes in some of these companies. And, in some cases, they're small companies. They're already very volatile stocks, so maybe it had to do with that. We don't know. We can only speculate, but certainly there's an effect on those shares.
Right, a validation factor when you get those investments from an NVIDIA, especially in this environment too. Let's also talk about Twilio while we have you. Twilio plunging after missing on first quarter profit guidance. The cloud company sees 88 to 93 cents a share. That is falling short of the 98 cents that was expected here. Shares right now, they're down by about 15-16% here in trading.
Yeah, this is a software company that serves sort of communications purposes, and it seems like the company, they recently had an analyst day where they gave some targets, and it seemed as though some analysts were hoping for a little more update to guidance from today, more improvement in guidance from today, and they didn't get that. So Jefferies, for example, the analysts there saying there weren't any surprises following the analyst day, though the most optimistic investors, say Jefferies, were hoping for another upward revision to guidance. Put things in context here. This is a stock that's trading at about 35 times forward earnings. It's up about 70% over the past year, even with the decline that we're seeing today. So obviously there was some optimism that was baked in. One of the cool things that the company's doing that I noticed from their earnings call, if you call 1-800-CHAT-GPT, I guess it is Twilio is the vendor, like the software that's powering that call.
Yeah.
Kind of a cool thing.
That
right?
is.
But, not cool enough. I guess some investors already knew about that, but I just thought that was cool.
It's my first phone call after the show today.
1-800-CHAT-GPT,
well, yeah.
Call it up. Well, apparently, I think that was in part designed for people who are not very comfortable on computers, older people perhaps, who still would have access to AI and to a chatbot, like a generative AI.
Interesting.
Do that.
Okay.
I think that was the point of that thing.
All right, rotary phone the ChatGPT instead of dialing it up online.
Well, I'm proud of you that you know what a rotary phone is.
Oh, come on now. We had this. Julie, thanks so much. On a month-over-month basis, retail sales contracted nearly 1% in January after a strong holiday shopping season, the biggest drop in nearly 2 years. But is January's decline just seasonality at play or an indication of a slowdown among shoppers? Joining me now, we've got Sucharita Kodali, who is the Forrester Research Retail Analyst here. Sucharita, great to have you here and grab some insights as well, as always. Just take us into your thinking around this retail sales miss that we saw.
So these numbers are very deceptive, and I just encourage everybody to be extremely cautious in how you look at them, because what it is essentially the numbers from December to January that they are comparing. As an analyst, what I look at is January to January numbers. So when we're looking at year over year numbers, the numbers are actually incredibly strong. And we saw almost a 5% lift in this January versus January sales in 2024. And even when you normalize that for inflation, that is still growth. And that is part of the reason that the economy is still hot. Consumers are still spending. Spending on cars, as an example, is at a record high. Cars have virtually no inflation right now. So people are clearly spending on big ticket purchases, even in spite of higher interest rates. So I don't think that looking at the numbers, the month over month numbers, are all that interesting. Literally what it is they are comparing the change from December to January this year versus December to January last year. And of course, there's going to be some issues related to fires and floods and, kind of natural disasters. But if you're looking in the aggregate at the year over year numbers, they're incredibly strong.
And so I want to go further into your category analysis as well here, because on face value, we would see most categories declined on a month-over-month basis, but food and drinking services, they were an exception, rising nearly 1% from December. So what does that tell us about what consumers are prioritizing in their spending habits right now?
Well, they seem to be prioritizing just about everything because virtually every category has been growing this year versus last year. There were some larger big box type of general merchandise products like sporting goods and toys that are a little softer, but apparel is up, food is up, grocery stores are up, gas is up. Of course, automotive, as I'd mentioned, is up. So almost every category is doing well. Now, one highlight that I did think was interesting that was softer than I've ever recalled seeing it is non-store retailers. And that is essentially e-commerce and all of the online purchases that we've historically been doing. Now, that suggests, are we hitting a wall with respect to e-commerce penetration? Possibly. Are people just going back to stores and purchasing in physical stores? And that's likely, well, that's definitely what we're seeing. Is that a permanent trend? Is that something that sort of has sort of stabilized the shift from offline to online? I think we may be seeing it right now.
And so with all these things in mind, there were some, of course, larger factors that we have yet to see the full impacts from, everything from natural disasters to even larger employment shifts as well. How are you running the calculus early on around what those events actually might hold for future readings?
The impact of those one-time events is often regional, particularly when we're talking about natural disasters. They tend to be regional. They tend to affect certain retailers and certain types of stores in certain regions. And generally, they are not long-term effects because you generally see a rebound. It's not unlike a culture war issue that may impact a retailer in a given quarter, but typically there's a rebound or a privacy crisis or some sort of a data breach. It's similar in those ways. Now, when we're talking about unemployment or some of the macro factors, there are other usually exogenous factors, like the dollar channel, for instance. In spite of the economy doing pretty well, usually you would expect a company that is competing on price and value to do very well. But though that channel has other reasons, like, for instance, the over diversification of their stores, they grew too fast over the last few years. So we're normalizing a bit of that behavior. But it's for the most part, I don't usually incorporate these one-time events into, kind of assuming that that's going to have an impact for years and years to come.
Sucharita, always a pleasure to get some of your insights and time. Thank you so much.
Thank you.
Coming up, everyone, we have more on the state of the consumer. I'll talk to Jason Robbins, who is the CEO of DraftKings, about their fourth quarter results and the outlook for sports betting in 2025. Stay tuned.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks wavering. The S&P 500 eyeing a record high close to cap a busy week. Nvidia revealed positions in Chinese self-driving company WeRide and AI infrastructure company Nebius Group, sending shares of both companies surging. The chip giant disclosing a position of 1.7 million shares in WeRide and 1.2 million in Nebius. Roku shares popping after a strong earnings print. The company announcing it added over 4 million new streamers in its latest quarter and is on track to hit 100 million in the next year. Airbnb shares surging on news it's investing $250 million in a new business it says could be like Amazon for travel. The CEO explaining it would be, quote, one place to go for all of your traveling and living needs. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session. Welcome to Capital Gains, Yahoo Finance's unique look at how U.S. government policy could impact your bottom line. I'm your host, Madison Mills. Reciprocal tariffs at the top of President Trump's agenda. Trump ordered federal agencies to calculate new tariffs to match those of other countries, a move that could shake up long-standing international trade rules. The tariffs will not be implemented right away. That will happen after negotiations with affected nations.
I have decided, for purposes of fairness, that I will charge a reciprocal tariff, meaning whatever countries charge the United States of America, we will charge them. No more, no less. In other words, they charge us a tax or tariff, and we charge them the exact same tax or tariff. Very simple.
Trump hopes the tariffs are a revenue builder on the country's balance sheet. Meantime, Elon Musk focusing on cost cutting. The Tesla CEO spoke in a press conference from the Oval Office alongside the president this week. So what does this all mean for the economy and for your bottom line? We're going to get into all of that today. Plus, Tax Foundation Policy Analysis Director Garrett Watson is stopping by the show to discuss all of this and more. First up, I want to get into it with my co-stars Rick Newman and Ben Werschel joining me here. Hey, Rick and Ben.
Hey, Maddie. Hey, take it.
Ben, let's go to you first. What's on your note cards this week?
For sure, yeah. So this week, what interested me about those two topics you mentioned, Doge and tariffs, was the kind of revenue side of it that was present in both. In terms of the Doge side, Trump and Musk reiterated promises this week that Doge will cut $1 trillion annually. It will cut the federal deficit in half. And then on tariffs, the word Trump used yesterday in terms of the revenue coming in there was staggering. He wouldn't quite say $1 trillion, he was asked, but he said it was going to be a staggering amount. It's very much TBD how much it actually raises. There's a lot of fact checking we could do there. But what it interested me about that was that there was a third headline you didn't mention today that essentially sort of points to the fact that this money, whatever it is already been spent to a certain extent by lawmakers on Capitol Hill who are looking at taxes and sort of averting what could be an effective tax hike at the end of the year. I won't bore you guys with kind of House budget reconciliation instructions process this week, but the headline from that this week is that Republicans are setting aside at least $4.5 trillion over the coming decade for the tax cuts, and others say it should be even higher. The good budget watchdogs at the Committee for Responsible Federal Budget say that could lead to $4 trillion in additional debt when you take in sort of the pay-fors that are in there, even though that there's a big gap there. And the emerging GOP case here is that Doge will pay for it, tariffs will make up that gap, regulation cuts will lead to economic growth that will do that gap. But it's why for my note card, at least this week, I didn't do any of those three. What I did was the national debt, because we can talk through what we know about the news this week, but what we do know for certain is that the national debt, the $36 trillion national debt, isn't moving at all. It's sort of scheduled to go upwards depending on how everything shakes out this week, and that is clearly not in the crosshairs, no matter how much Elon Musk is able to do or how high tariffs are able to go.
Hey guys, that all sounds pretty important, but why are we not talking more about straws? I mean, this is really the big news of the week. I think that everybody wants to know about the presidential order on plastic straws. So in case anybody might have missed this, this order Trump signed this week requires the development of a national strategy to end the use of paper straws within 45 days. I mean, I got these from New York. These are socialist New York paper straws and I won't have to deal
But
with
Rick,
these
can you
fears.
even imagine a more important policy for the swaths of Americans worried about inflation?
Forget about the national debt and these tariffs. I mean, come on, we need better straws. Okay, so I was very excited when Trump signed the straw order, but let's go back to the geeky stuff that's on Ben's note card. I think when everybody's hearing about Doge is looking at this agency, Doge is looking at the next agency, I mean, there is sort of a through line here. There is kind of a strategy, and the strategy is to go agency by agency and find pennies under the cushion, if you will, that Trump can use to finance these tax cuts that are coming at the end of the year. So Ben is following all the weedy stuff about the reconciliation process in the Senate and stuff like that, and he's doing good updates on that. But what's really going on here is they're trying to find some money, enough money to offset $4 trillion, and it could be a lot more than $4 trillion. We can talk about that later if you want.
Could be 11.
But that is really the big story in DC these days.
Well, I think what's really interesting, too, is that all of this policy this week comes during a critical week for markets. And that is a key economic data point we got this week, CPI, Consumer Price Index, coming in hotter than expected. What that means in human terms is that inflation is running a little hotter than the Federal Reserve wants. Inflation is a little bit stickier than expected. We have a really interesting note from Bank of America's Michael Hartnett this morning saying that the pricing pressure, it might be a blessing in disguise because it could put a lid on Trump's ability to have tariffs go too far, that maybe Trump will have to keep tariffs in check because we already have record-breaking inflation that the Fed has not been able to tamper down to its 2% target. And does that mean that Trump has sort of a check on his ability to go as far as he may want on tariffs? I'm interested in what you guys think about that, because from a market perspective, stocks are rallying off the back of this idea that we still have time to negotiate on tariffs and that Trump may be sort of caught on the back foot when it comes to his ability to go as far as he may want on tariffs. But Ben, when you talk to sources within the administration, I mean, I don't know that that is necessarily true. The market might be missing something.
Yeah, well, I think the bottom line with tariffs here, and this is the sense you get from folks here in Washington and the administration, is that Trump is trying to promise all things on tariffs. He wants it to be a big revenue raiser. He wants it to be a way to lower trade barriers and do this. He wants it to be all these different things. He even had a tweet this week that somehow tariffs were going to lower interest rates. So there is a sort of clearly he has a plan that he's laid out that isn't going to happen in its full form. And the question is essentially what version of that comes through. Does he have to go all the way forward for the kind of revenue reasons he's talking about? Does he scale it back because of these inflation and market reasons you're talking about? How does that all come together? What I think the sort of takeaway for markets to be is that these sort of ideas of 25% steel and aluminum tariffs, reciprocal duties on the whole world, 25% duties on Canada and Mexico, and the 10% duties on China that are already in place, not all of that can happen. And the question is sort of how is it pared down and sort of how does it balance all these competing things he's trying to do?
Something's going to have to give here, guys. Trump's tariffs, I mean, they are a tax on top of the regular cost of these products. I mean, they just push prices up, and they push costs up and prices up. You can't argue with what a tariff is. You can argue about the dynamic effects, who ends up paying the cost, but they are inflationary. And Trump is not going to get everything he wants, to put it in Ben's terms. So he said something earlier this week and he has been saying since he took office, I demand lower rates. Lower interest rates. The president doesn't get to demand lower interest rates, and higher interest rates actually go with higher inflation. So Trump is not going to get lower interest rates. He's going to get higher interest rates. He's not going to get lower inflation. He's going to get higher inflation. And meanwhile, I contend that the main message voters sent in the 2024 election is we want President Trump to get prices down, not to push prices up through tariffs or renegotiate the entire global trading system. People basically said, I want lower prices. And we actually have prices ticking up a little bit. We have this situation with eggs and the avian flu. I mean, egg inflation is up more than 50% year over year. And last time I looked at my store, eggs were $11 a dozen, and if you could get them. So Trump has had almost nothing to say about this. Luckily for Trump, eggs are not gasoline. If it was gasoline that was up 50% year over year, it would be a national crisis, and Trump's approval rating would be in the low 40s or lower. But people don't depend on eggs as much as they depend on gasoline. But Trump needs to start paying attention to this stuff.
Rick, do you think tariffs can be the new gasoline, as you put it? You had a really interesting survey of Yahoo Finance folks this week about how people view tariffs, and they're pretty clear about the tariffs can increase. Do you think that there's a moment coming where people are going to see tariffs as Trump not just not dealing with lowering prices, but actually actively raising them?
This is the whole game that Wall Street is playing. So Wall Street has been discounting Trump's tariffs plans from before he took office. And the gamble, which is still why you are still seeing stocks are pretty buoyant, is that Trump is threatening all this stuff, but he's not actually going to do most of it. This is just a means to an end, and the end is some other kind of outcome. So, I mean, Trump is really playing a game of chicken here. I mean, he is threatening to push prices up, and he has already imposed some tariffs, which are going to put some prices up. And the game he's playing so far is, will people notice? So the tariffs he's put in so far, just to remind everybody, 10% on everything from China. That's not huge, but it's not nothing either. And
it's not nothing, yeah.
20% on steel and aluminum, and that is going to show up in higher costs for automobiles, higher costs for food that comes in aluminum cans. So I think Trump is betting that people are not going to see this on store shelves. But if he goes all the way, people are going to see it on store shelves. So we all wait to see what does the chess master really have in mind here.
Yeah, and it's interesting. I spoke with a source this week who broke it down really well. She was talking about how something like aluminum tariffs, a tariff on a specific part of a product could increase prices for consumers in her calculations by about 0.1%. But those tariffs that you're talking about on finished products, something like a 25% tariffs on everything imported from a certain country, that could increase prices by 1.5%. So just a very significant difference when you're thinking about and calculating the impact of the different tariffs coming out of the administration. And lastly, I'll just quickly mention I did a story this week on the impact on a can of beer, specifically beer that's imported from Mexico.
Not beer. I'm dying here.
I know. Rick, I'm going to send you the story. You're going to watch it and you're going to give me great feedback. I know. It's hard to calculate, obviously, but it's something that these companies like a Constellation Brands are really going to have to contend with, because some of these brands that have been importing beer from Mexico are some of the best performers, the only growers in the alcohol category that's really been under pressure. So are they going to pass those costs on to consumers and risk losing their spot as the superior beer brands in the United States in a struggling sector right now? Or will they just eat those costs? And that is the big question. Of course, as you mentioned, Rick, Wall Street certainly discounting the idea of those costs getting passed on to consumers and any inflationary impact of those. And instead, as always, the street just passing on and looking through the optimistic lens of things. But we are going to have to take a quick break here on capital gains, but we will be right back with Garrett Watson. We're going to talk tax policy and more capital gains right after this.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Warrior Money, the show devoted to supporting our brother and sister veterans in business. I'm Patrick Murphy.
And I'm Dan Coons.
Our guests today are the minds behind the loan readiness platform, Parlay. Please welcome Parlay CEO Alex McLeod and COO Jay Long. Welcome to Warrior Money.
Thanks for having us. We appreciate it.
All right, bottom line up front. I'm going to the boss herself. What do small business loan borrowers need to know, Alex?
They need to know that the current process where if you're a small business and you're applying for a loan, you do all that work only to get a no at the end is not the only way. We created our company because we believe that small businesses need more help in the process. Right now, it feels like a pop quiz where you didn't get the answers ahead of time and you didn't get the study materials. And we know that we can do better as a country to help small businesses get to that yes.
Yeah. Well, listen, we're going to dive in to Parlay. We love the origin story of you as a couple and business owners and your three-term tech founder, Alex. Give us the story, the origin story of Parlay.
Yeah, it's very oriented to military service. So Joe served in the military. My background was in helping refugees, and together a couple years ago with the Afghanistan evacuation, a lot of folks came from Afghanistan, were evacuated to the US, and a whole community in the veteran community stood up to help them. As part of those people who stood up, the PenFed Foundation helped bring across a group of incredible women, the Afghan female tactical platoon leaders, and helped them integrate into the US, think about their next jobs, their next steps, and a large number of them wanted to start their own businesses. And so the foundation asked us if we could help, and we sat down and we helped these women. And by doing this work, we realized how hard it is for them to get access to capital. You come to the US, you don't have a background or a credit score even, and suddenly you're trying to apply for a loan. As a new business owner, it is so difficult. And so we said, we cannot let this stand. We need to make it easier for small businesses. We need to help them. And that's how we ended up founding Parlay. And we now partner with credit unions and banks across the country to do that and help more small businesses.
Yeah, speaking of entering, the problem that you saw that you wanted to solve, which was difficulty to access of capital, it's very difficult to start a fintech startup, especially during a recession, especially during COVID, especially with the big brands that you're either competing with or having to work with. And trust, as we know, is a huge component to that. So I'd really love to hear a little bit more about your partnership with MasterCard and how that evolved.
I'll start, and
then
Jay, please adds. A lot of what we do is we're trying to create better connectivity between banks and credit unions who issue loans to small businesses and small businesses that are seeking capital from those financial institutions. And MasterCard is an incredible organization in that they have a huge mission in the small business space. They want to help create that access to capital that we care about. They have a lot of data capabilities where they can help make that translation between a loan request and a loan getting approved much easier. And so we were proud to be part of their latest cohort, the Start Path program, where we got to lean in with MasterCard and identify how we can collaborate to get some of MasterCard's capabilities into our system and help distribute our platform through MasterCard out to the banks and the credit unions that need the infrastructure and the software that we have and the data that MasterCard has.
Yeah, and I guess to build off that, I think we're, again, incredibly grateful of them and several other partners. What's interesting about the small business lending space is oftentimes the challenge is transparency, confidence, and understanding. So there's a lot of really helpful data out there that can inform decision-making and help both lenders and small business owners get to yes on capital access. Yes. The problem oftentimes is orchestrating that data and making sure that it's at the point of need for both sides of that marketplace at the right time to guide effective decision-making. So I think we've been humbled by how many people want to help tackle parts of this problem, and creating a platform that enables that intelligence to come together at point of decision is a big point of pride.
I look at it, it's like when you look at history, after World War II, half the American veterans started their own small companies, started iconic global brands like Nike, Walmart, Comcast, right? Our generation of Iraq, Afghanistan veterans, I know you served, it's less than 5%. And I do think access to capital is a big deal.
Yeah.
Was there anyone, whether it was PenFed or MasterCard, that really helped guide you through to really initiate this?
Yeah, I'd love to thank the tons of veteran-based organizations that have been partners and the investors and the community of practice itself. I think what has been humbling for us is how many resources are out there. It's a function of just reaching your hand out. So Warrior Rising is a nonprofit, does a lot to help the early stage journey into entrepreneurship. Some of our investors, Hivers and Strivers with Doug Doan, has focused on empowering veteran-owned
Great
businesses.
West Point graduate.
Yeah, absolutely.
Yes.
Building off of that, there's a huge coalition of investors and angels that are trying to help veterans move forward. And I think something we are proud to see is how much there's not really distinguishment between veteran or military spouse. Like once you're part of the community, the goal of all of us is to move forward together. And so there's a sea of goodwill and a ton of people looking to be helpful. And they've been critical to our journey, and they remain constant partners and collaborators.
Yeah, I want to double down on that because this year, 2013 West Point graduate, I was on the board when you were there. Alex, you went to Cambridge and then got your master's at University of Buffalo, but you're a military spouse. And how was it in your experience being a military spouse and a founder of a company? How did our Army, how did DOD treat you?
Amazing, in one word. You can tell I'm not from the US. I'm originally from England, and when we initially started the business, and by the way, even before we started the business, Jay's community has always embraced me. But they stepped up even more when we started the business. And there's never been any distinction in how I'm treated in comparison to Jay. He mentioned some of the incredible organizations. From the second we decided to start the business, we were surrounded by a community of people who have been there for us, who have taken late night calls, who have said, I know it's hard, keep going, I've got you, we'll be your first check-in. Our first check into the business was a veteran. A majority of our investors have focused on backing veterans. I think there's a recognition that military spouses similarly have tremendous grit and intensity and commitment, and it's just been amazing for us.
There's a lot of conversation out there about about your business and the world that you're working in, the interaction between artificial intelligence, cybersecurity, data, and I imagine being a new entrant into this space, having to integrate into massive enterprise organizations, there's a lot of issues. And we know we've got a slew of earnings that are coming up, including Palantir's that just happened and Palo Alto coming up. Can you talk a little bit about your posture on artificial intelligence and enterprise integration, just so everybody here has kind of a firm handle on what that all means and how you think about it?
Yeah, I can definitely get started. So when you think about AI-based technologies, it's very easy to spend a lot of attention thinking about the models, but underlying those models are data sets. The reason that's relevant is a lot of small business lending practices is often captured as dark data. So if I'm filling out a paperwork-based application form or I'm doing partial applications online, if you're not aggregating the insights and helping people move forward, not only are they not getting lending, but they're also not creating the foundations you need from a data strategy perspective to learn. So a big part of our work is making sure that from the moment someone starts the journey towards getting a small business loan, we're capturing the data so you can build more inclusive models. If you're only focusing on those who have already gotten loans, you might be unintentionally amplifying bias within the data set, which means that instead of enabling efficiency, you can be much more effective at isolating other groups. And so I think we believe the right data strategy underpinning the right AI implementations unlocks a ton of incredible value.
I love all that, and I would add a couple things. AI is very hot right now. I think especially in the banking space, which is where we spend our time, there is a recognition from financial institutions that AI can generate efficiencies they've never, ever imagined were possible.
And underwriting process.
Underwriting is
right.
a great example of that, right? So just to give an example of Parlay, in our system now, lenders can analyze a loan inquiry in less than 10 seconds. And it uses real-time data. It uses their own parameters. It uses, the bank or the credit union's requirements to say, okay, this is great. And so I think efficiency is at an all-time high and excitement is at an all-time high. But Jay's point is true. Just because you can scale something and make it faster and more efficient could potentially mean that you exclude more people at the end of the day. So you have to be careful about how you use those algorithms, how you build them, how you process before and after the model makes decisions or recommendations. And part of our criteria and our mission is to say, okay, we do want to make this more efficient for the lenders. And we want to make sure the small business gets more transparency and more insight too. It can't be this one-sided way. And if we create the data sets that lenders can then use, we actually help shift that. And if we generate educational materials for the small business as part of that process, we can increase how many of those small businesses get to a yes.
And the other thing I'd love to add to that, and this goes to your earlier comment about the boom of businesses in previous generations, as you make this process more transparent and efficient and scalable, you open up the aperture for the types of small businesses that you can support. And so by expanding into what is traditionally described as a small dollar loan space, where a lot of businesses are going to get started, you lay the foundations for capital access that are really critical to this chapter in American history.
Yeah.
As you're looking at the defense industrial base, the American manufacturing base, a lot of reshoring and nearshoring, while venture capital is going to be part of that conversation, arguably a much bigger part of that is going to be debt-based financing.
Yes.
So the capacity to get small business loans out at scale is a critical prerequisite for a lot of the technologies we're talking about. Like manufacturing requires factories and investment that are most amenable to this type of capital. So we think for our generation and the vets that are thinking about getting in the arena, there's going to be $1 trillion of opportunity that comes as a natural extension of this focus on rebuilding in the United States.
But to be able to do that, to deliver on this economic competitiveness mandate that we're talking about, we need to make that access easier, right? So 93% of small business loan requests are under $1 million. Most of what we're talking about on the NDAA side, on the access to capital side for defense industrial base is for much higher dollar loan sizes. And so there's still that big gap, right? And so this is where technology, and this is the cyber piece, wrapped into a bow here. We have to make it easier for small businesses to be able to access capital. To do that, it has to be more affordable for lenders to be able to assess the eligibility of small businesses. And it has to be risk adjusted. So the parameters and the cybersecurity components have got to be lock tight.
Yeah, that number of 93%, less than $1 million, and then trying to get them to help survive that valley of death, that can't do it. So listen, lots to talk about. We're going to be right back with the founders of Parlay in just a minute.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
All right, welcome back to Warrior Money. We're joined by Parlay Finance's Alex McLeod and Jay Long. Guys, thanks so much for joining us. And it's Valentine's Day, and you are a power couple, the founders of Parlay. Let's get back into some of the struggles, frankly. When you talk about Parlay making it easier for banks to lend, what are some of the regulatory challenges that you have to deal with, cybersecurity challenges you have to deal with, as a young startup?
Yeah. The problem that we picked to solve, capital access, is a wicked problem. So it has about 100 problems wrapped into it. And the organizations that we serve to solve that problem, which is banks and credit unions, are highly regulated entities. And so although we are not a bank and we don't lend money, we're the software that facilitates that process, we have to behave as if we are regulated because our customers are. And so we have very much built with the challenges that they face in mind. They have regulatory requirements they have to adhere to in how they interact with small businesses. They have to safeguard data in ways that, requires very intensive approaches to it. And our co-founder, shouts out, also a West Point grad, is a cybersecurity and product specialist who has been building previously to Parlay on behalf of the Software Factory for the US Army. So he brings that level of rigor and diligence and care to the build process.
There's two parts of that I want to unpack, just because I feel like we've got to shout out that U.S. Army comment.
Yes.
We talk about this unstored capital, human capital that we have stored in our United States military, like the amount of skills and talent that we have there and how we apply those to civil problems. And Jay, I know you've got a strong opinion about that, and I've got a very strong opinion about it from the human capital background. But I'd love to hear a little bit more about how you use your military experience, how your team has captured their military experience, and why that's been so valuable to everybody.
Yeah, I'd love to start by saying to Alex's point, shout out to the team that made this possible. Between the investors and our early teammates, they were willing to get on board. And I think what we learned is that military founding teams are incredibly gritty and disciplined. And a big part of the initial challenge that is building a company is just withstanding the journey. So the grit that you get is incredibly helpful.
Just gotta keep going.
Yeah, you gotta learn too. But
learn and go.
The cool thing for us is you're a founding team that is disciplined and really gritty, and there were gaps in knowledge. So I just departed military service and immediately went into this. What's fascinating to us is how much even banking knowledge gaps could be plugged by veterans. So we have advisory board members and teammates that are actually veterans who have spent decades in the banking and financial sector. And so you look at marketing. There's certain skill sets vets are going to have when they start businesses, incredibly strong. Operations is an example, building teams is an example. They may have less comparative experience with enterprise sales or marketing or corporate finance. But again and again, we found partners like Bruce Cleveland, who's our CMO equivalent as an advisor member, who's plugged those gaps and done so in a way that allowed a military team to row really hard and really well together. So I think it's been fascinating to see how much potential, to your earlier point, how much capacity is within this community. And it's a function of consistently accessing it and leveraging it. But Alex, what are your thoughts?
No, I couldn't agree more. Our entire founding team, I'll include myself as a military spouse, but Jay and James are both West Point vets, West Point grads, and we've got an incredible team of people with, skills. A former targeter on our team who we use for business intelligence. She is incredible. Trish, shout out to her. She brings those skills from her former targeting work to understanding who is our customer profile that we should be pursuing, where and which conferences they'll be attending. And so she brings these superpowers to the table that you wouldn't see off the bat. You wouldn't think, but then it's an incredible fit for us as we keep building.
And I think that's the beautiful thing about you're telling these stories, and it's like how you've grown this business. And I think for the folks out there, who are maybe transitioning out, and there's about 200,000 active service members that transition out every year, but how could they get started? But it is really, Dan and I talk about this all the time, your network is your net worth.
Yes.
So when you say, hey, PenFed and Jamie, the CEO, who happens to be a West Point graduate, we talk about with MasterCard, I know the CISO is a West Point graduate, right? Now, him and I are not West Point graduates. I happen to teach there and serve on the board there, but when I was looking at the Parlay website, I saw Sarah Starr. I'm like, oh my God, I haven't talked about Sarah Starr. She's one of your advisors. She was my student at the University of Chicago 10 years ago, right?
That's
It's just a small world, but if you work it, whether you're going into, frankly, bank tech or whatever the case is, whatever industry, you got to work your network. You have to be deliberate about it and using LinkedIn and other things as a force multiplier.
Yes. Can I?
Yes.
Yeah. I could not agree more. And again, I'm more of an outsider in this community than not. And when I came in, I watched Jay send out the bat signal to his community and say, we're doing this. we need help. And I mean, credit to Jay and also this community. They were like, what are you doing? We're going to help you. Let's go. And it has been, we are the limitation.
I'm almost surprised you even got the what are we doing?
Yeah,
sure, let's do it.
literally, but unquestionably, I've got your back. It's been the takeaway. You know, Warrior Rising is an organization Jay mentioned in the beginning. You know, Jason Van Camp, incredible entrepreneur and service member. Ben Bunn, similarly. We collaborate with them to help up-and-coming entrepreneurs start preparing for access to capital. And so what I would say to folks thinking about transitioning and wondering whether entrepreneurship is for them, the answer is yes. Now let's get you plugged in to the right organizations. Let's get you connected to the right people. Let's get you on the path. Just like you train in the gym to get strong, physically, there's training and there's resources to become strong as an entrepreneur.
We had Liz O'Brien on here talking about military spouses from Hiring Our Heroes, and I just want to correct you. We don't see military spouses as being separate from the military community for the first place. But I am very interested in what has been your perspective of being a military spouse, independent of being an entrepreneur. Like, what have been the challenge that you faced? What are the opportunities that you see, and what would be some of the advice you'd give folks?
Yeah, it's a great question. I actually see a lot of military spouse entrepreneurs through programs like Warrior Rising, through the Chamber of Commerce's that have a veteran focus and a military spouse focus. I would say that sometimes I observe that veterans are more trained with discomfort. And it doesn't mean that our tolerance for discomfort is lower. It just means that we sometimes have less reps. And so what I get to benefit from by being a co-founder with Jay is I get to see the practice that he does every day of getting uncomfortable, asking for help, being vulnerable, saying, okay, I need this thing and I have no idea how to solve it.
So true.
Can someone help me? And then finding in the network who can, so that comfort with leaning in when he doesn't know is something that I get to benefit from. And I think military spouses, we have it. I don't want to generalize at all. So I find that I get to benefit from your comfort with that discomfort every single day as we build.
Yeah, I think to build off your point, if we were talking to that, just think about transitioning, or maybe a military spouse, just think about getting in there. There are some assets that are compounding over time. You mentioned network. That's definitely one of them.
Yes.
I also think it's really important to talk about the mental game of starting a business. Like, I think we've been humbled by how much you have to withstand discomfort, and those are trained skills. So if you're thinking about making the transition, building a network is important. I think laying the foundations financially to being able to do this. If you're going to launch a business that might need a loan, your credit score is going to matter a lot. So you want to look at that early, but also just gaining confidence in your ability to do this. And I think a big part of confidence is understanding how to tackle the problem. And I think there's a lot of value in using the time to find mentors that can help you understand what is the next ridgeline and the ridgeline after that, and how do I shave down my learning time, and in so doing become much more effective. And as you deliver, you're able to become more confident.
We spend a lot of time with entrepreneurs, and we spend a lot of time in this business community. And one of the common things that we're talking about is everybody looks at the end destination. They look at the end mountain. They're like, I have to create the next, name the huge organization that you want to create, right?
Yeah.
But to your point, you've already said, like, the first $1 million is critical. And in the venture game, you've got to give away significant parts of your business to get any sort of access to it. So as you're scaling up, you're trying to, you have to have debt financing as part of your overall financing strategy. Can you talk just a little bit about that perspective? Because I think it's so important on the just getting started point versus the seeing the future too much of it.
Yeah, I can definitely start on Alex. I think it's really important, and I'm speaking more to like the veteran community writ large, to recognize that the capital stack is really deep. I think it's easy to bias towards massive instruments, like maybe it's a loan or maybe it's equity-based investment, but there's a lot of other tools, from lines of credit to business credit cards and other mechanisms of making sure you can grow, that need to be part of your strategy. And so I think I would encourage vets to make sure that they find a banker they can trust and have early conversations, not just about like startup capital, but once the company is growing, what is the gap between invoicing going to look like? How do I need to manage cash flow? What products or tools allow me to bridge that chasm? And how can I therefore build the right tools early so that we're going to be in a really effective place later on?
I love that. One extra thing I would say is, I think a mistake early entrepreneurs make is that, like, I need to raise money. And the question is your business the type of business where you should raise money? Or is your business the type of business where actually, over time, debt is an instrument for growth, but when you're starting out, Warrior Rising is a good example. PenFed is a good example. There are lots of competitions, grants, non-dilutive funding sources that you can pursue.
Yeah.
Take targeted bets, build forwards with those learnings incorporated.
The comment that we hear consistently is how hard cash flow management is. And there are multiple ways to finance yourself for cash flow management just to be able to run a sustainable business. And I think what you guys are trying to do help us bridge a lot of those gaps. So it makes a ton of sense to me.
And part of that trust and character, we are leaders of character, right? That's our mission statement at West Point, right? And I think it's a special thing about paying it forward to the next generation and making sure they succeed. So thank you so much, both of you, for joining us on Warrior Money. That's going to wrap it up. So thanks for joining us today. Don't forget, follow us on wherever you listen to your podcast, Apple Podcast, Spotify, wherever it is. Or find us at Yahoo Finance. I'm Patrick Murphy.
And I'm Dan Coons. We'll see you next week.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Podcast that will make you a smarter investor.
Welcome to Stocks in Translation. I'm your host, Jared Blickery. Welcome to Financial Freestyle.
Hi, I'm Bob Powell, and welcome to Decoding Retirement. Welcome to Living Not So Fabulously.
Welcome to Trader Talk, the podcast that dishes out the market straight up.
Welcome to Capital Gains. I'm your host, Madison Mills.
Welcome to Warrior Money. I'm Patrick Murphy.
And I'm Dan Coons.
From Wall Street to Main Street to the C-Suite, we are your daily lifeline, because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. U.S. stocks little changed as the S&P 500 nears a new record closing high. Shares of Alibaba seeing a pop as co-founder Jack Ma reportedly among the list of business names set to meet China's top leaders, according to Bloomberg. President Xi Jinping is expected to attend, with the meeting potentially happening as soon as next week. Turning to Palo Alto Networks, those shares sliding after an earnings miss in the second quarter. Its third quarter profit outlook also not looking appetizing as it falls short of analysts' expectations. Lastly, Meta reportedly making a significant investment into AI-powered humanoid robots, according to Bloomberg. The company aiming to form a new team with its Reality Labs hardware division for the work. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session.
Welcome to a new episode of the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is a podcast that will make you a smarter investor and a better leader. Y'all who have been following Opening Bid know I like me some sports. So we're going to lean into sports and really dive into sports and a little TV, a little media, a little bit of everything here with David Levy, co-CEO of Horizon Sports and Experiences. I should note, over 30 years at Turner.
33 years if you want to give.
It would be great to hear real time. I kind of dressed down a little bit. Maybe I should wear the suit.
The last person to spend in any company time 33 years.
What was that? What was that like? I read a story somewhere that you used to rode a subway with Ted Turner.
Yes, that's an old story. That's an old story. Yeah, Ted didn't like to get into black cars, and he liked to be down with the people. And so we were going to an agency called Chiat Day, and we had a meeting downtown, and he walked out in front of the building. Instead of going to the car, he said, "Levy, let's go down into the subway." We went down the subway, and everybody had those kind of unique faces, like, "I think I know that guy. I think I know that guy." We got into Chiat, we went upstairs, and 16 people came into the meeting going, they were making sure that Ted made it, because there was a lot of search going, where was Ted? So anyhow, that was a funny story.
What made him tick? I view him, the media has had a lot of iconic characters and leaders, but that's a special name.
Yeah, I was hired in 1987, 150th employee. Ted is a visionary. That word gets used a lot, I think too much in this industry, but he truly did things that nobody else would think about, like launching CNN, for example, when every single consulting company in the world told him not to do it.
Yeah.
Buying the Hanna-Barbera library and starting the Cartoon Network, a 24-hour, 7-day-a-week Cartoon Network.
I think about wrestling with WCW.
WCW, when challenging, WWE, and then the merger with WWE. He just consistently understood. I'll tell you the last little piece of his brain. He bought the Braves, the Atlanta Braves. I forgot the year he bought it at, but it was only $11 million to buy the Atlanta Braves. And he didn't buy it for the sports, for the team. He bought it for the 125 games, which was 350 hours of primetime programming. They didn't have to program somewhere else. So it was about the programming time for TBS more than it was about buying a team.
That's what you call a visionary, sir. So let's dabble a little bit in what you're doing now over at Horizon. We just got the viewership numbers for the Super Bowl, about 126 million up year over year.
126 million.
How do you think the streamers did for the Super Bowl? It seems like they had their moment in the sun a little bit too.
Yeah, I mean, what I read and what I saw was Tubi drove about 14 million impressions or viewers of that 126 million. And they thought they were going to do somewhere around 7 or 8. So you're starting to see what I think in this industry is a shift of consumption habits, viewing habits on platforms that people feel more comfortable with, and streaming seems to be the way to do it. I don't think my sons have turned on a television set in 5-6 years. So if no one's turning on the TV, they're finding their content in other places. It's not like they don't like the content, it's just where they're finding the content.
Why? What is so special about the streaming experience?
Well, I think people are using their phones a lot differently than they ever have, their iPads. The distribution platforms have completely changed. And people want to watch where they are and when they have the opportunity. Sometimes you're sitting at a dinner, whether I like this or not, and a text comes to you that the Knicks are tied 101-101. Do you want to watch? Click here. Well, now you can watch the last 2 minutes. There's just too much access and too much opportunities to not change your viewing habits.
And where does big TV go?
It sticks. There's always going to be room for a lot of people, including me, like to watch on big TV screens, 55-inch, 75-inch.
Oh, you got a bigger one than 55-inch.
Okay. How big is yours?
I actually have an 81.
Holy.
Yeah. Hey, look, I saved a couple bucks. I work hard. You know, why not? I just plaster my whole wall with the TV.
Yeah. I mean, I don't enjoy viewing on a phone, except when that's the only access I can get, right? If I'm in an airport or I'm somewhere else and I want to see the game or I want to see the content, you'll watch it, and you're getting more attuned and comfortable with watching on smaller devices. In the beginning, it was horrible. Now it seems to be natural.
I recently spoke to Disney's CFO, Hugh Johnston. I've known this guy for over a decade. He used to be PepsiCo's CFO. And I've asked him recently, like, what do you want to do with these TV assets? Now, he's told me we're going to hold on to them, but you look at the profits that they're putting out. I mean, it's seemingly declining every quarter. What's the end game for the likes of an ABC and these legacy media assets?
Listen, we're in certainly some changing times, so to speak. But these brands like Turner or ESPN or ABC, the media, what I would call established media companies or traditional media companies, they have to figure out how to diversify, right? The cable networks are still spilling out a tremendous amount of EBITDA. Maybe not what the EBITDA was 5 years ago, but still very, very profitable.
So they make money.
They make money, but they're public companies. And public companies that don't have a growth strategy, what happens to their stock? Their stocks decline. Doesn't mean that the asset itself isn't still producing revenue and EBITDA, and they are, and pretty sizable ones. So now what happens is, does private equity come in and sort of take it from a public perspective into a private perspective, which could happen. Ultimately, some of these cable companies could go private and still spin off a ton of cash. So that's one, what I would say, solution, opportunity, whatever. But while you're having this cash, can you also then use that and invest in other things that are growing, like streaming services? I think that's why you're seeing, HBO Max or Max come out. Sorry, not HBO anymore, just Max.
It's hard to keep track.
Peacock, Paramount Plus, Hulu, ESPN Plus. These are extensions of content that these media companies own and are figuring out ways to have a direct-to-consumer relationship.
I think we're all looking at Comcast. I mean, they've announced that they're going to want to split that company up. Do you think it's just those spun-off assets are privately owned?
Could be. I mean, that's going to be Mark Lazar's decision, how he does with SpinCo, so to speak. But one thought process is, there's not going to be, from what I read, a lot of debt put on to those assets, which normally when you spin something out, you kind of throw your debt over the boat with it. He seems to, what I've heard is that they're not going to load that up with so much debt, so that would give opportunity to invest and figure that out, buy other cable companies, figure out new types of strategies with that. I mean, I think you could go and acquire some programming and then maybe simulcast it out across all of their platforms, because he has maybe 15 to 20 cable networks. Imagine if you went out and bought and purchased something that you can now simulcast it across all of those networks at the same time. Not that those networks are all similar, but there's things that you should think through like that. So he may be aggressively going out and purchasing cable networks or programming, and or he may eventually turn around and take it private. Who knows?
Is the day over? Because you manage, I imagine, a lot of talent over at Turner through the years.
Yes.
Is the day? Yes, right. I mean, they're all. Yes, but is the day of the well-paid anchor? Is that over? And we've seen cuts across the board here, and we've continued to see them into this year.
I think you have to think about, when you say the traditional well-paid anchor, is Charles Barkley worth what he's getting? I think so. He attracts viewership, he attracts advertisers, and there are reasons why you pay people.
Stephen A. Smith?
Yeah, Stephen A. Smith.
You turn on the TV to watch him.
Right. You have some people love him, and he's polarizing, right? And so some people love him, some people hate him, but the point of the matter is he brings eyeballs to the networks. And so I don't know if it's over. Listen, there are podcasters that are making tons of money. That has nothing to do with TV.
Huge money.
Right.
Is that a bubble? I mean, what was the $125 million deal?
It's consumption habits. All of these things we're talking about today, whether you're in the podcasting business, the streaming business, the television business, every single one of them have opportunities, right? And every single one of them will pay talent where they believe it will drive revenue, whether it's advertising revenue, subscription revenue, or merchandise revenue.
Are you surprised to see Fox get involved in podcasts? They recently made an acquisition of a right-wing podcast platform, and then Netflix.
I'm not
too.
familiar with that.
Netflix now too, rumored to be have interest in podcasts.
You know, podcasting business is a extension of IP that you may own, and it's acquiring new IP that you may put into film, you may put into TV shows. I mean, some of these podcasts are ending up going to turn into different types of IP and different types of content. So I think whoever's managing those businesses have to think through all of those different aspects.
It's like our podcast, David.
It's like our podcast today.
We just crossed the 1 billion viewer mark.
Yeah, congratulations.
Not yet. We're trying to
just today. Today.
As they would say, the growth is up and to the right, David. It's up and to the right. Hang with us. We're going to go off for a quick break. We'll be right back.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
All right, welcome back to Opening Bid. Having a fun chat here on the future of media, a little sports with David Levy, co-CEO of Horizon Sports and Experiences. So talk to me about what you have been working on at Horizon.
So when we started Horizon Sports and Experiences, Chris and I, about 2 years ago actually, our vision was really very simple. We wanted to kind of create the next generation of a sports marketing agency, taking the best of what I would say brand consulting and brand sponsorships and activations, and coupling that with the ownership and creation of IP, and create our own IP. So the first one we did was the Pickleball Slam. We're now, again, this Sunday is going to be Slam 3, the Duel in the Desert.
Who's playing?
Agassi and Steffi Graf, who won Slam 2, is playing Roddick.
How can you not watch that?
I know.
That's like nostalgia factor right there.
And is playing Roddick and Jeannie Bouchard. So for $1 million purse, live on ESPN at 1 o'clock West Coast time, so 4 o'clock East, right before the All-Star game, which airs at 6. So it's a 2-hour window, $1 million purse at Mandalay Bay. Kind of special.
Why pickleball? Why is pickleball still having that moment?
You know, it's one of these growing sports that you can play easily. There's now 36 to 40 million people playing pickleball in the United States. It's unbelievable, men and women. And it's growing because people are actively playing the game itself. Now, what we did at HS&E is we said, listen, we have this huge growth sport, a recreational sport that is growing like crazy. Let's put the greatest brand names in racket sports in this. So our first one was Agassi and Chang versus Roddick and McEnroe.
Wow, feels like I'm back in my mom's living room as a kid.
And but they're great racket players, right? The best of the best, you know, Grand Slam champions. And put them in $1 million purse. One of the things that has to be in these, what I would call destination programming, appointment viewing, so to speak, you have to make sure it's authentic. So if they're not playing for anything and it's an exhibition, I don't think it works. So they're playing for $1 million purse. That means real money to their bottom line. They're playing live on ESPN, all right? Not on, you know, I'd say ESPN 7 or 8, so to speak. So has to be on a premium channel with a premium event with the marketing capabilities. We also have ticket sales. We've sold out Slam 1 and Slam 2. We have merchandise that we're selling. So it's kind of like, you know, a flywheel where we create the IP, we sell the sponsorships, we sell the activations, we sell the merchandise, and we sell the tickets.
It's almost like we're seeing a complete reinvention of what sport is. I mean, you have pickleball, of course, a sport, but I'm watching what TGL is doing over with Tiger. I found it fascinating that I've wanted to watch Tiger hit up against a digital screen, and I've been wanting to watch the whole program.
So that's a really good topic. So one of the other things that we're invested in, we invested in a new 3-on-3 women's basketball league called Unrivaled. And Unrivaled takes the best top 36 WNBA players, one specifically missing, but hopefully get her next year, Caitlin Clark. But other than Caitlin, all of them are down there and competing really, really hard. At the same time, TGL launched as well. So you have two, let's say, new leagues in the sports space. The difference, I think, is interesting. Both of those leagues, when I say the names on the back of the jerseys mean something, obviously TGL has all the great brand names, Tiger, Rory, on the back of the names of their jerseys. So, well, they don't have jerseys, but you know what I'm saying. Yeah. Great brand names. And the same thing for Unrivaled. I think the difference, and this is where I'm interested to see how the golf league happens and the success rate of it in the future, is they don't seem to be competitive. It seems to be fun. It seems to be interesting. You just said, I can't believe I'm interested to see Tiger hit the screen.
I just need to see Tiger. Like, it's strange because I'm now at the point where if Tiger's not in a golf tournament, I'm not watching. So if I can get a little taste of Tiger on my TV screen, my 81-inch TV screen, I'm going to watch.
But what happens when Tiger's not there?
Well, then I don't watch any golf anymore.
Right. Well, my point is, what happens when Tiger's not playing in that league at that particular time, that team aspect of it? So I think, and the difference in Unrivaled is it's competitive every night. They want to win. So the product on the floor is authentic, real, and people are tuning in for it. The product on the what's it called? TGL, Tour Golf League. The TGL product right now, I don't think it's that competitive. I actually think it's more like a unique situation that people are tuning in to see what it's all about. At some point, that has got to get competitive, or I don't think it's sustainable. Where I think Unrivaled, because it's so competitive and the product is so good, it's going to be long-term and success.
Why are these new, I mean, they're not new sports, they're different takes on sports. Why do you think that they're being created? Is it attention span by the next generation of viewers is short. They don't want to sit and watch 18 holes of golf. So just give them the best of golf or basketball in that 30-minute time frame or however long it takes.
Consumer habits are certainly changing, but I think it's got to be quality and authentic. It just can't be made up and just for the sense of making it up. I do believe sports in general is the last destination programming on television, appointment viewing. You have a built-in fan base, meaning, if you love football or you're in fantasy football or you like the Giants or you like the Jets, you're going to tune in, right? It's a built-in audience. When you develop a scripted product for television, right, and it costs $5 to $10 million per episode, you have no idea whether it's going to be successful or not. Almost zero. Matter of fact, I would tell you that probably 95% of all scripted programming is a failure after season one. 95.
Wow.
Right? So when you go into the sports, and you say, listen, should I buy the NBA? Should I not buy the NBA? Should I buy golf or not golf? You have a built-in fan base. You know that ultimately the Super Bowl, which we just went through, is it going to do a 55 rating or is it going to do a 50 rating, right? But it's not going to do a 10 rating.
Yeah. Isn't it great you don't have to worry about these things really anymore?
Yes. Well, I do. I wish I didn't have to worry, but now, we're investing in our own, IP. So I'm hoping that the Pickleball Slam does really well. I'm hoping that the Shark Beauty Women's Champions Classic that we did last December on Fox Primetime, we're hoping that does well. Both of them have been successful because my background kind of understands the Rubik's Cube of where these events need to show up, the time period they need to show up. It's not unusual or didn't come out of thin air that the Pickleball Slam is from 4 to 6 on ESPN, and then at 6 o'clock on TNT is the NBA All-Star Game, right? I didn't want to put it at 6 o'clock because it wouldn't be successful. So you have to find these little time periods that work.
I want to leave enough time on this one.
Yep.
I'm sure you've seen Netflix's push into live sports.
Yeah.
What do you think of that? And at the end of the day, is Netflix and Amazon, are they the ones that are just going to have all these sports assets? Because I can't see how legacy media, with the balance sheets that they have today and where they're likely to go, they could support the costs of putting this programming on.
Okay, those are like 4 different questions in one.
I used to be an analyst. I'm like dumping all these things. My time period is short.
A lot of 4 questions. So first, let me say, let's talk about the streaming services in sports. These streaming services were built when I was back at Turner and didn't even have a streaming service at that. Well, we had HBO, but not what I would call the streaming services that are today. That was more of a premium channel on the cable business. But the streaming services were built on the backs of content libraries, right? Then they moved into original programming, which was really smart. And they built incredible subscriber bases. But they were doing the same thing, right? Original content, libraries, original content, libraries. And eventually what happened was they were starting to have big churn on, because it's very easy to cancel your streaming service than it is your cable, right? You could you push a button on streaming, you're out. You can watch Yellowstone and then click out. I can watch this and come in and come out, right? So the churn started to happen far greater than it used to. And so in order to stop churn, you have to provide different types of programming, right? And so now sports is starting to fill and eliminate the churn rate. So if let's use Amazon, for example. They had Thursday Night Football, right? So that was 18-week schedule.